Good morning. Good morning. Good morning, everyone. I'm your host, Cousin Betty, coming to you from theclosingprint.com. It is Friday, 3-day weekend ahead. We'll be off on Monday. Futures are down near 57.71. We're off 85 handles. So we slipped a little more from the open earlier. We were down 30 handles earlier.
So this is his way of tweeting or posting time to sell.
Okay, so Trump threatening tariffs on Apple. Remember, Brent has been talking about liquidity holes in the gamma structure. So these quick moves, not surprising.
Do you believe, as some have suggested today, that his so-called pain threshold is 53, 5,400?
No, I think it's 5,000.
5,000.
Yeah, 5,000 for retrade there.
So just north of the lows.
Okay.
North of the
Let's try to keep the room vacant of politics if we can. Just information as far as why the markets are lower. That's fine.
And the universal chairman of the board.
That's fine. Oklo was up last night, faded a little bit on news that Trump administration is going to be more active in the nuclear SMRs, small modular reactors. No major data today.
No, he's the president. Got it. He's chairman of the board and president. And he's actually the CEO of Harvard. They have a guy called Alan Barber. He's nominally the president. The guy running Harvard, same guy running Columbia, by the way. It's a lady who runs Columbia. No, that's clear shipment.
S&P levels today, 5,900 up top and 57.75. We're down there at the open. All right. So we have 12 minutes left to go. 12 minutes left to go for the opening bell. You can see support down here where it turns a little more purple. Resistance overhead where it's a bit more red. 5,900, 57.75. We did have a nice rally yesterday. Taking profits off into strength, as I was mentioning all during the day. I want to make sure that I'm taking off short-term options in particular. Long-term, the market's looking for higher highs and higher lows. We were expecting a consolidation this week. We're still in consolidation mode. All right, we're still in consolidation mode in this green box. Okay, 57.75. We're going to be close to the 50-day. 50 days. 200 days at 57.70. Okay, testing the 200-day.
A step like this where you sort of threaten to walk away, which is what Trump is doing out there. We've been hearing reports that Europe has been sort of slow stepping the negotiation process, expecting to get a better deal down the road. So this was perfectly predictable. No one could have predicted exactly what day was going to happen, but that something like this was going to happen is perfectly predictable. But I think overall, the trend of the tariff war and the trade war becoming less of a concern for markets, I think that trend is still intact.
There's also this feeling that each headline is not as dramatic anymore. People are getting used to,
All right. So to be clear, longer term positions like SPMO, I'm looking to buy dips. Okay. After a 23% gain from the low on April 7th up to the recent highs, You should expect, and we have expected consolidation and for prices to back off a bit. I was hoping that it would be more of a sideways pattern. It's still pretty good for the most part. We are testing the 200-day now. So as we test the 200-day moving average, you know, that's the dark red line. Okay, so that's just right there where we are going to open. Looking for a bounce. I would like to buy maybe some 0 days. We'll see. I'll be looking for a flow to dictate decisions today again. The alpha related hero hedging flows I'm looking for specifically. So longer term, I'm not that concerned. Okay, longer term, most of the ideas about tariffs are becoming less and less concerning. The market's probably figured in a lot of that. So positions like SPMO, SPXL, I'm just looking to buy on dips in my 401k and IRAs. So keep an eye on these. The Qs will be off this morning. Okay, Qs are lower. All right, Qs. Okay. So you can see where we are pre-market, that orange box over there on the right. If you know how to read a trading view chart, that's the pre-market right there, down a little bit lower. The 200-day is a bit lower. Okay, we got 8 minutes to go, 8 minutes to go.
Piece of this, they've talked less about it because we don't really know when they would come to a period where they're monetizing that, right? Elon has shown some interesting things on X that are kind of a lot of fun, and they served drinks at the event last year. But are they going to be getting to a point soon where that's a revenue and profitable part of their business? But look, it's all part of Elon's push that this is a technology company. It's not just a car company. And whether or not you think the stock's going to go to $500, like Dan Ives is saying, is whether or not you believe that argument. And I think that's the battleground on Tesla shares at the moment.
Hey, David, thank you so much.
Okay, UNH trading 296, so still consolidating down here near 300. Watch for any kind of buying there. Energy stocks, watching those. Constellation Energy, seeing a little bit of flow this morning. Constellation, gapping up. Okay, let's see what alerts we have this morning. GameStop. Okay, GameStop. Okay, GameStop, GME, GameStop. Okay, pre-market pulling back a little bit.
It's up the most, and that actually deserved it because almost every division was firing all cylinders, but really small business doing well in the consumer.
A lot of positions are testing their put walls this morning. Okay, all the New York fangs are lower, so we're going to have a warm opening, depending on how you look at it. We're much lower, a lot of red on the screen. My tendency is to want to buy the dip maybe for next Friday, but I don't know if that's a good bet. Yesterday, and most of this week we've been taking profits off when we could. Monday and Thursday were really good days. Tuesday was flat. Wednesday, of course, we had that 1.5% pullback. So I'm going to watch the open here and see if we get any kind of opportunity. It looks like an opportunity. Okay, we got 4 minutes to go. Finishing up with Gamma this morning. They had some issues with login, so that's why it's late. He noted that the straddle felt cheap yesterday, and the S&P rallied 65 to intraday highs, and then we faded towards the end of the day, right? Unchanged on the day after dropping 35 points in the last few minutes. Okay. Call skews are cooling off. All right, so call skews are a lot of these stocks are cooling off a bit. These are cheap. The ones on the left, these are all cheap. Okay, so IV is cheap on these, cheap volatility, upside potential. Apple down a bit today. I wouldn't just buy indiscriminately. I'd wait for bounces. Let's see what sectors are in play this morning. Okay. We're focused on NVIDIA earnings next week on Wednesday. Let's see. NVIDIA starting to bounce pre-market. Okay, we're just about, or not too far away from the 200-day moving average. Tesla pulling back a little bit more. Tesla looked pretty promising yesterday. There was a couple of good trades on Tesla. If you guys took it, watching Microsoft, that was pretty active. So I want to see if the momentum traders are back on Microsoft. Okay, CoreWeave up here in the expensive IV category. All right, I took the put credit spread off yesterday. It was a nice profit, made about 50%. Okay, we got 2 minutes to go. 2 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 23rd. We have a 3-day weekend ahead. Got 2 minutes to go. I would maybe count to 10 after the open. Looks like we're going to rally here, so maybe I'm going to set up a trade on SPY 0 day. Okay, I'm going to go. Let's see, what was the... Okay, the high this morning was 58.42. I'm going to take half of that. I'm going to go to 58. That's futures. I'm going to go halfway back. Let's see, SPY. All right, I'm going to set up a trade for halfway back into this area. Probably lower first. Okay, so maybe 580. 580. All right, let me set up 580. 580. Okay, I'm going to do a vertical. Oops. Maybe I'll just do straight calls. No, I'll do a vertical. I'll do a vertical just to keep it less expensive. Okay, vertical. I'll go 10 wide on this one. 10 wide or 5 wide. 5 wide, okay? Okay, let's see what this goes for. All right, we're about to open. Let's get ready for the opening bell. Starting to bounce.
Earlier this morning, Jim, talking about the EU tariff threat. He did say 50's a lot different than 10.
Okay, we're about to open. And we're open. Okay, trying to get in the 580s. Trying to get into the 580s.
Low ticker -800. Extreme low ticker.
At least for now. But when you're switching and pivoting to say India and it's not liked, it has to come from the United States, and Goolsby's just dead right.
All right, trying to get in the 580s. Okay, toss is very slow this morning. Okay. Okay, I just got into 580s for now. Okay, so puts, I had some puts too. All right, let's go.
I will say, you're absolutely right, and I think I sat there every morning. I especially remember because it was when you and I were 30 feet away at Engwood Cliffs during that 9-month period. And because I was further away from you. That's not true. I like you the same all the time. But you tried to get people from getting hurt. That's it. There was a bit of an opportunity.
Okay, I have puts. As you recall, I did take an iron condor, so the puts are filling right now. Okay, how many? I got some more puts here. Okay, I'm out of that. Okay, puts here. Ooh, that's up a lot. That's up a lot. Holy smokes. That's a nice trade there. Puts. All right.
Tend not to want to talk about it. If I can warn people that they don't need to go buy that because you see Nvidia's on sale, I think I've done my job. And my job, and as I, 20 years have made money, what my job, some of it is like first do no harm for people who are watching. And you don't need to participate in these when you've got unbelievable stocks that are down huge. Why do you need to be in a SPAC? I mean, what a great opportunity to go buy, I don't necessarily want to buy Workday. The quarter wasn't nearly as bad as people say.
Okay. So here we are. The iron condor worked out really well, helping to soften this pullback.
Disney's up really, really big. But you know what? Disney deserves it because the numbers were better. That's a better trade than my investment.
Okay, nice bounce now. Got the 580s. Have 580s now. Have 580 calls now. All right, moving the other direction. All right, shake the tree. Okay, all the New York Fangs are turning. New York Fangs all show short covering. Okay, Palantir short covering. Okay, nice reversal. Okay, the 580 is doing well. Thank you very much. I still have some 590s left from that iron condor. Okay, that would be that'd be cool if we got all the way back up there, right? Okay, so Palantir ripping like it does lately. It did that yesterday, but still faded. Netflix, big move on Netflix. Okay, let me see what else is working here. All I have is calls left, right? Yeah, calls. Okay. Big P&L on that iron condor. Wow.
Taylor Swift. I mean, it's not going to happen. Can't lose the Taylors. Don't lose the Taylors. Okay, now here's something weird. I'm looking at what's up. McDonald's, okay? So how's McDonald's intersect with the tariffs? Could the Europeans say, listen, we're going to put a tax on the hamburger? No.
Okay. Nice rally off the low. Okay, so cool. Cool. Nice reversal here. Bulls taking the opportunity. All right. Oklo. All right, Oklo fading a little bit. Netflix, nice move on Netflix. Snowflake. Okay, Snowflake. I have an iron condor on that one. Let me take a look at Snowflake. Snowflake, 200, 205 on the upside. Today's puts will be zeroed out. Let's see, 155, 160, 160, 155. So the put side will be totaled out, zeroed out. The put side of that iron condor I took for earnings. Let's see. GE with a bounce. GE with a bounce.
Never mind. Phones, I get it. Yeah. Okay. Yeah. Okay. Here, I got another one that I would buy. And cue up the tape.
Yeah, all the fangs ripping higher. Pick one. Good point there, John.
Bullish notes. Why? Dan Ives saying it's all about autonomous trillion-dollar market, trillion-dollar opportunity. What?
There was a guy who went down there, you, and I listened to him.
Yes.
And I said, that guy's got game. And that guy has a technology game.
Okay, nice spy so far is on the move. All right, Snowflake.
I'm impressed by you.
Let's see, Dollar General.
I was impressed by him. It was the old Musk, not the like Doge.
DoorDash.
Reminded you of the old
I don't know,
yeah.
some arm of the
DoorDash. DASH. DoorDash.
Or we're going to get rid of a lot of people at the CDC or the NSA or yeah, who knows?
The NIH.
The NIH.
I mean,
Yeah.
really. I lost my mom to really bad form of cancer. I always think that whatever they can do for cancer, I hate to see that. We all have our causes.
But for us as multi-asset class investors and trying to invest our clients' money and advise all of our clients' portfolios, we're asking this question.
In phase.
It's a fair question.
In phase with the bounce. In phase.
What's the hedge? What is the balance?
GameStop, of course. What's that doing? GameStop. GME. GameStop. GameStop on the move. Thanks, Cayman.
A well-balanced portfolio that can manage risk. And I think as I talk to other asset allocators and other types of CIOs, on the street,
GameStop, what's AMC doing? AMC, GameStop looking good.
But right now, duration, which has historically been a great balance and a great hedge for portfolios, doesn't feel that way.
We're not experiencing the kind of drops that we saw in futures, right, in the cash trade. Just to look at the market right now for a minute, we don't see the S&P 500 down more than 1%.
All right, GameStop. I'm just lightening the load on GameStop, doing the same thing I've been doing the last few days. Even though the markets are very strong, I am, with the bounce at this point, consolidating is what I meant to say. Even though the markets are consolidating, looking for the bounce back into the range. We could get below the 200-day moving average. For now, though, it looks okay. So what I've been doing is every time we bounce and we're, seeing some decent profits, I'm reducing my risk in some of these positions. Okay, Oklo looks good. Let's see, Oklo, of course, the president and what the administration talking SMRs. Okay, that was pre-market. Okay, we can take that off now. Oklo looks good. Okay, let's take a look at Oklo because this one's probably going to keep going. People will take profits up here. We're outside the upper Bollinger Band. I do have the, let's see, Oklo, I have the 40-50. Okay, I'm going to go ahead and take these off for a profit. I have 40-50s. I could wait. I'm going to go ahead and take some profits off. I'm going to take the profits from these call verticals and I'm going to put them into cash on the next dip. Okay, I always want to be buying dips, so I'm taking profits into strength. Oklo is not going to go up every single day. Obviously, you can see that. So on the move higher and Bollinger Band's expanding, I'm going to take profits in the calls. And next time it dips, I'm going to take that money and put it into some cash, some shares. All right, so that's working out pretty well. You guys experience any slowness in Thinkorswim this morning? This is let's see.
Is there anything though that you love? Like, is there any strategy that you wake up and you're excited about? If somebody comes to you and says, "Hey, I have to invest this $1 million now."
Okay, I took some profits in Oklo. 40, 50 call vertical. Took some off at daily.
incredible
bands.
threat to their performance and their competitive standing as we move forward. And so I believe this is going to be like a durable place of spend. And companies that benefit from that spend are going to have more consistent earnings in this period of macro volatility. So, I get a little bit less fussy around valuations of these companies.
Okay, that looks good.
Because I just don't think any individual or any company can afford to step away.
Okay, just taking profits off this morning. We got a 3-day weekend. Peloton's still going? Okay, cool. PL.
Oh, that's harsh, though. That's what they're calling it over at the FT, and maybe that's why stocks are down less than 1%. Tacos are delicious too, so fair enough. Yeah.
Okay, nice little bounce. Looking for a higher low in the S&P. DoorDash.
To get your thoughts. That is Siggy's Kate Moore. All right, let's get a check on some of the movers this morning. So, unsurprisingly, I'm going to say the ratio of stocks down to up is definitely going to be decisive.
Okay, NVIDIA.
458 stocks down.
NVIDIA bouncing. Okay, NVIDIA.
You got a little bit of energy, a little bit of healthcare. I mean, United Health is up. That's considerable considering all the pain it's gone through. But those are your safety stocks. Let's go over to the other side. This is organized by points, so the biggest mover. It will not surprise you that Apple is the biggest contributor to the downside after a 25% share. Tech as a whole is down. Kate Moore just saying
Apple turning. All the New York FANGs have turned. Okay, Meta, nice turn there as well.
Now, when it comes to the sectors, most of those are on the red too. Actually, all of them are in the red though. Just moments ago, utilities was up, and now that's being brought down. So every single one of the sectors, the things that are doing a little bit better than are your safety sectors, is utilities. The things to the downside, consumer discretionary. And on that point, Matt, we did hear from some more retailers. We're talking about this Ross Decker's offer finding weakness.
Okay, SPY. Okay, it's only the first 12 minutes of the trading session. SPY. Looking good. SPY. Oklo. Are we going to keep going, Oklo? Okay, Oklo looking pretty strong here at the open. So I'll give you an opportunity if you do want to reduce your risk. Oklo is trading in the top of that candle now so far. Probably keeps going. I'm just going to take some profits off. I took half off for the Oklo 40-50 call vertical. Okay, let's see. What's that doing? Snowflake.
We'll determine the correct size for your home to keep all your electric devices running. And right now, get a $500 credit or a Visa gift card with a Briggs & Stratton backup generator purchase. No job is too big or too small. Call Mr. Sparky. We'll be right over.
All right, Snowflake. 199.
It makes me feel very confident that nothing's missing and everything's accurate. With AI Assistant, we're able to focus on finding new ways to reach soccer fans.
If you serve, you save with Epic Military Pass. Ski and ride.
Snowflake. All right, so that's zeroed out. The puts are zeroed out. The call side of the Iron Condor, I did roll out a week. 200, 205. Okay, Netflix looking for a follow through. All the New York FANGs look like short covering. So we should see a bounce in this SPY and the Qs, I would think. Okay. SPY. Hope everyone's having a good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 23rd.
Let's get you some top calls. Some of the analyst action in focus this morning. First up, Canada Goose getting it down.
Okay, AMC. Looking good. AMC. Still going here.
The company's latest earnings week is thanks to colder than usual weather and not any fundamental improvements. I literally saw someone wearing a parka yesterday in New York City, so not surprised. On that note, next up, Decker is getting a downgrade at Telsey Advisory.
Okay, Amazon.
Other Wall Street firms after
after their earnings. The maker behind UGG boots, Hoka running shoes, they had a disappointing fiscal first quarter forecast. They also declined to provide full year guidance. They said due to the macro uncertainty.
Okay.
Waste management getting an upgrade at JP Morgan.
Morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday. We got a 3-day weekend ahead. 3-day weekend ahead. Dollar General. Okay. Aklo.
Apple is now valued at less than $3 trillion. Those shares off almost 3% this morning after President Trump threatened 25% tariffs if iPhones are not made in America. Wedbush's Dan Ives has noted that U.S.-made iPhones.
Yeah, exactly, Frank.
Joining us now is Bloomberg Intelligence Senior Technology Analyst Anurag Rana. Anurag, first of all, great to see you. Good morning. Happy Friday.
Yeah, I'm afraid to reboot Thinkorswim right now. It is very slow.
How likely do you think it is that iPhones will be assembled in the U.S.?
It could be just the East Coast. Could be East Coast servers. What are the West Coast? Toss on the West Coast, okay? Yeah, I restarted. I restart every day. Okay, we're almost 30 minutes into the trading day. No, it's 47. Okay, so we are halfway into the opening range. Let's see if we get any kind of follow through here. Looking for higher highs.
No, we'll figure out. I mean, we heard the president saying that there's all these CEOs that were at the Saudi Arabia conference, and Tim Cook wasn't there. He made a point to point it out. So I'm not sure what's happening behind the doors, but at this point, he's made it very clear that Apple is not going to move a lot of the phones from India, or he doesn't want them to, and wants them to make some of them in the U.S. Now, making them in the U.S. is not that easy because you need a massive factory to assemble these levels of phone. If you were to look at just the shipments that come into the
Okay,
US,
I don't care about all that. Just give me some actionable information. These people bloviate on the media. It just drives me crazy. I only listen to them because I want to hear any kind of news that affects us. Timely news. Let's see. I think Brent might have rebooted his server. Nope, we're good there. NVIDIA call flows are off a bit. Okay, Bitcoin broke out on Wednesday, followed through yesterday. Today we're having a consolidation at the highs. Bitcoin's at 109. It was at 111 yesterday. 111,000. It's interactive learning at its finest. Tune in live or watch. Okay, what's Robinhood doing? Robinhood, let's take a look at some of these. I'm just looking at the alerts. It is a Friday, so we have a long weekend. I'm not interested in taking some aggressive trades. Zero day, day trade's a different thing, but unless I see a really good opportunity. Still hunting. Home Depot, that had earnings, right? Home Depot, that's at the 50-day. Zillow, starting to bounce. Zillow. Walmart, that's one that we were looking for to take off. It just can't seem to get any legs. Nike, that's one that Joel mentioned last week. That's still sitting underneath the 50-day. Microsoft starting to see some flow. We're at the low of the day. We could see Microsoft fall off here, so be careful. Okay, so that looks like that bounce was just short covering. Okay, so we had about a 20-minute bounce, 15-minute bounce at the open. A lot of shorts covering. Makes sense to me.
So actually, Workday's been performing pretty well, and it really just shows an element of market volatility that
200 moving day average.
Okay, let's listen
Right
to
now,
this
the
guy.
market was looking for
Okay,
more
all the New York
aggressive
FANGs
growth signals.
bounced, but they're starting to see
Workday's
profit
Q2
taking.
subscription revenue
So it looks like
guidance
people are being
was,
quick to take
bumped
profits
to
where they can.
2.6 billion,
That's what I
which
did
was
with
in line with
Oklo.
expectations, but
I
not
do
above
want to buy
and
some shares on any
market
dip on
environment.
Oklo.
That's enough to trigger a sell-off.
Okay, so we're still seeing pretty
So
decent
at this
strength.
point now, how would you go about
Okay, Oklo,
this kind of
as you
move?
know,
Do you see opportunity when you see it down
SMRs
20%? Is that an opportunity for
being
a name
talked
like
up,
Workday?
benefiting on the expected Trump executive orders supporting nuclear build-out.
My perspective is mainly
Maintained that outperform at Wedbush,
and what I like about what Workday is doing is taking a
Lightbridge,
differentiated
NewScale,
agentic
Oklo.
AI approach, meaning they're using
Okay, what's
role-based
Lightbridge? I haven't
agents
seen
and
that
AI.
one before.
And above that, they've also
Lightbridge.
cut some of their expenses, or at least their staff, by about 8%, and replaced them with not because of a lack of
Lightbridge.
growth, but
Let's
because
see.
they found ways to automate a lot of the work by AI. So they're finding ways to
Lightbridge.
cut costs, they're finding ways to stay relevant in the age of AI.
Light.
I think long term they look good, but also quarter over quarter or year over year, they're up 12.6% in revenue. Targets. I mean, I don't think that the fundamentals.
Lightbridge. This is a
The market's just looking for a little bit more.
industrial. Okay, that one got a nice pop. That's only $13.
There might be an opportunity here.
I mean,
Okay, looking for dips. Oklo is probably one of the best. I would say they actually make money, right?
action and selling is overdone. It's an overreaction to a decent quarter and maybe some uncertainty.
Okay, Uber broke out this week. Let me see what that looks like. Uber,
Sort of something everybody needs at this point.
correction, broke out last week.
Right. I think that it's
Followed through. Okay, we're fading on
it's a
Uber.
relevant suite of capabilities, and the AI that
Gold,
they
GLD, seeing some
investing in, and
flows in gold, grinding higher. Looks like a channel down. Connect the highs and the lows. You'll see a channel down towards the 50-day. We bounced off the 50-day last week. Gold. That's the ETF. Semiconductors are off. Semiconductors are off today. Underneath the 200-day. Okay, this will be an opportunity on this next dip. Most likely, you got the 9 and 21-day up above the 50-day. 90 MA above the 200-day. So this pullback is going to be an opportunity. We're building higher lows and higher highs. So while it's looking negative right now, we'll look for the bounce. Likely not going to be today.
Yeah, understood. What about the AI picture overall? I mean, let's broaden this conversation out. I mean, your thoughts.
Okay, looking for a higher high now in the SPY.
Right now, or the particular
okay.
that you mentioned this one.
Oklo. Okay, Oklo going to make me regret not buying shares immediately. I can go ahead and do that, right? Yeah, I can do that. Let me buy some shares right now. And if we do pull back Oklo, I will buy more. Okay, so I'm going to scale in here. So I'd likely want about 500 shares. So let me buy 100 shares here. Buy. Okay.
Palo Alto Networks think that they're doing a lot with AI. They're doing it the right way. They're bringing some really great products to market, and they're utilizing AI internally. CrowdStrike is definitely inside the company and how they're cutting costs. So I think they're.
Let's see, Seagate Technologies. That's up on the list.
Theme, to your point, to look for is really two things. It's
Seagate.
These earnings reports. What I would want to see is one.
Seagate's gapped up. Seagate. Let me take a look at Seagate. Seagate STX. STX. STX looking strong.
Inside the company, are they using AI? Are they going to be playing catch up with a company that can be 10 times as effective for half the price? And so if I see them using AI and selling AI as a company,
looking for a higher high in the spiders.
Right, for long term.
Yeah.
In
Look, I mean, that's the
phase.
monetization of AI. That's been the question since day one, hasn't it? I mean, do you see any company truly monetizing AI right now that would be an example?
Well, yeah, all of the ones I just mentioned are monetizing AI. They're selling AI services, right? So AI is just enhancing their product. I mean, even in Workday, the tools that they're selling, which might in the past have been less AI dependent, or not have had what we would call true AI in them before. it's the same tools, although there's new tools, but in a lot of cases, these companies are using the same exact software. They're just enhanced by AI. They're smarter, they're faster, they're more insightful. And so
Aklo, let's go.
Most companies and software,
Snowflake.
when we sell the software that we sell utilizes AI in one fashion or another, and
DoorDash.
so just becoming part of the core product.
Let's see what DoorDash looks like. DoorDash.
Be a side product as well, right? Like Workday
Okay.
hired bought a couple of
Right at 200 DoorDash.
AI that I believe are separate products, but core products. So, but yeah, they're definitely monetizing it, and
That's
this
Snowflake.
subscription revenue, which is great because it's recurring, right?
DoorDash.
So it's a very monetizable.
Palantir too, right?
Man, Toss is so slow. I want to reboot, but I'm afraid to do that. DoorDash.
Paul Powers, CEO at Visna. Great to chat with you. Thank you so much. We really appreciate it. And Workday right now down about 11%. George Sillis is joining us, and he has an example trade on this name. You know, some folks saying this is an overreaction on Workday today. What say you? What would, when you look at these charts, what's your example trade here? I see a bullish one, I believe.
Well, yeah. If you look at the chart, you'll notice that the stock seems to be holding around the 50-day moving average, right around the 240 area. So, you know, this may be a short-term overreaction.
Okay, Deckers, I'm going to, let's see, I need to roll these. Oh, I got the June. I got the Junes. I got plenty of time. Okay, cool. That was the thinking too. All right, we got a double bottom on Deckers probably.
Certainly look at that 240 area as an area of support, potentially moving back to the upside, and at the very least reclaiming the high of today's move to the downside from the gap of yesterday's close. So we're going to put on a bull call spread here. I'm going to buy the July with 56 days to expiration. So it gives us some time for this to manifest. The 240 call, and then I'm going to sell the 250 call against it. So altogether, this will cost you about
Okay,
$5
Deckers
a share,
Outdoor.
$100 a contract. So if you think it's going to recover between now and
Double
56
bottom
days,
opportunity. Okay, so a double bottom opportunity. There's no hurry. Make a note of it for next week. I will as well. Let me write that down.
All right, and then what about a neutral trade example?
Yeah, this one's a little bit different in the sense that it's got some neutrality associated with it, but it also allows the stock to pull back a little further just in case it makes a continuation of the downside. And
okay, let me make a note of Deckers. Today is Friday the 23rd. Just writing down my journal here. Okay. Okay. Today's Friday. I don't want to use that pen.
The 230, 220 put spread. So this is again in June expiration, 28 days. Sell that 230, then buy the 220 below it, and then altogether you could have harvested about $3 a share in credit or $300 a contract.
23
so this trade is
May.
see the stock hold the 230 area
Deckers
by expiration in 28 days.
for
If
double
it doesn't hold and it does fall, you have to consider break even at 227. And then your max loss is $7 a share versus the $3 credit.
Okay. Deckers. All right, we'll look at that one next week.
Actually has to fall a considerable amount further from here for this trade to be at risk. But if you want to play some, more neutrality, but also
Nvidia, look ahead to next week's huge earnings report that's due out that everybody.
Okay, Aklo continuation, looking good.
On Morning Trade Live, we're down 379 on the Dow.
Aklo, I'd like to have about 500 shares. Irrelevant. 500 shares, irrelevant. Depends on the size of your portfolio, obviously. But I'd like to have about 500 shares. I bought 100 shares on this move here. Filled right around 111. 111.75. It looks like 111.75. Okay. I'm sorry. That's I'm looking at something else here. Let me just look at my fill here. How do I do that? Active trades, filled orders. 47.72. Okay, 47.72 on the stock. I was looking at Star Seagate. I wish it was at 111. Okay, Bitcoin grinding higher. Bitcoin. Opportunity.
Named highest in client satisfaction by JD Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account.
The dip getting bought.
Cash management solutions, all designed for investors like you.
Bitcoin. Dip getting bought.
For cash withdrawals worldwide. No overdraft fees and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can
uranium stocks. Yeah, that makes sense. Let's. What are some of your uranium stocks? Uranium.
That means you can stop waiting and start investing in stocks.
Is that one? That's one, right? Okay, that's a cheap one.
The checking account built for investors.
CCJ, Kamiko. Okay, Kamiko, more reputable. Kamiko, I would be more interested in. All right, let me buy some leap. I don't want to buy leaps, do I? Let me see what they cost. UEC. Thank you, Jim. Thanks, Jim. GameStop. Thank you, Cayman. GameStop. Okay, let me just run this through the analyzer. Okay.
Down 1.5% on most of these major indices, we've come up off the lows. And while every single sector does have a down arrow, you're still seeing not the worst part of the day. Session lows are behind us at this moment. S&P is now down 58 points, down 1%.
Okay, UNH is at the lows, still consolidating. Got 62 stocks out of 500 advancing on the S&P 500. Only seven, down to 5 now. Down to 5 on the Qs. All right, so it's still decidedly bearish. But can they flip the script and push this higher?
And we've also gotten housing data, but this bond yield's creeping higher as we're talking. That might pressure things at some point. I don't know. Let's get to the housing data.
Yeah, the number's really, really strong, Nicole, but there was a pretty
sizable UEC.
The nature of the report just a little bit.
Let's do Kamiko.
Month over month, growing 10.9%.
UEC is fairly expensive. Let's see. CCJ. I'm looking at the scanner, which is an easy way to check. CCJ is very cheap. All right, so CCJ, let me go ahead and do. IV is very cheap on CCJ, so it could be a decent opportunity on the option trade. Let's see. CCJ. I want to go in the money, or at least the 50 delta. CCJ, let me just see what it looks like right now. I want to catch any kind of dip. All right, we're at the highs. It looks like we're just going to keep going. So CCJ. Okay, I got a 30-cent spread. A lot of slippage in the options. So I'm just going to go ahead and buy a share of CCJ. I'll buy 100 here too. CCJ. Ugh. Thinkorswim, you're really a pain today.
existing home
Okay.
sales right now, right?
Yeah, it definitely does, especially since they don't want to be sitting on a ton of inventory and get caught in some sort of supply glut and have to offload that.
Okay, buying some shares of CCJ.
Discounted prices. So yeah, incentives to
Bought shares of
offload that
CCJ.
inventory before they're sitting on too much. But to your point, that's sort of isolated though, right? That's going to be in sort of those new building communities. It's not going to be in areas that are already relatively established. So
GameStop. Okay. You got a move in GameStop. Looking good. Shorts cover. Nice little pop there. Okay. AMC. Looking for that to run up. It dipped a little bit. Looking for a pop. Okay. So the SPY is starting to move. SPY's coming off the low. SPY turned.
One of my big questions, Nicole, had been, hey, is the worst of the surprise around tariffs in terms of how the market was going to react to headlines around that in the rearview mirror? And we might have gotten that answer today being no.
Okay, I'll double up on the 580s on a rip here. If this starts to go. Okay, Oklo is still going here. Oklo looks good.
Being targeted is going to, upset the market just a little bit. But to me, it was more of,
okay, SPY.
This 90-day pause. We're going to have to, kind of deal with this at some point down the line. But you can only really be surprised by something one time. Well, I guess I was wrong in that thinking because there was certainly some surprises today. Now, I'm not saying we're, going to go back into some sort of free fall like we were late March, early April.
Oh, there's some big trades on CCJ.
Built around optimism that the worst of the trade
I'm seeing some big trades here. Okay. Just saw some big blocks going by.
Anything specific when it comes to, I mentioned the yields, the dollar's been a bit lower, the VIX a little higher. Any of those metrics standing out to you or breaking out in a certain way?
Yeah, obviously watching volatility to kind of show what we're discussing, which is that there is heightened uncertainty. You see VIX now comfortably over 20. Now, you don't have that VIX curve going inverted where short-term volatility is higher than long-term volatility at the moment, but it is flattening out, which is something to watch. But you mentioned yields. I think the one thing that really
there's some big blocks here coming across on
the longer end of the Treasury curve, Nicole, is that it did act as it typically
on
does.
CCJ.
Initially, you saw a really nice jump in yield price or in Treasury price and yields lower.
Okay, I see a bunch of blocks just keep coming through.
But the second that
550.
and started to move off the lows, they were quick to sell those treasuries back down to where they spent most of yesterday. So when you look at that, it goes to show that there is still tremendous selling pressure in treasuries. They're acting risk off, but only as long as they need to. And the second that risk is coming back onto the table in things like equities, particularly the S&Ps and the NASDAQ, you're seeing that pressure return to the treasury market and yields move higher.
All right, Alex Coffey, it's great to see you. Thank you so much, Alex. All right, now, of course, it's time for the morning trade and NVIDIA in focus. NVIDIA reports its earnings next week. Everybody is waiting for this one with bated breath. We have a preview for you. Schwab Network contributor Marley Caden is with us, taking a look at NVIDIA ahead of next week's report. What's everybody saying, Marley? Good morning.
Good morning to you, Nicole. The street is expecting a lot from NVIDIA for this report. Of course, the last of the Mag 7 to do the reporting. As far as EPS, the consensus is 86 cents, which would be a year-over-year increase of roughly 42%. Revenue, they're expecting to come in
SPY. Okay, looking for a break to the upside. SPY.
That would be up 64% year-over-year from Q1 of last year. And then there are other big driver, their data center revenue.
Absolutely, Russell. I agree 100%.
$4.8 billion. So also up more than 40% year-over-year. The street looking for big things out of NVIDIA. But of course, they're also watching to see what these tariffs are doing, what their guidance is going to look like. And of course, Jensen Huang making headlines this week speaking at that conference in Taipei, where he called the U.S. chip policy a failure.
Yeah, and obviously he's been making the rounds. He was in Mar-a-Lago, he was in China. He did beg the administration to lower some of those restrictions. I think the administration did do that. Some of those that actually were from the prior Biden administration. But the tariff story still remains. And we did have some talks with China today.
We did, yeah. And what we know, at least from the company itself, is that
okay, so UNH at the low here. Okay.
Have knocked their China market share from 95% down to 50%. So that's a huge hit. a lot of people are going to be waiting to hear just exactly how that's impacted them.
Yeah, Russell, thanks, man. A lot of people followed you on those trades. I cashed in this morning the puts. I had an iron condor, so still have the call side that I'm looking for. CCJ, okay. CCJ and Oclo, watching these.
Lots of loss of share. Jensen Huang being very clear, saying that if the U.S. doesn't rethink its approach, he thinks that we could lose the global edge in the AI race. So a lot of ears on this call, a lot of eyes on this call, and as we already know, Nicole, when NVIDIA does anything,
pretty interesting tactic.
They tend to move up the markets.
Pretty interesting tactic. Playing the we're going to lose the lead card, Jensen Huang. So you know the president's probably paying attention to that. Not a political statement, just watching NVIDIA because I like to see NVIDIA higher. Buy the dip. A lot of dips getting bought. You heard Russell in the trading room. Best to take profits lately. If you got puts, best to take profits in the first 15, 20 minutes. That's what I like to do. That's what I did this morning. I had an iron condor long, as you know, from the 21st. I took the call side first, I believe, at the low. Sold some at the high, kept half, and at the highs I took some puts, and then I doubled up on the singles, the 575. So we did really well on those. Okay, here goes the S&P. S&P about to go here.
Hold on to these levels and build from the selling pressure today. So today's trade example,
S&P is about to go here.
The 130, 140 call spread. You could put that on for about $3.75 at 129.5. It's a little bit more right now, but nonetheless, able to capture return towards the recent highs, maybe even further elevation from there.
I'll take an iron condor for NVIDIA next week.
Well, volatility continues to persist on both the upside and now on the downside. Not surprising to see the VIX back over 20, given the fact that we continue to realize significant moves intraday and day over day. Now, remember, a VIX of 16 basically implies on any given day over the next 30 days a move of 1%. We're experiencing larger moves than that, so it's not.
Okay, NVIDIA, I plan on taking an iron condor next week. I'll use 2 times the expected move. I've been doing a lot of those lately. Did Decker's outdoor. Okay, that one's currently working against. So I have June. Decker's, I have June, so no worry about that right now. Double bottom on Decker's, looking for that to bounce. Let's see, Dollar General. What's Dollar General doing? Dollar General, I have an iron condor. No, I have put credits on this one, right? Dollar General. All right, just flagging. This is not doing much. 85.90 put. Yeah, we're not going down there anytime soon. 85.90. 90 put short. 90 put short. Okay, we're down below the 50-day. So I have the 90.85 put credit spread on Dollar General.
You got various houses on both sides of that coin right now. But as we made it through some of the disruptions in March and April, you are seeing several of these agencies and rating agencies or big houses shifting their tact and reducing the idea of recession. But ultimately, I guess there's still some significant amount of uncertainty.
Okay, Netflix, nice higher low. Netflix. Higher low. Netflix, not Netflix. Watch Netflix, higher low. Maybe you got something here. Okay, so SPY continues. SPY continues. Netflix, higher low. Let's take a look here. Okay, squeezing. Probably going to stay below 1200. Netflix, maybe a day trade. All the New York Fangs recovered from the little pop and drop, and then pop and drop again after the open. Shorts covered. Then we got some selling. Then the buyers came in. Watch Microsoft. That one's still pretty cheap, IV. Amazon, Netflix, Nvidia. Okay. Palantir continues the motor higher. It did drop below that 125 threshold, so I'm watching Palantir closely. Bitcoin is starting to rally a bit. All right. I'll be back in a couple of minutes. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Give me 5. I just want to go fresh on my coffee. I'll be right back.
Continue to see the evolution of the space, and I do think longer term you're going to see crypto continue to again capture market share, become a viable alternative, maybe to gold, not yet, but maybe at some point, as well as digitization of currency. So I think that these are the incremental steps that that people are looking for short-term answers, and of course, certainly the volatility in the space has captured our imagination and attention. But I think longer term it will continue to evolve, similar to what we did see in the late 90s, early 2000s, with the evolution of some of these stocks that are now leading the market. It just takes many, many years for these things to come to fruition.
It's interesting you talk about the digitization of currency and getting rid of the penny, because most people are looking at it as Doge and sort of saving money, cutting costs. But there was a time here at the New York Stock Exchange they traded in pennies and in fractions.
Oh yeah.
Right? I mean, we remember that. I mean, everybody knows that. And look at us now here. Dan Deming, managing partner at KKM Financial. Thank you, Dan.
Thank you.
Coming up, we'll talk credit markets and how tariff uncertainty is impacting that group. Morning Trade Live. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly. with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to Morning Trade Live. We focus on the credit market now. Joining me right now, John Lloyd, head of multi-sector credit strategies at Janus Henderson Investors. Glad you're with us, John. We've seen obviously market volatility and now this turbulence. What do you make of it? Is it here to stay? Why does it matter?
Yeah, I think there's a lot of things affecting the credit markets today. And thanks for having me on. Trade policy is probably the biggest one, but also affecting the overall bond market is fiscal policy going through, and we're seeing a lot of rate vol right now. So those are the two biggest things, obviously causing uncertainties across the entire markets, and credit markets are definitely affected by that.
When you talk about rate vol, I mean, there's no doubt it's not just sometimes that rates are moving higher, but the trajectory at which they do so. We talk about the mortgage rates going from 3% to 7% in a minute. It sort of felt like. And now people saw the 30-year going above 5% for the first time since 2023, and there was some nervousness. I mean, do you think that's merited, and do you think that rates could head higher?
Yeah, I definitely think rates could head higher from here. We prefer the front end of the curve right now for a couple reasons. First, if trade policy does get worse from here and we're unable to negotiate trade deals, then and we do see economic growth slow down, the Fed would likely start cutting rates in that scenario, and we see better value in the front end of the curve. The long end of the curve is going to be more affected by inflation expectations and term premiums, which, in our view, that's where the trade policies are hitting the long end. And then that's coupled with fiscal policy. It seems with the new tax bill that we're going to be continuing to run rather large fiscal deficits that we have to fund. And I think that's where the market is worried on the longer end of the curve.
And where does the credit market stand versus the stock market? I mean, is it the better place to be right now?
Well, one thing I like about the credit markets is you have, some really attractive starting yields. So if you're looking at the high yield market today, it has a 7.5% yield in that market. So a lot can go wrong over a year period before you actually lose a total return. And the other thing I would comment too is since Liberation Day, the credit markets have sold off, so spreads are wider and a little bit more attractive, and provide some downside protection in the amount of spread you're getting in the credit markets today, especially in higher quality credit markets.
The tariff picture is something that really causes volatility in day-to-day decision making, and this is why you think that you need to have active management, right?
Yeah, as an active manager, I think there's a lot of opportunities. In the fund I run, we can go into any of the fixed income sectors, whether that's the securitized credit or corporate credit. And not only go into those sectors and allocate across those sectors, but then there's a lot of idiosyncratic opportunity that volatility in the markets creates for active managers. So, we're finding a lot of opportunities now. One of the things I like to point out is even though credit spreads, corporate credit spreads have widened out, we prefer securitized still at this point. If you look at the main fund I manage, we're actually getting a similar yield to high yield with a much higher quality credit rating. And that's just because securitized credit is trading cheaper than corporate credit in today's markets. So that's an example of where active managers can add value.
So right now you do prefer securitized credit over corporate credit, right? At this point.
Yeah, we do. If you look at the markets, you can get high quality AAA securitized credit in kind of the mid 100 areas. And if you look at where corporate IG is trading, it's trading at 90 basis points off over treasuries. And so to us, that provides pretty good relative value and carry in today's markets. So, that's just an overall theme is maximizing that yield per unit of risk in these volatile markets with uncertainty out there. And that's one of the great things I think about fixed income over equities is you get to clip that yield month after month.
Yeah, and last but not least, mortgage-backed securities. Is there a place right now? Is there opportunity here?
Yeah, we like agency mortgages. They've been trading wide to corporate credit. You have to kind of go back to GFC times to see the relationship this wide. And so we have an overweight and like that portion of the market today. And a lot of that's being driven by the rate vol. Generally mortgage markets don't like the rate vol. So, we like clipping that extra yield, even though we do have heightened rate volatility in today's market.
Yeah, you're thinking back to the financial crisis at this point. And people started to worry when they started to see the market selling off and started doing comparisons. We're nothing like that right now, right?
No, our base case view on the economy, which will be supportive for the credit markets as well, is, ultimately the tariff and trade situation will get resolved. We will have higher tariff rates than we came in with this administration. And that will likely lead to, temporarily higher inflation and lower growth. But that's not necessarily a bad place for credit markets if growth is still positive and just is slowing at that point. And like I said, you're starting with, pretty attractive yields in the treasury market and in corporate credit markets today as a starting point to cushion that.
John Lloyd, head of multi-sector credit strategies at Janus Henderson Investors. John, thank you.
Thanks for having me on.
Coming up next is the Chartmaster, and we'll preview some of the names that are reporting next week. Retail earnings in focus, names like Dick's Sporting Goods, Abercrombie & Fitch, Best Buy. Morning Trade Live. We'll be right back. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it?
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
All right, New York Fangs continue to show some strength.
Welcome back to Morning Trade Live. We're live on the floor of the New York Stock Exchange ahead of a 3-day weekend where markets and stocks are under some pressure, though up off the lows of the day. Now, we are in the midst of earnings season. I won't say the thick of it because I guess some of it is really past, but we still have a lot of key names that we're watching, particularly in retail. And that brings us to Chartmaster. J.D. Durkin is here taking us through the fundamentals, sitting with me here at the desk. And Rick Ducat will go through the technicals on these three reporting names. Next week, many of these retailers have been withdrawing guidance or being a little tepid. And we'll start with Dick's Sporting Goods, JD. This is a name you're watching. What are those fundamentals? What are people watching?
Yeah,
for?
exactly right. And to speak about how far we into earnings season, obviously a lot of the emphasis will continue to be on NVIDIA, but we don't want to forget what's going on with these major retailers, all of which that we're going to talk about today, Nicole, are facing tariff or trade policy related uncertainty. They tend to manufacture in places like Vietnam and China and Cambodia. Comparable story here for Dick's Sporting Goods. In terms of earnings per share, the expectation indicates a dip of about 2% from the year ago quarter, but we are expected to see revenue rise about 3 to 3.5% from where we were this time last year. The good is that the company really seeks to create what they call an omni-channel athlete experience, a diverse product offering for their athletes. Of course, the challenges here for a company like this, like we said, those
The rails, watch the rails.
macroeconomic sort of set of circumstances, in the tariffs.
CSX.
Of course, their biggest companies that they carry.
These are starting to bounce, maybe.
Under Armour, we understand. We've talked so much about the pricing pressures that the Nikes of the world are facing. Even if Nike didn't go quite the Walmart route and explicitly blame the president's tariff policies, a lot of these companies, Nicole, we know they are in a situation where they will have to pass down cost onto those consumers. We'll have to wait and see what that means for Dick's next week.
Understood. All right. So what do you think, Greg, when you take a look at this chart for Dick's?
Most stores also blame tariffs for their earnings-related woes as well. So just another thing to think about there. Dick's Sporting Goods, though, we can see that the
Okay, Enphase managed to bounce. The solar stocks managed to bounce.
briefly broken here. We had a big push to the upside, but it
Enphase gapped down yesterday.
here 220. We can see that that was a double bottom type of pattern here before we had our large breakdown, and sure enough, price failed to close above that level. Now we can see that price is once again approaching this area of the previous lows. 166.37 was the intraday.
Constellation Energy.
Not yet tested it or broken down to the downside yet here, but momentum is slowing down. We are below the 50 midline, and we have given up our green trend line here for the RSI. If we were to look at our volume profile and standard deviation channel studies, we can see that this area right here, our red line near 188 that marks a gap and a post-gap high point, matches up with our plus or minus 1 standard deviation channel, our 21-day exponential moving average, and a volume node. So 188 to the upside is a key level. We are already slipped below
DoorDash with a nice bounce.
deviation channel here. So that area near 169 could be important as well. On a longer-term chart, 147 was a series of highs going back during the past 5 years. That's also where volume starts to really pick up again.
All right. So that's Dick's for you. And making also, didn't they recently buy something just the other day? Dick's, they were interested in making a purchase. I'll think about that. In the meantime, we'll move on and we'll talk about Abercrombie & Fitch. What do you think about this one?
Well, we're seeing shares under pressure today, down more than 2%. Shares down 50% or so year to date. A comparable story, I think, from what we laid out with Dick's there a moment ago. in terms of a lot of manufacturing, heavy exposure to Vietnam and Cambodia. On the earnings side, believe it or not, this indicates what would be about a 35% year-over-year decline from the same quarter last year, though indicating maybe a 3 to 4% year-over-year jump on the revenue side. Historically,
Super micro back to the 200-day.
60% of the time following its earnings announcements, the company does perhaps have some strength going for it, Nicole, in the minds and hearts of a lot of analysts, citing operational strength, solid market position, of course, long-time brand loyalty for higher spending consumers that kind of grew up with the name in the heart of the retail shopping mall era. But of course, growth is expected to moderate a bit here in 2025. Given those tariff-related headwinds out of Vietnam and Cambodia, we are seeing Jefferies maintain a buy rating on the stock, but analysts, they are lowering the price target from 170 down to 135. We'll hear what they have to say Wednesday as well.
Yeah, and I saw Morgan Stanley saying they anticipated a miss here for the quarter. And while Urban Outfitters had some bright spots, American Eagle, I mean, they really had a mishap. The CEO even acknowledged some missteps, but the whole tariff story, too, weighs on these kinds of names. Rick, take a look at this chart, which, I mean, it went down.
Okay, futures just grinding along.
Almost $200 this year. Your thoughts?
Nice bounce. Netflix about to break out here. Netflix looks like it wants to go. Amazon looking better. Apple looking pretty decent. Apple below the 50-day. Getting some unwanted news about potential tariffs against the company, 25%. Being threatened by the White House. They don't build some plants here in the U.S., I guess. NVIDIA looking a little better. NVIDIA. Markets are a little slow, right? Feels like a little slow. Volume is pretty low.
Activity here, so that volume note comes in near 80. Also, roughly lines up with our linear regression line, our line of best fit, which is an idea of fair value for some traders. So that is it.
All right, Freeport McMoran. Seeing a little flow. What's going on with Freeport? Freeport McMoran seeing some flow. Look at the daily chart. Freeport. Bullish.
All right, and by the way, I did look. Dick's is buying Foot Locker. That's what it is. I mean, how can we keep up with every single story? That's what it was, and I remember being like, wow, what are the synergies here? But Truett's noted, we believe we saw an opportunity for Dick's to acquire a business that's earning below its potential. So in the current environment and with Nike and all that, so very interesting there. That could provide some. They have to have the integration and all that with Foot Locker. But not least, let's get to Best Buy earnings.
Yeah, we're seeing the stock down under pressure today, down 1.3%, down 19% year to date. And the comparable story we've been talking about for a lot of these other names.
Bullish hedging flows on Freeport. Tight Bollinger Bands at the 50-day. At some point, this is probably going to break out. Just sitting here, noting the hedging flows. So, okay, Palantir starting to drive a bit higher. Higher highs, higher lows. Shorts covering on Palantir. Tesla just kind of sitting down here. Off on the day. A little more than $3. Watching Bitcoin. Bitcoin is grinding higher. Not feeling the volume. With a 3-day weekend, Monday off, it looks like the markets have slowed down. Volume slow.
We will get those earnings on Thursday, and we are expecting both earnings per share and revenue to be light relative to the year ago quarter, Nicole.
Right, understood. Okay, your thoughts on the chart, please, Rick.
Yeah, so this
All right, let's take a look at the yields. Yields being discussed. Okay, let's look at the 30-year 30-year Treasury yield. All right, backing off 4.5, 5.0%. Okay. SPY grinding higher. Back into this fair value gap from this morning pre-market.
Now, price has struggled to retake that low level near 70.25. It was looking like perhaps we were going to hang on, but now struggling to hang on to our 21-day EMA. You could show a trend line here. We haven't had a lot of particularly helpful trend lines, but this one, in the shorter term at least, shows that things do indeed seem to be making a further move to the downside here. When we look at volume once again here, a small node down here near 60, but we're approaching a larger one near 72. So even if price were to push back into that area, we still have our orange 63-day EMA and our linear regression line, which is our idea of fair value. Notice that in this case, we are far below the volume profile point of control for our yearly basis. That comes in near 87. A 5-year chart shows that, well, in this case, the long-term volume is right about where we are now. So 74 looks like an important longer-term point to keep an eye on here. And really, we just hit those 5-year lows. So the situation
Hertz,
is very good.
HTZ.
Level that represented a double bottom.
Yep, squeezing.
Thank you so much. A good preview for next week for some of those earnings, not just NVIDIA next week. We have some great retail numbers to focus on. JD Durkin here and Rick Ducat. Thank you. Coming up after the break, our market meetup panel and Morning Trade Live. We'll be right back.
Yeah, I'm looking at Hertz, HTZ. Yeah, I see Bollinger Bands coming together, so that's probably going to stay right in this range. Needs a catalyst to break out there, Joel. MACD's turning. Looks good. Okay, stocks are just kind of grinding higher. Just feels like the street is trading, not the institutions at the moment. SPY just grind. Look at the volume, how it's tapered off since the open. Volume tapering off. Floor. You're looking at floor carp? Okay, floor. Okay, volume is about half of yesterday's volume already. So let me see. FLR. FLR. So it reports August the 1st. Last time around, floor beat. They have 55% earnings growth. FLR.
What's up, Carl Nation? It's your #1 broker with the best full service.
All right, S&P is seeing flow grinding higher, hedging flows grinding higher as the markets move. Could go either way. Could go either way. We're just grinding higher. on very low volume. Option volume is grinding higher. Let's see. Trace is looking like a lot of positive gamma starting to build up. It's what we were looking for this week. 5,900 major resistance. 57.75, 57.50 are support. All right, we're in between levels. I'd like to see a SPY get above 580.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction.
Yeah. Okay. All right. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're an hour and 15 minutes in the trading day. I don't know why. It just feels like so much more time has passed. Grinding higher. Spot. You can see SPY is grinding higher on very low volume. You can see at the open, you had that spike in volume and then gradually tapering off to almost zero. Okay. Option volume. Just watching that as well. 96th percentile on the 5,900, 15.7 million in gamma. Let's see, that's 0 day. Let's exclude 0 day. Okay, so we got some resistance right in this area, 57.90. $57.90.
Nuclear stocks, large and small, gaining on hopes around a new executive order from the president. Our Pippa Stevens is here with the latest. Morning, Pippa.
Good morning, Carl. Well, President Trump is preparing to sign executive orders aimed at boosting the nuclear industry. That's according to sources I've spoken
Okay,
to.
more news now.
Drafts have been circulating, but the overarching goals are to speed up deployment, ease permitting, and boost U.S. nuclear supply chains in order to quadruple the U.S.'s nuclear power by 2050. Now, the orders are expected to include reforms to the Nuclear Regulatory Commission, calls for the Department of Energy and Defense to deploy reactors on federal lands, leveraging their siting and licensing authorities, and boosting fuel supply chains to decrease dependence on foreign nations, including Russia. We are seeing broad gains across the sector with the URA and URNM, each up more than 10%. Items like Chemico, Denison, and NextGen.
Oclo, a little dip, and let's see, CCJ continuation. Oclo, CCJ continues. That was a good catch. Oclo flagging with a pennant at the highs right now. Oclo.
Pippa was having this discussion the other day as well. China's building nuclear power plants. They can do it quickly, so to speak. Where are we right now?
Yeah, I don't. If you're Chinese, don't take it the wrong way. But from what I've seen, that was the DREG projects, whatever they call them. These buildings that go up. The one in Malaysia was just like, oh my God, the whole thing just collapsed. I'm not too crazy about Chinese construction techniques being in the business. Okay, S&P looks like it wants to go here. S&P next level 580. Okay, I'll take those calls off into strength that we took at the low. So these are up pretty big. Doing well. SPY calls.
But I think more importantly, what really needs to happen here is there needs to be the environment for private investors.
I like to see it rip. I like to see the markets rip here so it can get the IV to expand quickly.
What you need is private capital. What you need is things like the LPO to provide that initial capital, that debt financing.
Okay, Oclo and CCJ still looking really good.
Nuclear is that it's just still, behind schedule and too expensive. And so until we can harness that private capital, you're looking at, potentially no more commercial reactors in the future, guys.
We should do it.
Okay, UEC. Okay, nice push. UEC.
We got to get paid back at some reasonable period of time. It's hard to commit capital when you know you're going to get any revenues for at least 10 years. So yeah,
But the
if we
demand
are
is
waiting
there.
like the Chinese do, I'm in.
Okay, there you go. We'll build them in China. Thank you, Pippa Stevens. When we come back, the president hosting a dinner last night for holders of his meme coin, billed as the most exclusive invitation in the world. We've got details for you on the attendees. Left disappointed when Squawk on the Street returns.
All righty. Let's see.
For example, they're saying they cannot support this legislation as it currently stands. They are looking for steeper spending cuts. Other senators take issues with this legislation as well.
UEC continues.
Rollback of clean energy subsidies from the Inflation Reduction Act, some of the changes that were made to SNAP and Medicaid benefits and who was going to be able to claim them. So this package that passed the House very narrowly yesterday could look very different once the Senate finishes its work on it and sends it back to the House. Of course, the Senate has set a deadline for doing so of the 4th of July. Kaylee, Balance of Power is always must-watch TV, but it is even more so today. We're really looking forward to it. Kaylee Lines there. Tune into Balance of Power. That is at noon Eastern time. Another must-watch segment, the TV, is going to be coming up in the next hour. We're going to be speaking with U.S. Treasury Secretary Scott Bessent. That's at 11:30 a.m. tomorrow time.
I will say Balance of Power, so it's the radio show starts at noon
Yes.
with Joe. Then on TV, it's at 1 o'clock.
It's a lot of Balance of Power.
Haley joins, and then again at 5 p.m.
Okay, looking good.
On a Friday.
Looked pretty dire at the open, but managed to come back somewhat.
And it's ETF plans in our ETF Friday.
Okay, UEC, Uranium Energy Corp. Okay, inverted head and shoulders, identified by a number of you. Popping into the Kirby, pushing higher now. Pushing higher. Okay. Okay, low tech. All right, they're starting to pull us back now. The grind higher was on a much lower volume. Okay, I'm out the 580 calls for now. Out of the 580 calls for now. Okay, let's see if we can jump above this level. That'd be great. But there's a lot of resistance overhead. Okay, UEC still going. UEC. Okay, Bitcoin. UEC looking good. UEC. Okay, Bitcoin, nice little buying at the low of the day, looking for the follow through. Yeah, sorry for your loss there, Bill. I lost mine too, so I understand the cancer, of course. He had kidney cancer. Good guy. Good guy. All right, watching Bitcoin. Meta. Okay, I'm watching a lot of stocks with, just pay attention to Bollinger Bands. So if you're looking for big moves, you want to see Bollinger Bands squeezing and about to open up or have just started to open up, not contracting like I'm seeing on Robinhood. Okay, a lot of these stocks are showing Bollinger Bands turning in. That's telling me that we're probably in consolidation more. Okay, most of the stocks that I'm looking at on the daily time frame have Bollinger Bands contracting. Some of these energy names like UEC expanding. UEC expanding on the daily. So this is looking for a big move. I'm going to buy some December UEC. December 6 calls. Okay, I'm going to buy some December 6 calls for UEC. Okay, those are in the money.
Low tick alert minus 800.
Okay, we're fading now. Fading off the high. Okay. Okay. UEC. Okay. So it's going to be a slow day, most likely. I just see the volume tapered off to almost nil on some, like the SPY. Okay. Spiders, you can see volume down at the low. Starting to pick up on the sell side, but note Bollinger Bands. Okay, on the intraday charts. Note Bollinger Bands on the daily coming together, telling you to look for more consolidation. Let's see. Closing in on 11 o'clock. I have to take my son to school here shortly.
are about 90 minutes into the trading day on Wall Street. Welcome to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. You got pressure on markets as we close out the week, heading into a 3-day weekend. Let's start out with our raw.
Lightbridge.
Live from New York, this is Bloomberg Technology, and we get straight to our top story. President Trump taking aim at Apple yet again, threatening a 25% tariff on the iPhone maker if they don't produce the devices in the United States for US consumers. Shares, as you see, down yet another 2.7%, with dropping below that $3
Looking for a follow through.
capitalization. And
some of its China-based iPhone production for the U.S. to India to avert what would be higher costs related to tariffs on goods coming from China. Trump wants to see something different, though. He wants that production not to go to India, but to the US.
UEC. All of these energy stocks probably going to continue to next week, I would think. I'm not guaranteeing, obviously, but the flow should get more news about this over the coming weeks. SMRs, uranium companies. Got a strong bid. I'm going to buy some UEC 6 strike calls for December, probably. I'll do that on the next dip, and I'll do it up here at the high.
the little problem with Tim Cook that Trump spoke of last week being that of shifting manufacturing from China to India, and then the FT with a report showing that India
MicroStrategy you looking at there, Cayman? Okay, cool.
in the last week. More broadly, just speak to the relationship, therefore, that we see of Tim Cook with the US. And
yeah, that is kind of strange, right?
Promised $500 billion.
MicroStrategy, Bitcoin at highs.
Was not insignificant, and he had talked about moving some iPhone related chip production here and other efforts here, including training and other works, but it wasn't enough. Trump is really about the symbolism. He wants the iconic products, including the iPhone, but others as well, made here in the US. But one of the problems is, of course, the workforce. We don't have the workforce. And then the cost. Do we have the workforce that is prepared to do the kind of high tech, high skill assembly of these phones that you see en masse in China and in India and in Vietnam? We really don't. And Tim Cook has made this point over and over again, as have other chief executives when they talk about the challenge of bringing production.
Okay, UEC continues to hold on to the high.
It is a difficult moment for Tim Cook.
I would expect that these will pull back a little bit, give you a B and C pivot as an opportunity.
There are estimates all over the place about how much more an iPhone would cost if it were produced here from beginning to end. One analyst out this morning saying as high as $3,500.
Okay, SPY is starting to bounce.
That may be high.
Somebody probably took some profits. There's a negative gamma just above this level at around 5,800. 5,800. If we get above 5,800, could rip.
Who called about a 3,500 price tag, and indeed he called it a fairy tale. Analysts calling this an absurd directive coming from the president. Let's get more analysis with Gil Luria, D.A. Davidson, Managing Director, joining us now. You have a buy rating on Apple, a $250 price target. Does any of that change if they indeed have to bring production here to the United States?
It does not. This is really just a matter of time frames. Yes, if we needed to make an iPhone right now in the US, it would be very expensive. But can we do this in 5 years? If Apple was to commit to bringing production of iPhones to the US in 5 years and invested its considerable resources into doing that, it wouldn't be that much more expensive. And that's what the president is looking for. And I'm surprised that Apple is at a point where they're negotiating this badly that the president has to go out publicly. And
Man, I can't type worth a crap.
You've seen other technology
So many
CEOs do a
typos.
much better
Jeez.
job of giving the president what he wants, and moving forward and making those commitments. And I'm surprised that Apple is continuing to be humbled. Let's not forget, this has been a humbling week for Apple.
Okay, we got CCJ. All right, starting to give you your first B pivot potentially. All right, UEC. Probably going to start to see some B and C pivots. I'll look to add or to start, depending on the circumstances. CCJ, I have a small position. CCJ, OCLO. UEC, looking to get into some $6 calls.
In the United States, we don't have the ecosystem of supply chain here. It has taken decades to build it up in China. It's taken years to build up in India. What do they have to go about sorting here in the United States in that 3 to 5 year time frame?
Yeah, that's exactly right. It is a skills issue, but if you give them 5 years, we can hire internationally. We can develop the skill here. Apple is sitting on $50 billion of cash, and it produces $100 billion of cash every year.
Okay, I got to take my son to school here. All right, I'll be back. I'll be back. Let me get this ready for you guys. Okay, S&P, want to see this continue to grind higher. Okay, I'll be back at around noon.
Away from R&D, boy, they have to catch up in terms of generative AI and integrating it there. But instead, having to focus on production here in the United States, is that not an opportunity cost that does indeed drag down the price target, at least for the stock?
It is a headwind, and that's the headwind they're dealing with this year. That's why the stock is down so much, is that they've been caught in this crossfire, and they didn't need to. Again, all they needed to do is make some early commitments, start down a path, and then this path, either it leads them to a successful outcome, or they have a fallback of saying, okay, let's just absorb the 25% tariffs from India. That's why when people say it'll cost $3,500 to make an iPhone in the US, that's not a real thing. The only possibility here is that they're going to say, okay, even in a 5-year time frame, it's going to cost us so much to make an iPhone that will absorb the 25% tariff from India and absorb it through higher prices, slightly lower margin, and push it down to vendors. So this is really just a matter of them doing a better job negotiating, moving forward. But yes, absolutely, this is a drag on the stock. It has been this year. And until they find a path forward and get out of the headlines, it'll continue to weigh on the stock.
So, Paul, if you're saying it's not a real thing to estimate what an iPhone made in America would cost, are you anticipating that they do stomach a 25% tariff coming on, just continuing to import? Or are you anticipating that they do go about a 3 to 5 year investment plan in the US when, look, the term of President Trump isn't 5 years?
I think they need to proceed on both paths. Again, this year, they can't make iPhones in the US, not this year, not in the next 3 years. So they're going to have to try to negotiate that tariff down or absorb it in the short term, which is what they're doing, and then proceed on both paths. Because to your point, this administration isn't going to be in power forever, and they're going to have to find out over time what it is going to cost. I think that we're also I think that I've heard some comments minimizing the changes to manufacturing in the U.S. Manufacturing is going to change dramatically over the next few years in the U.S. for a variety of reasons. Because labor has become more expensive in China and Taiwan, because robotics are getting that much better. So in a 5-year time frame, they may be able to accomplish these goals. They have to pursue that now. They don't have a choice, but at the same time, they need to use that as leverage to go back to the administration and say, hey, give us 5 years to do this. Let's take off that 25% on India because we are making a firm commitment to the 5-year time frame, and that'll buy them the time to find a good resolution. That is possible, and Mr. Cook is a skillful enough negotiator that he needs to be able to accomplish that.
But how frustrating do you think it is for investors, for yourself, or indeed Tim Cook, to just think about the inefficiencies that have to be built into the business model now? Even if they do bring over component building here in the US, it's not going to be an easy task, and they're likely to have to still assemble in China and India for the time being.
Well, it's a reality. I think sometimes other countries and some CEOs are a little bit in denial over the fact that President Trump got 77 million votes and believes he has a mandate to make these very profound changes to the global order, including changing the way the global supply chain works. This is not going to change in the next 3 years. This is something that all these companies, and by the way, these countries have to acknowledge and move forward with. And we, as analysts and investors, have to adapt to it. We can't go back in time and change the outcome of the US elections. This is the administration, this is its policy, and we have to adapt as investors, which means that Apple is going to have a choppy year for sure. And other companies that try to negotiate badly are going to have choppy years.
Right.
That's why we favor companies that have handled this better. Microsoft, Amazon have handled this a lot better. Their business is more resilient to this, and they should be better able to get through the rest of this year and the rest of this administration.
All eyes on the political navigation of Tim Cook next. Gil Luria, great to have you. D.A. Davidson. Coming up, renowned computer scientist and AI developer Andrew. He's going to be joining us to talk about his new VC fund, but also this talent, the skill issue that we're just talking about with Gil Luria. Can that be brought here to the United States? Let's just take a quick check on the markets ahead of that, though, because the Nasdaq is under pressure as we dial up tariff anxiety. Nasdaq off by more than 1%. We see the semiconductor index also off by 2%. Nvidia gets sold, but Apple in the line of fire. This is Bloomberg Technology.
Choosing Wired means choosing quality craftsmanship for your home's electrical needs. Our team specializes in installations, repairs, inspections, and energy-efficient solutions to keep your home and your family safe. Wired LLC, your trusted electrical partners.
The Memorial Day mattress sale is going on now at Ashley. Save up to $500 on adjustable sets from Tempur-Pedic. Plus, get 0% interest for up to 72 months with select mattress purchase when you buy in store. Shop more deals in store, only at Ashley.
Hey guys, Bill Rocco here, owner of Competition Cars, along with my brother Anthony, my new sales manager. So after 29 years in business, we moved to an awesome new location right across from the Tulsa Grand Mall. We still offer the same great cars at low prices, no dock fees, or warranty. Now we've added classic cars and exotics to the mix. So come see us at 541 Piedmont Avenue and check out our awesome new indoor showroom. And remember, Bill worked hard to earn Best Brand Dealer for 11 years, and I'll work hard to get to be that tradition.
As a real estate investor, I look for sharp agents who really know their market. Agents who do so much business, they can find me the right investment property and sell it for the most money without drama. When I need real estate advice in Myrtle Beach, I call Blake Sloan. His innovative marketing attracts hundreds of buyers every month, which creates more demand for your home, selling it faster and for more money. He guarantees to sell it on your timeline or a deadline. Agent I trust, Blake Sloan, and avoid the drama.
Memorial Day savings are going on now at Ashley. Summer is heating up with our incredible selection of hot buys, starting at just $2.99. Plus, pay over time with 0% interest for up to 72 months. Shop more deals in store, only at Ashley. 3 reasons people buy AARP level benefit term life from New York Life. No medical exam, just health and other information. Easy online application, and help with expenses left behind. Visit NYLAARP.com.
Economics, tech, and climate. More than what you need to know, it's what you need to think about.
The big news today. It is Apple shares trading low as investors react to President Trump's threat of a 25% tariff on the company if it doesn't bring more iPhone production to the United States. But doing that requires skills many American workers currently do not have. We are pleased to welcome to the show Andrew Ng. He is world-renowned computer scientist, thought leader, and also the co-founder of online education company Coursera. Ng is also announcing his second fund targeting AI startups. Andrew, it is wonderful to have your voice on the show. And before we get into really the AI talent you've been building, I just want to get your take on the labor skills that are currently needed in the US for this manufacturing pivot. If we were to bring iPhone manufacturing to the United States, could we do it in a near enough time frame?
it will take years to develop the talent base needed to bring a lot of advanced manufacturing back to the United States. I think there's a certain logic to making sure that advanced manufacturing is under the control of the US and our allies, and that's important, not just us, but also our trusted allies. Several years ago, I actually visited Wisconsin, where the first Trump administration and Foxconn had mightily put effort into Wisconsin Valley, which is an attempt to move move display manufacturing, panel display manufacturing to the United States in Wisconsin. And frankly, it was a great effort, but it really struggled to gain traction because it was very difficult to find the talent in Wisconsin or in the US more broadly with the advanced manufacturing skills. Manufacturing today is often a high skill requiring knowing about robotics, knowing about software. It's not just people assembling little things with their hands anymore. And we've got a lot of work to do to grow that talent in the US.
Where could we bring in from? Andrew, where have you seen that skill set among allies that can be brought in? Because in many ways, it's feeling as though we're not bringing in talent from abroad at this moment either.
I think that in the case of manufacturing talent, clearly China has a lot of it. I think Taiwan, interestingly, also has a lot of manufacturing talent. So I feel like, and obviously also Japan, I think some parts of Korea as well, especially when it comes to semiconductors. But so many of our allies do have skilled manufacturing talent, but how to work with them to import some of those skills to the US is, I think, something still to be figured out. And then on the other side of the spectrum, they alluded to, I think one of the best things the US could do to ensure American competitiveness in AI and other advanced technology fields is to, frankly, support our universities and support high skill immigration.
How have you been considering the cuts to science funding in particular? Is that impacting your sector, the sector you want to invest more in with your second fund?
So AI Fund's Venture Studio, we work with many entrepreneurs to build companies. And I feel like over the last many decades, America led the world in science and technology. And this is an era when we have strong institutions like the National Science Foundation and the NIH that funded open research. One thing that I think not many people fully understand is when, say, the National Science Foundation funds a researcher, they write a research paper that's published for free, anyone on the internet can read it. Yes, it helps our adversaries. Yes, it helps the whole world. But the country it helps the most is America. Because when an American researcher on American soil publishes a paper, that diffusion of knowledge is fastest within America. And yes, other countries, including our adversaries, can benefit from it too. But that openness of research helps the country that does it the most. And so I think America's ability to attract amazing international. I was once an international student myself on an F1 visa, and I came to the US to study and ended up staying and hopefully making some positive contributions to this country. I think welcoming school immigration would be an important piece of ensuring American competitiveness.
Well, let's talk about your positive contribution when it comes to raising $190 million second fund to invest in AI talent and startups and sort of co-found them in many ways. What sectors are you looking at, and are they US-built companies alone?
We are building, the majority of companies we build are in the US, but we are also working with businesses in Japan, Taiwan, Korea, and so on. AI Fund's a venture studio. So what I decided was, unlike a traditional VC, I don't want to be competing for or chasing deal flow. So we exclusively work with entrepreneurs to co-found companies. What that means is my team is alongside the entrepreneur. We're writing code, talking with customers, debating what features to build. And because my team is fortunate to be close to the AI technology, it lets us look across many different industry sectors, recruit great AI talent, and apply our technical expertise to all sorts of different sectors where AI can be applied.
We'll come back as that portfolio continues to grow. Andrew, it's been a joy speaking with you. Congratulations on the new fund. And thank you for sharing your expertise. Andrew, and of course, Managing General Partner at the AI Fund. He's also founder of Deep Learning AI and, of course, co-founder of Coursera. Sticking with artificial intelligence, Anthropic, well, it's rolling out 2 new versions of its Claude AI software, including a long-delayed update to the high-end Opus model. This is as the startup really vies to stay ahead of a crowded market. Mike Krieger joined Ed a little earlier, Anthropic's Chief Product Officer.
Our only, constraint for this launch was we want it to be available to, as many people as want it on the launch day itself as well. And so it'll be generally available. It'll be in Claude.ai for our more, end user. And it'll also be available in the API for usage on day one. And then as people scale up their usage, there's often, capacity and rate limit conversations that we need to have just because the models aren't really in demand. But in terms of being generally available, it's day one.
Coming up, tech IPOs. Are they back? We'll discuss with Brianne Lynch of Equity Zen. This is Bloomberg Technology.
At Waccamaw Heating, Cooling, and Plumbing, we've been part of your family for years, just like these two. Growing up, learning, and serving you better every day. From heating and cooling to now offering expert plumbing services, we're here for all your home comfort needs. Trust Waccamaw Heating, Cooling, and Plumbing, where our commitment to your comfort never wavers, and your home is always in good hands. We've been growing with you every step of the way. Give us a call today.
Storm season is here and we're ready to help keep your power on. Don't be left in the dark. Prevent power outages in all kinds of weather with a Briggs & Stratton backup generator. We'll determine the correct size for your home to keep all your electric devices running. And right now, get a $500 credit or a Visa gift card with a Briggs & Stratton backup generator purchase. No job is too big or too small. Call Mr. Sparky. We'll be right over.
Hey, Sparky. I didn't always call you Dad. I called you Hero. I called you Coach. And I definitely called you embarrassing. There were years I called you less. But whenever I called you, hey Dad, you always answered. Happy Father's Day.
Memorial Day savings are going on now at Ashley. Summer is heating up with our incredible selection of pot buys, starting at just $2.99. Plus, pay over time with 0% interest for up to 72 months. Shop more deals in store, only at Ashley. The Memorial Day mattress sale is going on now at Ashley. Save up to $500 on adjustable sets from Tempur-Pedic. Plus, get 0% interest for up to 72 months with select mattress purchase when you buy in store. Shop more deals in store, only at Ashley.
Now, as the broader market sells off, shares of Mountain, of Hinge Health, both trading higher after making their public debuts just yesterday. Their success is giving hope to other tech startups that have been waiting to go public, in some cases, for many years. Let's talk about it all. Brianne Lynch is with us, Head of Market Insights at Equity Zen, one of the largest pre-IPO platforms for private shares. It's in the secondary market. And Brianne, look, are we seeing the creaking open? Is it companies that have to come to the market, or are we going to start to see companies that just want to come in this environment?
Thanks for having me. Now, if you had asked me a few weeks ago if we would be seeing positive IPO activity right now, I would have said no. But these few companies that have bit the bullet and decided to go out, eToro last week, Hinge Health, and Mountain yesterday, are performing well and are outperforming the market. So I think, we're not in a market environment where we'll see the floodgates open up, but for companies that need to go public for liquidity or other reasons, or feel like they have a really compelling story, they might just be brave and decide to, despite, the volatility there is.
What are those story necessities? It's interesting that CoreWeave now really outperforming where it priced, despite the initial volatility. So we've got an AI focus, you've got really services and consumer-focused businesses thus far. Does it have to be there, or could we even go into broader hardware and deep tech?
I think we can go broader into hardware, deep tech. There's other names that are on our radar. Cerebrus, one who has filed and has been on the IPO pipeline for some time now. But what's interesting is the companies we've seen recently. You have a fintech, you have a health tech, you have an ad tech company. So very different companies, but there are some similarities. These are older companies. They're over a decade plus years old. So there's a lot of investors and early employees who've been waiting a very long time for liquidity. Surprisingly, when you look at the two from yesterday, these are unprofitable companies as well. So it's a little bit surprising to see how well they've been received, given that they're not yet profitable. They're almost there. But it seems like maybe that's not a requirement now for public market investors when you're achieving 35+% growth rates and hundreds of millions of dollars in revenue. So I think there's a similar story we're seeing across some of these sectors. And another thing to note is these have been down round IPOs. The two yesterday, both raising in their IPO at valuations below their last round of private funding. And especially for a lot of these companies that last raised in 2021, 2022, I think that's going to be a reality in the market. So just some commonalities and things that we may expect to see as others enter the market.
Brianne, let's talk though about some of the pressures that can be taken off by the secondary market, because liquidity for employees that have been there a long time, liquidity for the venture that's backed them for a long time, it is actually getting far easier in the secondary market, right?
Absolutely. And what we've seen is the VC ecosystem as a whole is at this really interesting inflection point where it used to be raise capital from LPs, deploy that into early stage startups, have exits around the 10-year time horizon, return capital, rinse, repeat, rinse, repeat. That crucial exit at the 10-year timeline piece is not happening. And that's really driving more secondary activity. You saw Precursor Ventures gave a stat a few weeks ago that they expect 75 to 80% of distributions to LPs to be from secondaries over the next 5 years. And that's a huge number. And it really speaks to the liquidity crunch that we're seeing in the venture market. And secondaries are certainly becoming a larger avenue to address that.
Briefly, though, we've seen an interesting tech focus from VCs where they convert to be able to buy more on the secondary market, maybe even some on the public market too.
Yeah, absolutely. So we've seen this trend of more VCs registering as RIAs. Lightspeed is the most recent example of a VC firm that's done that. And that really allows them more flexibility to invest more than 20% of their portfolio into both public companies and secondaries. And while we've talked a lot about the secondary need on the sell side, there's also a secondary need on the buy side where these AI companies, they have just so much capital available to them. It's hard for most investors to get access to a funding round or get the allocation that they're looking for in, the latest AI startup. So they're also coming to the secondary market to either build or establish new investments.
Brianne Lynch, great to catch up with you. Thank you, Head of Market Insight at Equity Zen. Meanwhile, we check back on the big story of the day. Apple shares lower. Will we see a 25% tariff if they don't move more US manufacturing for the iPhone? This is Bloomberg Technology.
At Waccamaw Heating, Cooling, and Plumbing, we've been part of your family for years, just like these two, growing up, learning, and serving you better every day. From heating and cooling to now offering expert plumbing services, we're here for all your home comfort needs. Trust Waccamaw Heating, Cooling, and Plumbing, where our commitment to your comfort never wavers, and your home is always in good hands. We've been growing with you every step of the way. Give us a call today.
Memorial Day savings are going on now at Ashley. Summer is heating up with our incredible selection of hot buys, starting at just $2.99. Plus, pay over time with 0% interest for up to 72 months. Shop more deals in store, only at Ashley.
Storm season is here and we're ready to help keep your power on. Don't be left in the dark. Prevent power outages and all kinds of weather with a Briggs & Stratton backup generator. We'll determine the correct size for your home to keep all your electric devices running. And right now, get a $500 credit or a Visa gift card with a Briggs & Stratton backup generator purchase. No job is too big or too small. Call Mr. Sparky. We'll be right up.
Hey, Sparky.
Want to trade in one of the world's largest financial markets? Open 24/5. Earn cash back on every trade at tradingforexusa.com. We teach you Forex trading while paying rebates that boost your returns from cashback rewards, a game-changing advantage for traders. Join our free masterclass to learn the essentials, how Forex works, how to pick the right broker, and how to earn while you trade. Whether you're starting with $1,000 or $100,000, this masterclass will give you the edge you need. Secure your seat now. Visit the URL to join our free Forex class.
Hey guys, Bill Rockwell here, owner of Competition Cars, along with my brother Anthony, my new sales manager. So after 29 years in business, we moved to an awesome new location right across from the Tulsa Grand Mall. We still offer the same great cars, low prices, no dock fees, or warranty. And now we've added classic cars and exotics to the mix. So come see us at 541 Piedmont Avenue and check out our awesome new showroom.
And remember, Bill worked hard to earn Best Brand Dealer for 11 years, and I'll work hard to continue that tradition.
As we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
Startups need to be able to cross borders. We're also bringing regulations that stimulate enterprise rather than stifle them.
Premieres May 23rd.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
For Bloomberg audiences worldwide, I'm David Weston, and we're delighted to welcome the Secretary of the Treasury, Mr. Scott Bessent, to our studios in New York. Thank you so much, Mr. Secretary, for being here.
David, thanks for having me.
Particularly just fresh off a flight from Banff, all right, from the G7. And we want to talk about that. But first of all, while you're up there, you might not have heard, the House of Representatives actually passed a bill, the tax bill you've been talking about for so long. And give us your sense of the scoring, as it were, on that bill, because I know you're concerned about the deficit. A lot of people are concerned it's not helping us that much in the deficit.
Well, David, I think this bill is very important because, as I've said, our economic policy, Trump economic policy is really a three-legged stool. So it's trade, taxes, and deregulation. So this tax bill, first step, making it through the House, I think the permanence in the bill from 2017 is going to give, everyone's talking about, oh, there's not enough certainty now. Well, what I can tell you is this permanence is going to give great certainty. And I think the scoring, you and I have talked about it quite a bit. It's Washington-style scoring, and it's not real-world scoring. What I am concerned about, or have been concerned about, are we controlling expenses? Yes. Are we going to grow the economy and accelerate the economy and stabilize and then bring down the total debt to GDP? And I think this bill does a great job of that.
As you told us more than once, one of your goals is a deficit that's no greater than 3% of GDP. The scoring, the predictions on this bill as it's written right now is 7%, maybe 6.5% next year, not anything close to 3%. Now, you said we won't get there right away, but when will we get there?
Well, David, what I've talked about is something with a 3 in front of it by 2028. We didn't get here overnight. We're not going to get there tomorrow. But what we've got to do is change the trajectory and start moving it down. So could we get down to 6%, something below there with a 5 handle? Because what the scoring doesn't include, we have substantial tariff income coming in, so that's not included. We have DOGE savings in the hundreds of billions, that's not included. And then President Trump has made this very bold proposal on prescription drug pricing, which could save HHS substantial amounts of money. So none of those are included. So I'm very optimistic.
So let's include those for a moment here and start with the first one that you identified, which is tariffs. We've had some announcements even very recently about tariffs, maybe 50% from EU and 25% on Apple products. Is that motivation for that revenue? I mean, do you need those tariffs actually to go into effect to meet the numbers you need in deficit?
Not at all, because we have substantial revenue coming in now, and there is at some point there's an equilibrium rate, let's call it a Laffer curve for tariffs. And I think we will reach that rate. The other thing that's happening is a lot of their tariff barriers or non-tariff trade barriers. A lot of these non-tariff trade barriers are coming down, so friction's decreasing there. And again, because we don't know where these tariff negotiations are going to end up, they won't end up being scored. But it's several $100 million a year, several $100 billion a year of revenue that will be used. For every $100 billion, that's $100 billion less of bonds the Treasury has to issue.
When you talk about uncertainty and getting more certainty because of the tax bill, some of the uncertainty, a lot of it is because of tariffs right now, because we're not exactly sure where we're going to end up. Do you have a sense when the economic community, the business community, will get better certainty on tariffs?
Well, we've done the 90-day pause. As I mentioned several times, we have 18 important trading partners. So what everyone should really focus on are those. We've done a deal with the UK. My sense is over the next couple of weeks, we're going to have several large deals announced. We have put a pause and a 90-day pause with China. I expect that we will be negotiating in person with them again. And then the president today, when we initiated the pause and the 10% are moving down from the April 2nd rate to the 10% level was contingent on countries or trading blocs coming and negotiating in good faith. And I think the president was getting frustrated with the EU. The problem with the EU, I've said several times, they have a collective action problem. There are 27 countries. They all have different needs. The Germans, they are interested in cars, the French in agriculture. So, and then you have Brussels negotiating with them. Now, I am very impressed. I met my German counterpart, who's part of the new German government, the German finance minister in Banff, that he was very responsive. I think that the new Chancellor, Merz, is going to give a opportunity for a U.S.-Germany reset. So I'm very optimistic that perhaps Germany can help push the EU forward here.
Let's talk from something you know terribly well, have lived it in your professional life, which is the markets. The bond market hasn't necessarily stood up and applauded with what they've seen out of Congress. Is the bond market wrong?
Well, I think the notion that in any movements in the bond market being driven by the action in Congress is what's wrong. First of all, this has been a global phenomenon. That the Japanese yields have moved substantially, German, UK, and even if we go back and look, since either the beginning of the year or January 20th, when the Trump administration came in, the U.S. 10-year is the only yield that is lower today. So, all yields are up. And again, I think that was a coincident indicator. The market's very good at latching on to a story. So I'm not particularly worried about what the market's thinking because, on the other hand, what the market also could be thinking is that this bill is going to create growth.
At the same time, you have things like the term premium up almost to 1% now, and you also have real yield up well over 2%. Should we be concerned with that? Is there a question here about the long-term ability to repay the debt?
Look, I think that, again, as growth accelerates, I'm not worried about the U.S. debt dynamics because a change in the growth trajectory takes care of a lot of that.
I should be concerned when we see yields going up on U.S. Treasuries and the dollar weakening. Normally, that's not the way it works as I understand it. Is that something we should be concerned about?
Well, I'm not concerned about it because I think part of it is we are seeing other countries step up. So I wouldn't, on many of them, I wouldn't necessarily categorize it as a weak dollar. It's for the first time in much of my career, Europe is actually going through a fiscal expansion. Back to this new German government, that they are opening the German purse for the first time, maybe even since the advent of the euro. They're taking off the debt brake. So the fundamentals are driving the euro. Japan is seeing a large increase in interest rates driven by the Bank of Japan. So, I think a lot of this is other countries strengthening or other countries currencies strengthening as opposed to the dollar weakening.
You have said you're concerned certainly about the deficit getting under control, and that President Trump, and such thing you says that's really a priority for him to get down to something with a 3 beginning it at least, if not 3.0%. How high a priority is that? And let me push you on a little bit like Mario Draghi. Will you do whatever it takes to get it to that level so that if the present plan does not work the way you hope it will, you'll take other steps?
Well, I think what we've been trying to do, especially on the cost-cutting side, whether it's Doge, whether it's OMB, is go line by line. And on a lot of this, the Democrats are fighting us, the courts are fighting us. So let's see where that ends up. And of course, we can keep coming back in terms of making government more efficient. I think I've been there 3.5 months now, and I can tell you the amount of waste, fraud, and abuse is startling.
Yeah, I think most of us who have dealt with Washington would not disagree with that at all. The question is, where do you trim and how do you go about it? There was a $2 trillion number thrown out at a rally here in New York City, as I recall, by Elon Musk and Howard Lutnick. Was that a wrong number? Are you going to come close to $2 trillion out of costs?
Well, we'll see over what the scoring window is. Could we end up with 150 billion a year in savings, over the CBO window? That'd be $1.5 trillion. So,
but you're on track, you think, on the cost cutting side?
Well, again, there's a lot of resistance that the Doge and Elon were criticized for the pace they did. But I tell you, just in my 3.5 months in Washington, if you don't move fast, then the swamp kind of grabs you and you start sinking, and the vested interests kick in.
What other tools do you have in your toolbox to apply to the deficit if the present plan doesn't deliver all that you hope?
Oh, look, I think it's why don't we wait and see how this works out? Because I think we can see, as I mentioned, it's a 3-legged stool. So I think it would be the third part: trade, tax, and deregulation. So deregulation is the slowest moving part. I would expect that to substantially kick in to the economic growth in the third, fourth quarters and really accelerate next year. Also, one of the most powerful economic parts of the tax bill is the immediate expensing of capital goods, 100% for capital goods. And what we have added to that is 100% expensing of factory structures. So I think that could really accelerate the growth.
And as you look at this problem right now, what is your approach to making sure that we bring the U.S. economic machine into line, and particularly the business community and investment, most importantly?
Well, let's talk about two pieces. But so before I was with you just now, I was with a group of community bankers. So we are doing a substantial amount of financial deregulation to make sure that the benefits are more evenly distributed across the U.S. economy. That, as I said before, Wall Street's done great. Now it's time for Main Street to do well. Also, and they can both do great together. It's not an either or. So when I was with these community bankers, they were talking about the substantial amount of regulation that's been crushing them over the past 10, 15 years, and a huge amount of small business loans, huge amount of real estate loans, ag loans are made by these community banks. So we are really focusing on that. On U.S. business, we want to make the U.S. the most attractive location for capital. You and I were talking, I was just with the president of the Middle East. We were in Saudi, we're in Qatar, and we're in the UAE. And the trillions of dollars that are going to be pushed into the U.S.
One form of regulation that gets a lot of attention in New York and on Wall Street is banking regulation. Let's talk about the supplemental leverage ratio, which seems like an obscure thing off to the side, but it has been the subject of much discussion. And it does, as I understand, relate to U.S. Treasuries. and yields on U.S. Treasuries, so that if major banks held more U.S. Treasuries, it would bring yields down. You've said you're going to take more of an active role, as I understand it, with respect to some of that banking regulation. Where are we with that?
I think we are very close to moving the supplementary leverage ratio (SLR). There, that is moving along very quickly between the three banking regulators, the Fed, the OCC, and the FDIC. So I would think we could see something on that over the summer.
Over the summer, and knowing the markets as you do, would you anticipate that might have a significant material effect on Treasury yields?
Well, I think it could, because banks are being penalized for holding treasuries. There's a large supplementary leverage charge. So I think for holding the risk-free asset, we can reduce that. And I've seen estimates that it could bring yields down by tens of basis points. Certainly during the COVID crisis, it was temporarily taken off, and it had a big effect.
Let me ask something different, but I think might be related, which is stablecoin. If really we went big into stablecoin in this country, what effect could that have on the strength of the dollar? Because people might have to hold dollars in order to match against it, or even for treasuries.
Well, we are going big on digital assets. So Trump administration has made digital assets a priority. Past administration starved and almost made extinct a lot of these companies and pushed it offshore. So what we want to do is apply the highest U.S. regulatory and AML standards to digital assets, especially stable coins. And I've seen estimates that just over the short term, stable coins could create $2 trillion of demand for U.S. Treasuries and Treasury bills. To put that in context, the number is probably about $300 billion right now.
There are reports, including on Bloomberg, that there may be, if I can call it, privatization of Fannie Mae and Freddie Mac, something that's been talked about since I think they were nationalized, essentially, during the Great Financial Crisis. I heard the president say, I'm going to ask Scott Bessent about this. So has he asked you, and where does that stand?
It is a goal for this administration. Again, we're doing peace deals, tax deals, trade deals. So as we land some of those deals, then we will focus on that. But David, what I can tell you, we are doing a great deal of studying at Treasury, because the one requirement for this privatization is that they are privatized in such a way that mortgage spreads do not widen. And in fact, is there a way that we can make the spread between the risk-free rate and mortgages tighten as the Fannie and Freddie are privatized?
That was exactly my question. So do you know the answer to the question? Is there a way to do that? Because most people are concerned that will drive up mortgage rates.
Sure, there's several ways to do it, and we're exploring it. So we will move forward. Again, after we land some of the peace deals, trade deals, and tax deals, then we will work on this privatization deal.
One of your many responsibilities has to do with taxation and the IRS. I know that you are really pushing hard for modernization of the IRS. At the same time, we've lost a lot of people at the IRS. Isn't that hurting their ability to do their job?
So, David, my three priorities: collections, privacy, and customer service. And if we look over a long view, we haven't lost a lot of people at the IRS. There was a massive headcount increase from the Inflation Reduction Act and back to this crazy CBO scoring. By increasing expenses, there was the scoring that you would actually somehow up collections, which didn't happen. So we had a great collections year this year, came in above target. And this modernization program, the tech modernization program at the IRS, was begun in 1990. The young man who was in charge of it who I put in charge of it was not even born then. So that it's $15 billion over budget. It's a $3.5 billion a year budget. I think it's running on COBOL, which is I may have learned in college on 12 different systems. So we are going to fix that. And I think all three of my priorities are going to be served. And I think it could be substantial savings to the American people because the IRS roughly processes as many transactions as a mid-sized U.S. bank, which does it at 10% of the number of people, 10% of the cost.
President Trump said a while ago, posted actually on social media, that they were in the process of removing the tax exempt status from Harvard. There's been a lot of issues at Harvard, but that's one that comes within your bailiwick. Where is that process right now?
The president is moving forward with that, and we're also looking at taxes on endowments. And I think the important thing here, and it goes a little bit back to this Main Street versus the elites, that Harvard, to have a tax exempt status, there are rules you have to follow. And if you're not following the rules, no one's above the law. So we will see if they're following the rules. It looks like there's a substantial number where perhaps they weren't. And, again, too, Harvard is a gigantic hedge fund. They run a leveraged investment model. So we'll see where all that goes.
Is it Harvard alone, or are there other universities or colleges that also might be subject to review on tax exempt status?
I haven't seen that, but again, back to cutting government expenses. These things are more out of control. The universities, they are more out of control than the government. That there is a separate inflation index. It's called like the Index of Higher Education Inflation Index, and most of the expenses have grown at CPI plus 3%. So they need to get their houses in order.
Let's come back to Banff because you just got back from the G7 meetings, and the communique, as I read, really focused on imbalances. What were the imbalances you're most concerned about?
Well, I think the group as a whole was very concerned about the global imbalances around China, that China just keeps increasing their share of global manufacturing and has not done a much needed adjustment in terms of consumption. And as I predicted, I normally don't like to take victory laps, but I did predict it, and I was right. I said when the U.S. put up the tariff wall, that all those Chinese goods would go somewhere. And I think the G6 has seen that these Chinese goods are starting to permeate into their economies. They're quite worried about it. But there's a whole series of global imbalances. We have a large trade deficit with the EU, so we'd like to see more pro-growth consumer spending there. And but the real thing, when I think about China and the rest of the world, especially the U.S. In the U.S., we are trying to rebalance towards more manufacturing, mostly high-end manufacturing, not the kind China has. Everyone agrees that China needs to rebalance toward less manufacturing, more consumption. And is there a chance that we could do it together? What Ray Dalio might call a big, beautiful rebalancing.
So as I understand, I'm not a macroeconomist, as you know, but so as I understand it, when you have these trade imbalances, it means we're importing, buying more things, and we're exporting dollars, essentially, overseas. A lot of those dollars have been coming back to us in various forms, particularly in U.S. treasuries. Can you have a rebalancing, for example, with China, or with Europe for that matter, that doesn't necessarily raise the yield on treasuries because there are less dollars overseas to be invested in U.S. treasuries?
Oh, sure. I mean, these balances weren't always like this. In 2000, before the China shock, we've historically had big inflows into treasuries. But what used to happen was in the old days, trade would come in and then we would sell the other country a GM. Now we are selling them either a treasury bond, private equity, or Google stock. And that has a lot of distributional problems within the US. So that's how we've ended up with the coast or Wall Street doing very well, middle of the country, manufacturing being gutted. So, I think it's the composition of the flows coming back in. And then, as you mentioned, I think we can see more bond buying by U.S. citizens, U.S. institutions. But the other thing that I will say is, I have access to the data, and we've actually been seeing foreign national entities, whether it's reserve managers, sovereign wealth funds, or pension funds, have been buying more treasuries in the latest auctions.
So when we talk about trade, we talk about goods, sometimes services. What about capital flows and how capital flows work? There seems to be a movement in parts of the world toward stopping capital flows. I mean, we've had Macron in France say Europe can make it on its own. We've had Australia take certain actions requiring pension plans to invest domestically. Are we moving toward autocracy?
I don't think we have to. There's certainly nothing the U.S. is doing to prevent capital flows. We, except for strategic products, high value tech products. The rest, we want smooth capital flows globally. Could we see more people being more nationalistic? Maybe. But again, as we saw with these trillions of dollars from these Middle East countries coming into the U.S., the U.S. is the premier destination for capital. We are working to do everything we can on that. And David, back to your question on the money coming back into the bond market, that a lot of it's going to come back in the form of foreign direct investment, which is actually a much more stable kind of investing.
Let's talk about the dollar for a second and where the dollar is. I've seen some charts actually about the nominal value of the dollar versus purchasing power parity. And in fact, that there's been a growing difference between those, where the nominal value is well above PPP. I mean, almost at historical levels. From your experience with markets, does that have to correct itself? Does that mean the dollar's overvalued?
It doesn't have to mean it's overvalued, and lots of times that levels can stay, versus PPP, which is just an academic measure. Many currencies stay above their PPP equilibrium for a long period. And David, I can tell you that when I look at the amount of innovation going on in the U.S. vis-a-vis the rest of the world, everybody wants to come here.
So as you look forward, what is the thing that worries you the most?
That we are not able to, that somehow our agenda gets slowed down. That whether it's the courts, whether it's the Democrats, that's really what worries me the most.
And on deregulation, how long will it take till we actually see it in productivity?
Well, I think we're going to see it in the economic numbers in the third and fourth quarter.
In the third and fourth quarter of this year.
Yep.
That's fascinating.
Yeah, because again, that when you ask me what worries me, is this. Look, we need this substantial permitting reform, that we aren't able to build things, that we have, because of this AI boom, we're becoming the AI superpower. Well, that's going to take a lot of electricity. So you're going to need energy pipelines. You're going to need transmission. And the fact that it takes 3, 6, 7 years for the permitting. So what worries me is that somehow we get bogged down in a legal morass, because this administration is really trying to get America back to building again.
One of the things that people are interested in is the sovereign wealth fund. I remember, actually, as I recall, seeing President Trump sign an executive order with you in the Oval Office.
Yes.
And talking about it at the time. Where does that stand right now? Because some people say, if you're really going to try to build the wealth of the United States, you're better off cutting the deficit than borrowing money to put it in a sovereign wealth fund.
Yeah, I think the president's decided that it's on pause while we work on everything else that we're doing now. So, and he said the other day that it would probably spend more time paying down debt. He is laser focused on paying down debt.
And you're prepared, if it doesn't go the way you want to do other adjustments to make sure we are paying down the debt? Because some people are a little skeptical.
Well, again, let's talk about can you grow the denominator faster than the numerator? Like the reason we got here was, think about taking out a home mortgage. It's fine if the value of your house is stable or growing faster than the debt. What's happened is, the previous administrations took out a big mortgage. We didn't grow our way out of it. Now, I actually think that there is a chance that we can constrain the spending, up the growth, and that changes the trajectory. Because going back to this CBO scoring, which is alien to anything that makes sense, that if you cut taxes, they still scored growth of 1.7, 1.8%. If we raise taxes, and if this tax bill didn't go through, it would be the biggest tax hike in history, then growth stays at 1.8%. So, I think that we can accelerate growth here. So, my worry would be that somehow there is a glitch and the tax bill did not get passed soon enough. So, I would encourage our colleagues in the Senate to push for the July date that Leader Thun has.
Last question. Growth is critical to your approach and the president's approach. What growth are we talking about? What are you projecting and when? Because right now we're not close to 3% growth.
Look, I think we can get to 3% pretty quickly.
Okay. How quickly is pretty quickly? Months, quarters, years?
Quarters.
In quarters, we'll get 3%, you believe?
Yes.
Sustainable.
Yeah. Look, I think we are in the middle of, as I talk to industry, this U.S. innovation edge, we are starting to see real productivity increases like no other country is. I think with the deregulation, with the certainty from taxes, and with this full expensing, which from 2018, 2019, going into COVID, for the industrial economy really gave it big impetus. So, I'm expecting that by, certainly by this time next year, we will be north of 3, and that we will be turning the corner toward the end of the year.
Mr. Secretary, I can't thank you enough for being here. Really appreciate it. That is the United States Secretary of the Treasury. He is Scott Bessent. Back to you.
And our thanks to Bloomberg's David Weston and U.S. Treasury Secretary Scott Bessent. I'm Bonnie Quinn. Welcome to Bloomberg Real Yield. Let's look now at those treasuries, and we've seen quite the turnaround today. Treasuries selling off after the Truth Social about 50% EU tariffs going into effect June 1st this morning, rallying again with a 30-year now at 502.58. You remember.
All right, so it is Friday, so we'll be looking for some end-of-day runs, perhaps.
Right now, you have the 10-year yield right now to 449.51, and the 2-year yield there at 396.35.
All right, the yields are backing off a little bit. All right, hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday. We got a 3-day weekend, so be aware of it. Maybe take a few short-term intraday day trades or whatever. UEC pulling back a little bit. I'm looking to buy the $6 strike in December. Okay, the S&P is still off more than 40 handles. Okay, Robinhood. Okay, a lot of these stocks are just consolidating. What we talked about earlier was that the Bollinger Bands on the daily are coming together, which is telling you to look for prices to consolidate. Stocks like Meta are still fading a bit back to the 20-day moving average, the middle of the Bollinger Bands, looking for these stocks to consolidate. They could pull back further. Palantir is right in the middle of its Bollinger Bands right now at the 20-day. Excuse me. Netflix, same thing. Bollinger Bands contracting. Other stocks like SoFi, Bollinger Bands contracting. Looks like it's headed down to the 50 and 200-day. Nvidia contracting. Robinhood contracting. Meta. Okay. Bitcoin's running the upper Bollinger Bands, but currently off the highs of the noon session. Okay, low tech alert.
So I think, I think he did try and calm the market down around deficit all week since the downgrade. We'll be talking about the deficit, fiscal fears, and then this morning it was back to trade. I think he tried to take the temperature down, but it is going to come down to the fundamentals of demand and supply for long-end treasuries, which I think is an open question, and the economic.
To not overly celebrate when we're at a May 11th, and just keep your wits about you. I think valuation matters. I think how your position matters. But I think if you can go into this saying bombs are going to be, not actual bombs, right? News bombs are going to be dropped on us. Don't get too despondent, right? Euphoric statements are going to be made. Don't get too excited. I think you can actually get through the next 3 years with decent returns. Again, American business has a very long history of overcoming whatever's out there. And I completely believe in America. I completely believe in companies to continue to generate earnings growth.
We'll talk about one specific company that's in the crosshairs yet again today in a minute. But what's your view, Kev, based on how we started the program and how the market's reacting to those posts this morning?
Well, I think that's the dance that we've been accustomed to Jenny's point, and I think we need to continue to expect that volatility for the foreseeable future. When we were sitting here last week, it was a little bit too calm, and the VIX is up 30% just in a week. So the volatility is something you can play. To Stephanie's points, we're going to buy the dips, we're going to sell calls.
All right, so Bitcoin, I don't know. I'm not expecting a whole lot for the next hour or two. Maybe the end of the day we'll get something going. Let's see.
You came in yesterday feeling pretty good about things. Today change anything?
No.
Because of how I painted the picture at the top, the fool me once.
A little bit. Look, we're playing the hand we've been dealt. There's no room for moralizing about this, no room for complaining about it. This is the hand we've been dealt, and I'm going to characterize it. I'm not trying to be provocative, but this is kind of thuggish behavior. Apple has been told today, pay up. That's what they've been told. And now the negotiation comes. I'm sorry, Scott, did you not want to go there? Because I can talk about EU.
Since you just mentioned that, let's show what the president posted this morning about Apple. Quote, I long ago informed Tim Cook that I expect their phones will be sold in the United States, will be manufactured and built in the United States, not India or anyplace else. If that's not the case, a tariff of at least 25% must be paid by Apple to the U.S. You mentioned the EU threat as well.
It's the same thing.
So we got
It's
that
the same
as well.
thing. Everybody has to get their checkbook out, and there's optionality in how it gets paid. I mean, Apple had $100 billion of profit last year. President Trump is looking at that and saying, I want some.
I don't see much going on here.
Right? I mean, there are tax cuts on the way.
DoorDash.
But basically, he's saying, I want some of that. And it will be in part up to Tim Cook to decide how to pay it. It might be a check. It might be lower gross margins if he actually does try to manufacture iPhones here in the U.S., which I think is somewhat farcical. But basically, what President Trump is saying is, I want more money for the federal government. We can moralize about whether that's thuggish behavior. We can complain about
Oh, geez, come on already.
And it's best for everybody to deal with it as the market is today, down less than 1%.
Bitcoin still fading a bit. I sense that there's not a lot of people interested in trading at the moment. It's like a lack of momentum. Let's see what else is working here.
Spending cuts, so I don't even think that what happened this morning is a coincidence related to any of that.
I think you're exactly right. Thank you, Scott. I think you're exactly right. The world now knows we are not going to cut spending. I mean, let's not complain.
Netflix,
He wants whatever revenue he can
Microsoft.
get, whomever he can get it from.
That's exactly right.
To help offset the cost of the tax bill, which he's not going to waver on at
Microsoft was in an upward sloping channel that did break today, broke a little bit lower. Looking for some opportunities, but I'm not eager to jump in because we were taking profits off into strength over the last few weeks. Short-term options. Last week it was Friday options we were looking to get out of, and this week we had some on looking to get out. Wednesday, Thursday. We had to wait until Thursday because Wednesday was a pretty bad day. Monday and Thursday were pretty good for the S&P, so maybe we'll get a little bounce here, get a reprieve. Basically, it's this week, given the pullback that we had Wednesday and again this morning, net positive, but it's not a momentum week for sure.
Conversation again. How likely is it, or possible, or feasible is it for Apple to start building iPhones here in the United States? And the answer,
Please, people, we know that they're not going to build iPhones here.
We just don't have the labor force in which to
they're going to beat this to death.
That the Chinese labor force and now increasingly the Indian
Next subject.
Is capable of doing this.
Okay, Netflix, Microsoft. Okay, we're right below that 5,800. S&P is right below that 5,800 major gamma level. Okay, there's a lot of negative gamma there.
I believe it was last week or 2 weeks ago that maybe the next lineup of iPhones will get a price increase, likely due to tariffs, but they can, give whatever reason.
If we were to pop above 5,800 for whatever reason, if we got above 5,800, we could see a run. For now, this is just resistance, 5,800.
$1.5 billion being invested again into India for a Foxconn plant to just expand that footprint even bigger. Remember what Tim Cook told investors, Scott, just a few weeks ago on that earnings call, saying we're going to move as much production from China to India as we can for those U.S. iPhones. That's approximately 65 million of those a year. They're not there yet, but again, that spending is going to get them there. And then Vietnam is going to be the source for things like accessories and MacBooks. So that is not the United States.
Bank of America, nice bounce today. Bank of America off of the 200-day. What do the banks look like? They were looking good a couple of weeks ago. JP Morgan, I didn't look at them last week. Still fading. Okay. So the previous few weeks, we ran up to that 269, 270 zone. We faded for the last week. We're sitting on the 21-day. Maybe we come in on Tuesday and this is higher. Okay. JP Morgan, Goldman Sachs. Okay, let's look at the sectors. XLB, materials. That's okay. XLC, communications. It's okay. Everything is fading. And notice where RSI is pointing on all of these. XLE, pointing lower. XLF, financials. We were looking at the banks, moving lower. Industrials, moving lower. Tech, moving lower. Back to the 200-day. Okay, so this is telling you to look for more of the same for now. If you get pops, take some profits off, reassess your positioning, especially if you're trading options, short-term options. Or you don't want to sit and hope that something's going to work for you. Just take them off for now. If you got a nice profit, wait for the dip to get bought. That'll probably be Tuesday at the earliest at this rate. Consumer staples, we do see some buyers at the low of the day. Consumer staples. All right, so we hit the low and making higher highs and higher lows. Watch consumer staples. That might work. Healthcare. That's continuing to show weakness. Healthcare. What do the pharmaceuticals look like? IHE. That's still weak. Utilities. Above the 200-day, above the 50-day. Buyers at the low of the day. Utilities. Fixed income. And XLY. Consumer discretionary. RSI. RSI is moving lower in all sectors, all 12 sectors. XRT. So to expect upside move, not the best scenario.
Supposed to be all about the developers and AI and everything, but this is the overhang, and I suspect we'll be talking about it a lot between now and then. Steve, thank you. That's Steve Kovac back at our HQ. So we're below 3 trill in market cap yet again for shares of Apple, below 200 bucks. 8 straight down days would be the longest streak since January of 2022. Kevin, what do I do?
I think you hold Apple here. I don't think this is going to skyrocket in the next few days.
I blow this off? Just what do you think?
I wouldn't blow this off short term, but Scott, what I'm more worried about intermediate and longer term is what happened yesterday with OpenAI, ChatGPT, and Johnny Ive. Because the Guardian said it best. They said that the next great iPhone moment may not even come from Apple. Because if they're building the next generation of hardware that we can use this ChatGPT product and bypass the phone, to me, that's a lot more scary than a threat on a tweet for 25% tariffs made in China.
Can I ask Kevin a question on that? Kevin,
By all means.
okay, so you think you hold Apple. What do you think? What do you think if you hold Apple in an IRA versus a taxable account? Because everyone who has it in the taxable account has a huge capital gain. So you kind of need it to go down 15 to 30%, right?
So I never let the tax tail wag the dog.
Okay.
It's irrelevant in all of my thesis because it just comes down to math. But certainly in an IRA, you know me really well. I would want to write covered calls against it actively because you have no short-term capital gains in the IRA. We do the same thing in taxable accounts. But this was a stock that we sold out in December around 247 and a half.
No, he's out.
So here at 200, I'm still okay.
We
But for your clients that have low cost basis, I think writing covered calls or just putting it stops, paying the tax is better. Think of NVIDIA when it was 150 and went to 88. No one sold it because no one wanted to because of the tax consequences.
If I could also just opine on here, I mean, maybe expectations just need to be brought down for Apple in general. We had that period of time through 2021 where it annualized at 45% annual returns. Remember this for like 3
he has
years?
no
And
positions.
since then, it hasn't had anything. I'm looking at the 3-year return. Well, look at 3-year return, 10% annualized below the S&P 500. But what if it just grows at the S&P 500? And it should because of how representative it is.
Yeah, my son has no positions. There's no need to do anything. You got RSI moving lower on all 12 major sectors and the subsectors. That's telling me you're going to find occasional outliers that do move. Okay, like right now we got Intuit. Let's take a look at the stocks that are moving Intuit that are bucking the trend right now. Intuit gapping up, but is fading. Constellation Energy, number 2 on the NASDAQ 100, trending. DoorDash, I have, what do I have? I have an Iron Condor on this one, I believe. The put side expired. Nope. That was a different position. Okay, I have the 175, 180 put credit spread. 175, 180 put credit spread on DoorDash. Okay, so 175 is down here near the 200-day and this previous low. Okay, so DoorDash, let me just mark this up. I have the 175, 170. Don't make this green because that's the long side. So dash. Put credit.
You know, I brought this up the multiple yesterday. We talked about it because remember, like
175.
Like 11, 12, 13 times earnings when it really was a
180.
I thought about this in the last 24 hours, and the big difference here is the services.
Okay, so I have the 180, 180, 175. Okay, so looking for prices to continue grinding higher. DoorDash with a nice bounce. I'm bullish DoorDash. I just decided rather than buy options and have this consolidate for the next few days and kill my theta, I would go ahead and sell, put credit spreads, and capture theta instead. So this is a bullish trade. I'm just not looking for a lot of momentum. As you can see, Bollinger Bands are fairly wide. So long as this stays, so long as DoorDash stays where it is, moves a little bit lower or higher, this put credit spread will do fine. Let's see, spreads condor. Okay, the other one, another one that I have a position on, Snowflake. Snowflake, what's that doing? Snowflake, that's up. Okay, Snowflake. I think I might have marked this one up already. Snowflake, here we go. No? Okay.
I'm not so sure they get AI right. Okay. I think
All right, Snowflake.
out there, just like we've been talking about threats.
I took an iron condor.
But I do think there are still
Okay, I have the 200. So that one just out of the money right now. 200, 205. This one is a short.
I know this is the third time I'm saying it, but when money flows into the markets, it's going to flow into Apple.
And I have the put 155, 160, 160. 160 is right below the 50-day. 155. Okay. This side I rolled out. This side rolled out. Rolled out a week. Jenny, I like Jenny. 200, 205, 200, 205 calls. Okay, so that's the call side of the iron condor. So that one is right at the money. So I gave myself another week to work on this. I'm thinking it's going to pull back probably into the Bollinger Bands. If it doesn't, I'll roll it up and out another week. This side expires today. Okay. The put side today is at 0 now, so it's irrelevant. 160, 155 put. Okay, so this one will expire worthless.
But I'm still so ingrained in the Office ecosystem that if they get it right, just like the Apple product, I'm not going to go elsewhere to try to find an alternative.
Okay, so this one it's expiring today. That's 100% profit. Okay, so this expires today, the puts. So let me just save this one. Okay, another one. I did one on Dollar General. I did a put credit spread. 85.90. Okay, so I don't think I saved one for this Dollar General. I'm just going through and marking these up. Give me a few minutes. DG Dollar General. I took a put credit spread on Dollar General. Okay, and I'm short. I'm short the 90 right here below the 50-day. And I'm long the 85. Okay. That is the June 20 June put credit. Made the case that at least they had traffic growth. Okay, so the game's changed. Why 90.85. Because 90.85. The stock is down so much, and I think the numbers, even at the low end of the range that they're giving, by the way, they gave a range as opposed to Decker's, not today, not giving a range, so at least they gave a range. All right, so I'll let this just kick in. Yeah, it's not going to go anywhere near term, but I just have a hard time selling it because I do still think that there's value to the brand at the company. I do still think they are doing a decent job in terms of what they can control for the most part. Okay, hope everyone's having a good day.
But this is the hardest part of the investing game. Yeah. It's hard to sell emotionally a stock that's down a lot.
So sell premium, Wapner. Instead of getting all wound up about what Target's going to do, just sell premium. Okay, so Target, what I would do on Target, I wouldn't do it right now because Target Bollinger Bands are very tight. Okay, I would only wait until implied volatility picks up, and then I would probably sell some premium on Target. If it starts to move higher above the 50-day, I'd probably sell the 85, give myself about 45 to 60 days, sell the 85, buy the maybe 75 or 75, 80, something like that. I think this is probably played out from the downside. So it needs to get above the 50-day. 50-day needs to turn up. So instead of mashing the idea over and over, target what's it going to do? Sell premium. You know, while everybody else was trying to get their positions to work. Okay, NVIDIA. Okay, Meta's starting. Okay, Meta's coming out of a squeeze. Meta. I'm surprised by the CEO and this management team that they haven't been consistent. But I'm not taking the L because of emotion. I'm not taking the L. I'm not taking the L because I still believe in the brand and I still believe. All right, Meta's coming out of a squeeze.
Gap's going to report next week. How do you feel about that going?
Okay, Meta. Okay, let's just check Meta. I'll come back to this in a minute. Let's check Meta. Bank of America looking better. Meta. SPY starting to rise. So Meta's coming out of a squeeze. Which way is it going to go? Okay, first off, I don't see any supply immediately overhead. It's not until 638. So we got $7 upside. Follow me on this one. Meta. Okay, so Meta pulled back below the 20, the 90 MA. Okay, it has an ATR of $20. It dropped 6. Can it get back to 0? Can it get back to 0? Okay, watch Meta. Watch Meta. This might be a play here. This might be a play. We've got a fair value gap. We need to see more fair value gaps if we break above this level. Okay, watch for the volume is very, look at the volume right there. Okay, watch TTM. TTM, we got a squeeze on. Okay, that might work. Yeah. Yeah, that would be cool. Okay, Tesla turning. Tesla's turning here. All right, these might get something going here, folks. Okay, I might try a Meta trade for today. Something cheap, maybe a 40 delta instead of a 50. Expiring today. It's cutting it close, right? Meta. But let's see if this gets going here. It looks like it wants to. It looks like they're going to do something here. Meta. Haven't done many plays today. Bought some Oklo shares. I sold the options. Bought shares with that. I bought some CCJ Kamiko. Sold puts. Sold the puts at the low at the open this morning. So it's been a pretty fruitful day so far. All right. Looks like Meta wants to go here. Let's see. 6. Can we get 634? What's 634? What's 635? 635 is 50 cents. Okay, I'm going to buy a few of these, see what happens here. I'll buy a few of these. Okay, 50 cents. Okay. All right, that's an 18 delta. So I usually won't do that. I usually won't do an 18 delta. I usually will do like a 50 delta. So maybe I'll buy some 630s too. That's a 50 delta. Those are $2, 220. If this breaks higher, that would be kind of cool. Watching Meta for a break higher. Yeah, looking for after the last couple of hours volume to pick up. Tesla looks like it wants to do something here. Tesla. Okay, that's fair value gaps on the break here. Okay, there's no overhead supply right in this area. Okay. So you see that fair value gap right there? Okay, supply is up there at 345. 345. Can we get something moving here? Okay, we need to get a follow through.
235, got pulled out at 255 to trim it. We wrote calls on it at 290 and had it called away. So this morning on the pullback with the tweet news, we added some shares at 282. It's an aspirational
NVIDIA looks like
person
it.
trying to get
All of these stocks are above their pre-market zone, PMZ. A couple of you asked me about PMZ. PMZ is the 15 minutes right before the open.
There'd have to be three of us spending to rate the
And we'll use that for a reference point during the day.
I've seen how he rolls. Jenny, you own AXP.
Yes.
Good buy here?
Yes, I mean, this is such a long-term holding for us, and I actually added it the other day to portfolios who had come in with new money, and we've held off because it was up so much, and now it's down so much on the year, so added it here. The earnings growth is just remarkable. You know, it's consistent mid to high teens, kind of forever. So, yeah, and economic
American Express right above the 200-day. Jenny's talking about American Express.
I just keep buying it. Like every time it goes down, it was down 5% on, the phase out of the clean energy bill. We have no idea what's going to happen with the clean energy bill, but this company does not need it to grow. They had a record backlog last quarter at $35 billion. They beat, they raised. We're going to spend $4 trillion on electrification and the grid upgrades between now and 2050, and they are absolute beneficiary of that.
Power. So Stephanie talking power. Ooh, that looks good. Sitting on top of the 21-day.
Vernova, you also own still.
Yes.
Constellation Energy. You still own
No,
that?
I don't.
That's
No,
not
I never
you.
did. No, I never did. But I do own GE Vernova. I own Rockwell. And Eaton. Yes, I own a lot on this theme, and I
That's
like
what I
the
was
theme.
thinking of.
Yeah.
I got it confused.
No, it's all about the same thing. I mean, look, if you believe in AI, then you have to believe in the data center. And we're undersupplied in data centers globally with 11,000, and you need an upgraded grid to make the data centers work. And then you need power to make it all work. And so those are four themes right there that I am hugely bullish on for the next decade.
Okay, Kev, you bought Boeing also.
Yeah, the grid definitely needs to be upgraded. Palantir, BNC pivots, Palantir. Okay, Bitcoin did fade back to the 9 o'clock pivot. 905, 910, we pivoted right here. We hit a pivot low and Bitcoin moved off of this level. So we're looking for buyers again. Not expecting a lot, being it's the end of the week with a long weekend. 3-day weekend. Not expecting big moves.
If they reinstate a dividend, we'll look at it in the dividend story also. But this is a stock that couldn't get anything right. Every headline was horrible. Same as United Healthcare. So I think given enough time, we're looking at this as a new trajectory, and I like the way the administration is pro Boeing. Maybe their best salesperson.
You obviously still own Boeing.
I do.
You like some headache stocks.
I have a lot of headache stocks, but when they work, you feel really good. I'll tell you that. Kelly Ortberg is really a rock star so far. Last quarter, they had a decent quarter, but it's the first time I actually saw their margins in their commercial aircraft business up 290 basis points year over year. It's been years since we can say that. So they have a great backlog, over 5,600 claims in their backlog, 7 years worth. And I think the story is really just beginning. I don't think a lot of people own this stock for obvious reasons. They were right not to. But I think this has changed, and the culture is changing. It has never been a demand problem. It was always a supply problem and an execution problem, and that's really turning
Quality control problem.
Absolutely.
Right?
100%.
All right, let's get the headlines now with Silvana Henao. Hi, Silvana.
Hey, Scott. Good afternoon. A district judge has just blocked the Trump administration from revoking Harvard University's ability to enroll foreign students. The judge's orders means Harvard's international student body can remain enrolled there for now. Earlier today, Harvard filed a lawsuit against the administration, arguing the government's action violated the First Amendment and was carried out without process or cause. 2 Democratic senators are calling on the Justice Department to prosecute Boeing in a criminal fraud case stemming from 2 fatal crashes involving the 737 MAX jet. In a letter today to the DOJ, Senators Elizabeth Warren and Richard Blumenthal wrote the department shouldn't sign a tentative deal that would allow Boeing avoid pleading guilty, as it would let Boeing, quote, weasel its way out of accountability. And in Norway, a man woke up early Thursday to find a 443-foot-long container ship in his front yard. Local law enforcement said they're investigating what caused the ship to veer
Okay, I like in Quanta, but I'm probably going to wait until next week on this one. I don't want to put money back to work too soon, okay, because RSI is fading on all 12 major spider sectors. RSI has been fading back towards 50 in all cases, all 12 sectors. So that's telling me there's no big hurry. Day trade's one thing, but we've been taking profits along the way after the Trump bump on April 9th. The markets pulled back a little bit below the 21-day, and then they took off to the upside. Over the last few weeks, especially over the last 4 weeks, 3 or 4 weeks, we've been taking profits off. So I've been collecting a lot of cash. I'm about 20% cash in my trading account. The 401ks, IRAs, the longer term accounts are about the same, really. I'm looking for the break and for the trend to start above the 200-day moving average. Long as the next pivot, if we move higher next week, and the Zweig breadth indicator, all of these continue to look good. Okay, we're looking for break higher. As you know, when this triggers, the last time it triggered was 2 years ago, back in 2023, November. Okay, November 2023. And when it did, the markets gained nearly 2,000 points. Okay, so it moved from around 4,400 up to 6,150. Okay, last time this triggered. The reason why it's important is because Marty Zweig back in the 80s determined in a lot of his studies of the New York Stock Exchange that if you take the number of stocks that are advancing on the New York Stock Exchange and you keep a ratio handy, which is the bottom chart, keep a ratio of that, the New York Stock Exchange advancing stocks compared to the total number of stocks traded on the New York Stock Exchange. When you compare those two and you get a surge in buying, it's indicating that institutions are active and buying. So you want to buy that dip when that happens. Okay. So that happened towards the end of April, about 4 weeks ago on Thursday. If this continues, more than likely will. We're looking for a higher low at some point, but we don't have it yet. We don't see it yet. Okay, we got a high tech alert just now, so maybe we get some follow through. But I'm looking for consolidation, more consolidation. You got all 12 sectors pointing lower, RSI pointing lower. So that's telling me you're going to get some bounces, just short covering and a few day trades. But for the most part, we could wait until next week. That's my read. So you can do what you want, but I'm not taking a lot of risk on. Okay, looking for Tesla to bounce and follow through. I'm looking for Meta to do the same. Okay, Meta looking for the break above this level. Tight squeeze on the Bollinger Bands. Netflix is trying to go. Watch Netflix. Netflix is trying to go. Netflix trying.
Maybe that's the whole rationale, but I don't really correlate higher rates with energy stocks specifically, but I'll take it because I do own SLB and talk that.
Yeah, I mean, there are Conoco's on there, Halliburton's on there, EOG, Exxon. In terms of regionals, M&T, Fifth Third, your point's really well taken. Regions Financial makes the list. There are several.
Yeah.
Baker Hughes, Diamondback, Hess on the list. Farmer Jim, ExxonMobil, and JPM. You don't have to give me anything on JPM.
No, I know.
But that well, but what about Exxon?
I mean, this clearly is a list that is talking about pro-growth reasons for nominal rates to be higher, in which case, okay, ExxonMobil benefits probably from both sides. Prices are higher and volumes are higher. And then, look, there's some curious names on this list that besides this, United Airlines, airlines are highly indebted companies, and same with ExxonMobil, which has $30 billion in net debt. So this isn't because they benefit from higher interest expenses. No, this is saying that we're going to have higher nominal rates because the world is growing, which is what we've seen interest rates across the globe going higher, presumably because growth is going higher with it.
Are you suggesting by It sounds like you're criticizing the fact that United's on the list, but your Delta is not on the list.
Delta's got debt too, but
am I warm?
You're warm, but let's extend it because Delta's actually been paying down debt at a rapid clip. So it might, that might be interesting. I think it actually would be a bigger beneficiary because it's going to have the same boost if you've got pro-growth, more travelers, but it's not going to have as much interest expense. I think the list is very curious and one I'd like to keep track of because this is clearly because of pro-growth. If you get stagflation, if you get higher rates of inflation and poor growth, this is not going to work.
Does United have a larger global flight footprint?
They're comparable
than Delta does.
They're comparable, and to the extent that any of these, the top three, American, Delta, or United, has a space missing, whether it's Korea or Italy or whatever, there's all the code shares that go on with it. Those three have excellent global coverage, particularly through their partnership.
Charles Schwab is on the list.
So to me, this is the easiest and the most obvious of all the stocks on the list. Schwab's growth is predicated on their assets growing.
Okay, not getting any follow through on that S&P pop there.
So in a pro-growth environment, they're just the most easy to enjoy. They've got 33, 19, 18% earnings growth ahead. The more we grow, the higher those numbers get. It's easy.
Do you want to do something quick on JPM since that's yours?
I would only reiterate what Stephanie said about net interest margins. If you have banks that are lending and interest rates go higher, their profitability increases on all the banks.
All right, Santoli's next with his midday word. We're back right after this.
All righty. Let's see. 30-year Treasury moving off of the highs. 30-year Treasury yield. What else I want to look at here? What's the German Bund? German Bund sideways. Japanese Treasury, the 10-year Japanese Treasuries continues to climb. Okay. Junk bonds. Okay, everything is telling us to be cautious. Look for more consolidation. Everything I look at is telling us to be cautious. We need to break out of this consolidation. The consolidation is, I won't say required, but it is expected, and we're seeing that. So I guess everybody's come to the same agreement that we can consolidate up here in this green box. We came down to the 200-day. Is that enough? Okay, I don't know. But, we're definitely consolidating. Okay, at first I was hoping that we would get consolidation. We'd get some consolidation in time, just move sideways. That's not the case anymore. We know that here's the low. Yesterday's low was 2.25%. We're down, what, 3 something? 3%? Okay, previous daily high and low. Okay, previous daily high and low. Pretty tight. Okay, we gap down to the 200-day. Now we're down. Oh, we got to bounce. Just shy of 3%. Shy of 3%. I'll just keep this down here. 3.27%. Around 3.3%, more or less, at the 200-day. That might be enough. The 50-day is turning up rapidly. You can see that turning. Okay, the 21-day is turning towards price. RSI is pointing lower, so that's telling you to be cautious. I've been taking profits off in the strength for the last few weeks. I'm sure you're tired of hearing me say it. Some day trades, we broke this down to now things are starting to get oversold. Indicators are starting to get to a point where they could turn. So next week we'll see something maybe, and maybe the options will update and we get more positive gamma. Okay. Okay, S&P 500. And Meta is squeezing up against this level here. Let's see, I'm watching Meta for a pop. Meta.
Senior markets commentator Mike Santoli here with his midday word. to this idea that Vital Knowledge puts forth today that the
Palantir turning up. Palantir. Just check Palantir real quick. PLTR. ABCD pattern on Palantir. There's your A pivot. That A pivot at 10:15 pulls back. A B pivot looking for C and D. Right at the 21-day moving average. Looking for a bounce back into the top of the Bollinger Bands. Or if you're bearish, you should be looking for a move below the 21-day. I'm thinking more long term on this one as it continues to grow. Okay, Meta. A lot of people are short Palantir, so we could get a short covering rally. Okay, watching Meta.
Now you're at 22 on the VIX, and heading into a 3-day weekend when the market's not going to move, and in theory you should be bleeding premium. So the hedging instinct was reactivated, and I do think that's probably a pretty.
Watch Palantir. Palantir is starting to scoot higher.
3% coming into this year, but it does show you though the market's just not going to be quick
PC.
to sell everything in panic just that soon after we got
Tesla.
backpedaling on the tariff policies a few weeks ago. And the fact
Tesla's trying to go. So is Meta. Nvidia.
Probably tells you that there is a little bit that reflex in there that says we don't.
Okay, so a lot of these stocks are right at the pivot. Now, check out Nvidia, for example. Look at Nvidia. Okay, so it's right at this pivot, squeezing. It's showing you potential for this to pop. Okay, Nvidia. Okay, Nvidia. Okay, squeezing, ready to go. Maybe they run this for a quick trade.
So it's not to me saying that that's going to define where we go, but it probably makes sense that we'll stay on even footing in terms of heading into that catalyst. All right. I'll see you at 3 on closing bell. It's Mike Santoli. All right. Nvidia is not the only one coming next week. We got the
Nvidia earnings next week. Okay, Nvidia. Earnings next week. Tesla. Meta. Do. There goes Palantir. Okay, Meta trying to go. Okay, watching Meta for a pop here. Nvidia, these are all set up exactly the same way. These could get rejected. Lately, that's been the case. We've been looking for these pops in the day on a Friday, and they just didn't materialize. This one, we've got supply way up there at 638. Okay, Meta looks like it wants to go. Supply at 638. Watch for a fair value gap. Need a fair value gap on a breakout. Okay. Supply overhead.
basis 6 months. So I'm going to use that as a proxy for
No sugar tonight.
Got about 3.7%.
No sugar tonight.
That they're going to be reporting next week. They are expecting sort of a low quarter from an earnings standpoint. They're expecting 86 cents, only higher by 41%.
Meta's starting to squeaking above.
That used to have 200-300% comp growth rates year over year when they reported earnings of the last 6 or so quarters. But that's, again, like I said, 41% over 61 cents from last year. And sales are still expected to be quite robust, albeit decelerating to 47.71 billion, higher by 64% compared to 26.04 billion for the same
No
quarter
sugar
last
tonight.
year. Data center revenue is expected to come in
Great song.
higher by around 41%.
Great song.
About $38 billion.
I was listening to that on the way home from dropping the sun off. Watch Meta trying. Okay, Meta. Right.
As well as robotics, and that segment is actually expected to increase by 76%. So maybe if we look at the growth rates, we should start looking at NVIDIA from a software and services standpoint. I'm sure they'll give us a lot more updates on their call in that area. But at the same time, I think the areas of industrial automation, robotics, factory automation, and automotive is another area that I think is very interesting here. Look at Tesla. Since the lows that we saw going back to early April, is that moving on autos? Not necessarily. Maybe moving on robotics and autonomous driving, and that's essentially computing power that is deployed by NVIDIA's architecture.
Okay, Palantir is still rising. Microsoft's starting to go. Watch Microsoft. This might go too. One of these will probably go. Microsoft. Note the supply is up there, 454. Microsoft.
It looks like they're replacing those chips in the Middle East with Saudi Arabia and new customers over there. Jensen Huang, a company, President Trump, as you know. And then, George, you start asking that same question that you ask about Tesla. And with a company like NVIDIA and a leader like Jensen Huang, what's in their pipeline? We know there's a Rubin chip waiting in the future, but what else is there?
Okay, Meta. Let's go, Meta.
Well, I think,
Let's go, Meta.
Platform, which is all about parallel computing as well as essentially their software ecosystem on top of the hardware. I mean, I think NVIDIA at the end of the day is going to be one of these companies, irrespective of competition in their hardware segment. In other words, their GPU chips. Huawei's competing. AMD is still out there, but they're moving more in the inference and data crunching versus
I like the Guess Who.
space. But that competition down the road, I think NVIDIA is preparing for that. And I think they're preparing through vertically integrated software and services. But I think the robotics. I think everyone's going to be looking at robotics. If you look at Tesla, that seems to be the theme around what Tesla's doing. And I'll say this lastly, when you look at NVIDIA's growth rates, just this quarter, it was 65% or so sales growth. They're still expecting 60% growth rates next year. But the earnings multiple next year is around 23 times. So it's trading at less than 1 time next year's growth. So
No sugar tonight in my coffee. No sugar tonight in my tea. That's a great song. I don't know. I really like the band. I like the Guess Who. Come on, Meta. Let's do this. Let's do this, Meta.
George, great discussion. As always, we'll let you go for the day. Have a great day, George, and a great weekend. We'll see you soon. All right, now.
Paticus, you obviously know the song. Good one.
NVIDIA next week has earnings on Wednesday after the bell. We're going to look at something in the calendar spread family where you buy the June 6th expiration and sell into the event.
Okay, let me make sure I don't have anything expiring in the money today. Snowflake. All right, Snowflake I already talked about. Snowflake, I have Iron Condor. I rolled out the call side because we are right at 200. I can't get the song out of my head now.
85 cents. It was trading about 80 cents. It's drifted a little higher to 85 cents now, but that sells that front expiration, the event expiration of next week, and buys a week out. It's looking for a move inside, right at that expected move level. Remember, when you do a calendar spread, your target is the short strike. So in this case, it's $140. If that's not, remember, you could do the 120 put calendar as well. The risk on their trade is the debit paid, and you're looking, like I said, you're collecting data and looking for a move towards that short strike. So this is a trade that gets you ready for the earnings event next week, buying the June 6th and then selling that event date of May 30th. Remember, they come out with earnings May 28th after the bell. So that's our show for today, everyone. Have a great holiday weekend for all of us here at the Schwab Network. We'll see you on Tuesday with another edition of Fast Market. Have a great day.
All right, so we're still squeezing. Meta still squeezing. Okay, I am going to take a couple of minute break. Maybe make something for lunch. All right, I'm going to go ahead and listen to Bloomberg for a minute. I'll be right back. Give me 5.
Just came out in a foreign country and getting off the airplane to find out that this decision had been handed down by the Trump administration. And I think it's really destabilizing if you think about, international students who are returning and trying to figure out whether or not they will be able to do so. It's worth noting that Harvard's commencement is next week. It's on Thursday. And so we will see that those graduating seniors, continue to be able to do so. But I think for the younger students, it's really a question mark right now. And as you mentioned, there was an injunction on this move by the Trump administration. And the question is that enough for some of these foreign students? Do they feel confident enough in Harvard's ability to prevail in this legal fight to continue with their matriculation, or would they try to get ahead of it and look for transfer options?
Absolutely, and I'm sure a lot of them have already signed leases as well for the next academic year. Bloomberg's Brooke Sutherland, she is our Boston bureau chief. Thank you so much. I'm Scarlett Fu, and that does it for Bloomberg Markets. Balance of Power is up next with Kaylee and Joe. From New York, this is Bloomberg.
The Memorial Day mattress sale is going on now at Ashley. Save up to $500 on adjustable sets from Tempur-Pedic. Plus, get 0% interest for up to 72 months with select mattress purchase when you buy in store. Shop more deals in store, only at Ashley.
Here they are, with crispy strips, long, tender, juicy chicken made for dipping, or rather, double dipping. But why stop there? Keep going. New McCrispy strips now at McDonald's.
As a real estate investor, I look for sharp agents who really know their market. Agents who do so much business that they can find me the right investment property and sell it for the most money without drama. When I need real estate advice in Myrtle Beach, I call Mike Sloan. This innovative marketing attracts hundreds of buyers every month, which creates more demand for your home, selling it faster and for more money. He guarantees to sell it on your timeline or it will. Agent I trust, Blake Sloan, and avoid the drama.
Hey guys, Bill Garofalo here, owner of Competition Cars, along with my brother Anthony, my new sales manager. So after 29 years in business, we moved to an awesome new location right across from the Tulsa Grand Mall. We still offer the same great cars, low prices, no dog fees, or free warranty. But now we've added classic cars and exotics to the mix. So come see us at 541 Piedmont Avenue and check out our awesome new showroom.
And remember, Bill worked hard to earn Best Brand Dealer for 11 years, and I'll work hard to get to me that furniture.
Storm season is here, and we're ready to help keep your power on. Don't be left in the dark. Prevent power outages and all kinds of weather with a Briggs & Stratton backup generator. We'll determine the correct size for your home to keep all your electric devices running. And right now, get a $500 credit or a Visa gift card with a Briggs & Stratton backup generator purchase. No job is too big or too small. Call Mr. Sparky. We'll be right over.
Hey, Sparky.
Want to trade in one of the world's largest financial markets? Open 24/5 and earn cash back on every trade at tradingforexusa.com. We teach you Forex trading while paying rebates that boost your returns from cashback rewards, a game-changing advantage for traders. Join our free masterclass to learn the essentials, how Forex works, how to pick the right broker, and how to earn while you trade. Whether you're starting with $1,000 or $100,000, this masterclass will give you the edge you need. Secure your seat now. Visit the URL to join our free Forex class.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump brings new threats of tariffs. Welcome to the Friday edition of Balance of Powers. The president warns of a 50% tariff on the European Union starting next month and a 25% tariff specifically on Apple, the company, unless it moves iPhone manufacturing here to the U.S. Thanks for being with us on Bloomberg TV and radio alongside Kaylee Lines. I'm Joe Matthew in Washington. Kaylee, no one thinks Apple is about to do this. So big questions, and maybe that's why the stock is lower here. The president is moving the markets again today.
Yeah, it might not be not only financially, but technically possible for Apple to be moving all of its manufacturing supply chain for the iPhone to the United States when we consider the different components, also the labor it actually requires to assemble these smartphones. And knowing that Tim Cook has tried to ingratiate himself with this White House, personally donating to the inaugural fund, being in touch with President Trump directly, very interesting to follow that, as we also, of course, are dealing with a 50% tariff threatened on the EU starting next Sunday. The question is this once again just negotiating in public as the U.S. wants to see a better deal coming from our European trading partners?
Well, it is interesting. The European Union's trade chief going to be meeting with the USTR later this afternoon. Is the timing here a coincidence as they try to lay down a marker before that conversation? We'll see.
Well, we did hear from the Treasury Secretary, Scott Bessent, about this. While it might not be with Europe, he did say to our colleague David Weston that the U.S. is expecting that we could see a number of large trade deals in the coming weeks.
In the coming weeks, he also said 3% growth would be in quarters, not years. Fascinating dive with David Weston earlier. We're going to talk about that later this hour with our political panel. We'll also get an update from Tyler Kendall at the White House on exactly what it is that the White House is threatening here. And you know, it's Fleet Week in New York. We've got a special conversation coming up this hour as well.
We do. The commander of the U.S. Fleet Forces Command, Admiral Daryl Cottle, is going to be with us. So we certainly have a packed hour as we deal with all of this news and the impact it's having on financial markets, as we just saw the U.S. dollar declining to the lowest level since December of 2023. On that and what else is happening in markets, Charlie Pellet has a look from New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lines. Indeed, anything but smooth sailing ahead of Fleet Week here in New York. With the Dow, the S&P, NASDAQ, choppy waters right now. With the S&P down 39, 5802 where we stand, looking at a loss of 0.7%. The big story, though, Apple getting hit hard. Apple right now down 2.7%. Keep it locked into Bloomberg Radio and Television for the latest, and of course to see how these markets shake out ahead of a long holiday weekend. The Dow right now down 0.6%. NASDAQ down 1%. With the Bloomberg Mag 7 index now slumping by 1.2%. The 10-year, 4.50%. The 2-year, 3.98%. Gold up $65 the ounce. Gold surging now by 2%, $33.59 the ounce. West Texas Intermediate crude up 0.3%, $61.36 on WTI. And a retreat from records for Bitcoin down 1.8% at 109,140. President Trump threatening Apple with a tariff of at least 25% if the tech giant does not manufacture their iPhones in the United States. Again, Apple shares down by 2.8%. A lot more coming up on Balance of Power. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Back we go to Washington. Once again, your hosts. Here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at the Friday trade. Thank you so much. Of course, it isn't a quiet Friday here in Washington. It seems we never get to have one of those these days, even ahead of a holiday weekend, at least while President Trump is active on Truth Social with new threats of tariffs. 25% potentially on Apple if they don't make their iPhones in the United States, and 50% being threatened to be implemented on all goods coming out of the European Union next Sunday. As the president on True Social, Joe, describes the European Union as having been very
UEC, uranium energy, turning up
on a trade deal, and he says discussions with them are going nowhere.
Yeah, Scott Bessent has made similar remarks here. Interestingly, the European Union's trade chief will have a call today with Jameson Greer. That's set for later this afternoon, according to a European Commission spokesperson. So you wonder if this is bluster ahead of the meeting, or if we're really trying to get the gears turning on something here that could land at 50%. we may be buying more wine this weekend ahead of that taking effect.
Yeah, well, remember when he was threatening a much higher than 50%
That's correct. I think it was 200.
tariff on wine and champagne? Yes.
We're negotiating with ourselves at this point. Let's go to the White House to get details on this. Bloomberg's Tyler Kendall is on the North Lawn with more. Tyler?
Yeah, hey Joe. Well, this really is setting the tone ahead of this call that we're still expecting to happen between the EU's trade chief and the USTR Jameson Greer. Keep in mind that earlier this week, Bloomberg News had reported that the EU floated a new proposal to the US when it came to trade, including that both countries could gradually lower their tariffs down to zero when it comes to certain agricultural products and industrial goods. Appears though that really wasn't enough to move the needle here. As President Trump outlined this morning, he thinks that no progress has been made in terms of trade talks with the European Union. And there's a few different complicating factors. In fact, the Treasury Secretary Scott Bessent outlined one of them earlier today on Bloomberg Television, saying one of the biggest issues is that the EU has to negotiate as a bloc.
I think the president was getting frustrated with the EU. The problem with EU, I've said several times, they have a collective action problem. There are 27 countries. They all have different needs. The Germans, they are interested in cars, the French in agriculture. So, and then you have Brussels negotiating with them.
That can also make it difficult to address some of this White House's demands when it comes to what they like to call those non-monetary trade barriers. President Trump highlighted them in his post on Truth Social earlier today, including the VAT, value-added taxes, which the European Union really has said is fair and that isn't going to really be up for negotiations when it comes to trade talks. So we're going to have to see how this develops. Of course, Joe and Kaylee, if this escalation did go into effect, it would be a pretty big one. Bloomberg
Microsoft, NVIDIA, Meta, these are all starting to go.
It would ultimately cut EU exports to the U.S. by more than half.
Meta, high of the day.
Tyler Kendall live on the White House North Lawn here on Bloomberg TV and radio. Thank you so much.
Alan, to your high of the day.
We are tracking this from here in Washington. We also have our eyes on New York today, really all week. As Joe mentioned earlier, it's Fleet Week in New York and up there for the festivities. And joining us now for an interview here on Balance of Power is Admiral Daryl Caudle, commander of the U.S. Fleet Forces Command. He's with us from our headquarters up in New York City. Admiral, thank you so much for your time. Obviously, Fleet Week is about showing off and honoring the service members who serve on these vessels. But I do want to ask you about the size of the fleet as we begin our conversation here. As we look at specifically the comparison with China, the U.S. Navy as of now has 296 ships in its fleet. China's is on pace to surpass 400 this year. Is there any way for us to possibly catch up?
Well, first of all, thank you for having me. I really do appreciate it being on Balance of Power. I just love the title of the show and being a Navy commander and having a chance to talk with you today, Kaylee. I get this question a lot about the difference in size of the Chinese fleet versus the U.S. fleet, shipbuilding capacity differences. And I just want to assure you and others that will be listening that I don't worry about it too much. We do consider China to be our pacing threat. We are concerned with their shipbuilding capacity, but there is nothing that beats the quality of the U.S. Navy warship. There's nothing that beats our capability, our technology, and most of all, our sailors that are on board and crew those ships. That just really is our true advantage. So while
Meta's starting to go
a bit of catch up on shipbuilding capacity, I don't think a strategy for the U.S. should be trying to match that. It's really our ability to have quality over quantity is really a better strategy for how we fight.
Well, it's interesting, Admiral, and we do welcome you to the program. It's great to see you here. As we look at the parade of ships kicking off Fleet Week in the Hudson, it does bring that technology right in front of a lot of people who might not be as familiar with it as those who are in the defense space. The shipbuilding capacity, though, of the U.S. is something that the Trump administration has addressed with an executive order calling for the revitalization of shipbuilding. What is it that we need?
Well, I'm thrilled that the Trump administration has done it. The president is really emphasizing it. This is commercial shipping. This is Navy shipping. This is all types where the U.S. is really divested in that capability, not so much with our warships, but in commercial shipping. So first of all, that capacity does need to increase, and we need to become more self-sufficient in our own, maritime services and not be so reliant on international building. But, from our warships in particular, we have a lot of ships on contract. And we are working hard to emphasize with those defense industrial partners that build those for us to actually deliver those on time and get back on track, as well as the maintenance contracts that we have. Those need to improve in their performance as well. So this emphasis on this and putting some heat and light on the shipbuilding industry and our industrial partners that work with us is extremely important for the U.S. to exercise our power projection globally, I think.
NVIDIA looking good.
Well, Admiral, here in Washington, we were tracking yesterday the passage of the so-called One Big Beautiful Bill in the House of Representatives that has a lot of President Trump's priorities in it, but also included an additional $150 billion in defense spending. Knowing that this administration has outlined other objectives, including the building out of this so-called Golden Dome, are you expecting the fleet to directly
All right,
benefit
nice
from
little follow
that
through.
additional funding? Is that funding
Exactly what
frankly
we were looking for.
adequate, or is more needed?
Well, I do think it's adequate. I really am very appreciative of the administration emphasizing defense spending and getting the budgets right. My job at U.S. Fleet Forces, our Atlantic Fleet, really emphasizes readiness, and readiness costs. And to have a military that's expeditionary like the Navy, on call, ready to go worldwide, globally, it requires a high level of readiness. And that's across our ordnance capacities, our parts, supplies, and of course the training of our sailors. So I think the budget's appropriate, and the Navy's going to get a part of that, and that's going to help us sustain that. I do think the Golden Dome, in particular, what you mentioned, that the Navy will also be a major player in that as well. Now, the Navy is what protects our homeland from its two approaches, the Atlantic and the Pacific. And so the threats don't just come from intercontinental ballistic missiles, they can also come from submarine launched cruise missiles. And that's where the Navy plays a prominent role in making sure that our homeland is protected against those threats.
Well, as we consider readiness, Admiral, we have to talk about recruitment. It's something that we have heard the White House and the Defense Secretary talk about quite a bit. You're aiming to recruit a little over 40,000 new sailors this year in 2025. The Naval Institute says you're seeing the highest recruitment numbers.
Okay, looking good. High tech alert. We got the S&P breaking out. So I've got some calls left from that Iron Condor that I took on the 21st, Wednesday. Bought calls at the high, bought calls at the low and bought puts at the high to make it an Iron Condor. We took the puts off this morning. Still have some calls from the Iron Condor I took on S&P, Spiders that expired today. Still have some of those calls left. So I'll be looking to exit some of these on the way up. If we can get some follow through, it'd be nice.
So I'm very proud of our Navy recruiters to achieve that.
The Palantir continues. Let's see if we can get Meta to squeeze. Let's see if we can get Meta to squeeze. Stuck to this area. NVIDIA is doing a nice job. NVIDIA coming out of a squeeze. NVIDIA squeeze triggering fair value gaps. Okay, NVIDIA. Maybe you get a 40 delta NVIDIA and see if it can follow through. It's already pushed. It's already pushed $1.50 already. So let's see how far NVIDIA can go. 0 day or maybe next week if you want to take another stab at it. Okay, 40 delta is a 132. Those are cheap.
Extended specifically in the Red Sea, as the U.S. has been engaged up until recently with Houthis, an Iranian proxy that, of course, was quite disruptive in the Red Sea in particular in recent years. The Truman is now heading home, but as we consider the multiple F-18s that actually fell off that carrier, tens of millions of dollars in aircraft lost, was there an over-deployment problem with the Truman or with anyone else stationed in the Red Sea? Is that why a truce had to be reached with the Houthis?
All great questions. Our carrier strike groups project power and dominate and control sea lanes like no other thing is. I mean, that's why the president, when the crisis happens, where's the nearest aircraft carrier and the nearest strike group? And so high demand for aircraft carriers. Because of that, in our force structure currently, we have essentially about a 3.0 presence worldwide, globally, all the time. And so we shoot for about a 7-month deployment. So every 36 months, we'd like to see our carriers and the strike group, cruisers and destroyers deploy for about 7 months every 36 months. When those get delayed, that does take a toll on our readiness. It makes the return maintenance availabilities, as we call them, maintenance periods, longer. It's harder on the ships. It's hard to recoup from that extended deployment from the impact it has on that readiness level. It impacts people's lives as well. People think they're coming back at 7-month point, and they get back at the 8 and 9-month point. They had weddings planned and trips planned and that kind of thing. So there's quality of life impacts as well. But make no mistake about it, there is no bigger compliment on earth than to be extended, to know you are the force across the joint force, that the President and the Secretary of Defense needs to be there to ensure we're deterring aggression, making sure the sea lanes of communication remain open. And these sailors willfully and understand that. We communicate that to them, and they put their life on hold to do those extensions. Regarding the loss of aircraft on board, the
Okay, it goes the S&P.
Those are not related in any way. When you fly thousands of combat sorties, on occasion there are going to be material failures. There are going to be things that happen in real combat that's happening in the Red Sea that's going to result in some combat losses of those aircraft. And when those happen, and if there's human mistakes,
Kamiko, hi
they're
today.
thoroughly investigated. We look hard into that. We hold people accountable if that's necessary, but most importantly, we learn. And we grow as a force, and we put those lessons learned back into the system.
Okay, looking good. NVIDIA, looking for the follow through. NVIDIA.
Those mistakes again.
Okay, Meta, looking for the follow through. A little sticky right here, but looking for these to follow through. Okay, CCJ, Kamiko, breaking higher. CCJ, little consolidation, ABCD pattern.
What do we need? How much have we expended, and what do we need to replenish the munitions used against Yemen?
Well, high-end munitions like Standard Missile Series, Standard Missile 2, SM2,
Okay, S&P continues, looks good.
SM3. The missiles we shoot from our destroyers and cruisers are critical offensive and defensive weapons. And they're expensive. And we like to make sure when we expend one of those that it's against a target that really...
Okay, watching Meta. Meta's getting traction.
So because of that, when, low-cost...
Meta's got traction.
Ships, one-way UAVs, if you will, we want to make sure we have matched the right response.
Okay, S&P on the move. Looking good. Looking good. The buyers are coming in. Okay, we wanted to get above 5,800. S&P cash needed to get above 5,800. We're moving through 5,800. Squeeze underway.
You can think about missiles about the size of a Hellfire missile. There are two program of records they call the Coyote and the Roadrunner missile systems that will be on our destroyers. That missile is significantly cheaper, has great standoff capability. It'll be the first time we've employed them, and that striker will be certified to actually use that weapon system.
Okay, looks good. There goes S&P. There goes a lot of things are ripping to the up. There goes Meta. Okay, Meta finally getting the go. Meta getting the go here.
And the ship's captains have a lot of confidence they can defend them ships properly with a lower cost weapon system.
Really interesting, Admiral. Daryl Caudle with us live.
Okay, those Meta calls jumped quite a bit. 50%. I'm going to take some off into strength.
Admiral, really great pleasure to talk with you. We'd love to do it again at some point here on Bloomberg. And congratulations to the more than 1,000 midshipmen graduating the Naval Academy today, just up the road from where we are in Annapolis.
Go Navy.
Well with the daughter of a naval aviator. I'm Joe Matthew. Did we learn a lot there? That was pretty good.
Yeah, it was a great conversation, and we still have more than ahead here on Balance of Power on Bloomberg TV and radio.
For you, it's more than a bank transaction. It's like your first fundraise. Or maybe it's payroll for your crew. So why doesn't banking do more? What if it was cutting-edge software that acted as a platform for your ambition? The truth is banking can do more. That's why over 200,000 entrepreneurs love Mercury. Because we bring all the ways you use money into a single product that feels extraordinary to use. So you can do more.
Hey guys, Bill Garofalo here, owner of Competition Cars, along with my brother Anthony, my new sales manager. So after 29 years in business, we moved to an awesome new location right across from the Tulsa Grand Mall. We still offer the same great cars, low prices, no dock fees, or free warranty. But now we've added classic cars and exotic to the mix. So come see us.
All right, Meta.
Check out our awesome new showroom.
Okay, see if we can follow through. Fair value gaps, fair value gaps.
At Waccamaw Heating, Cooling, and Plumbing,
We got fair value gaps on the way up, looking good. S&P on the rally mode. Okay, multiple fair value gaps on the breakout. You always want to look for that when it breaks above a pivot like this. When it breaks above a pivot. Okay, you got this pivot high, and it's followed by fair value gaps. The volume picks up. Volume picks up. Okay, NVIDIA. Let's see what NVIDIA looks like. NVIDIA popped there. Okay, squeeze opening up on NVIDIA. Okay, NVIDIA, go some more. Go, go, go. Go, go, gadget.
We all want to spend less, but cutting costs doesn't have to mean cutting corners. So join the 2 million pet parents spending 40% less than pet armor while getting this.
Many charts, especially in big tech, notable highs.
All right, nice move on the S&P.
Early in the year,
Goes NVIDIA.
that bottomed out near the trade news cycle there, and then
Okay, Microsoft. What are you doing, Microsoft?
But for now, the 170 level right here,
Microsoft.
high point, and then resistance point here. We haven't really managed to make a big push above it in terms of a closing price. We did make intraday highs that were nice beyond that level here, but today we're retreating back. We can also see our moving averages. Unlike our previous chart where they were diverging apart, here they're clustering together. That speaks to weakening directionality, or in this case, perhaps potential trend change, because we can see we bottomed out. Now we're starting to rise. Our fast moving average is starting to climb faster than the other one. So it's a little bit of a different look here.
Meta,
If you just glance
okay.
at it, they're clustered together, but you see that now potential trend change signs because of our yellow one moving faster now.
See, this is an interesting one. I know we got a second, so I got a question for you. And it seems like depending on where I want to start looking on this chart, I can convince myself of two patterns that are exactly the opposite. First, if I were to start from the highs going lower here, so I look at this portion of it, it's almost like we have a bit of a bear flag pattern. However, if I were to start here,
Okay, there goes NVIDIA.
it almost looks like a bull flag pattern. So talk to me about how we digest this, and is it possible that you have kind of one inside the other?
Okay, NVIDIA, nice move on NVIDIA. Okay, these end of day.
It's possible.
These end of day.
Patterns. They're fractal. They can repeat on
Nice move here end of day.
stages, varying time
There
frames
goes NVIDIA.
I do see your point kind of either way.
NVIDIA going.
Now I would
Go,
say
go, go.
this is a significant low point to watch. For now, the short-term trend is more toward the upside. We're knocking on the door of a notable gap level here, at which we did make a breakout to the upside. So perhaps a bit more bias in the bullish direction, especially too because RSI is above the 50 midline for right now, and was for the most part continuing to make new relative highs along with price here. So perhaps that could help add a little bit more clarity. Especially too, as you talked about some of those moving averages showing signs of improvement on the shorter term time frames. We add in some of the additional indicators you look at. How about this one? Because now obviously we got a kind of sideways to lower trajectory, which is a little bit different than we've seen in other names. Yes, but perhaps a bit more encouraging evidence here because we have moved beyond the point of control, the heavy trading area, the heavy potential consolidation area. But to kind of put a little bucket of water on the excitement there, we also got halted at our next volume node here. So 175 to 165 or so. Those are the big trading areas with lots of volume that price would need to work its way through to form either a new uptrend
There goes
or
NVIDIA.
resume what looks like a rather odd price activity here, but a downtrend overall. And I know too, if we add some time here, this is going to really improve this picture and probably ease investor angst around this name. And when you look at it in
Whoa, NVIDIA's going. NVIDIA is going here.
compared to some of the other ones that we've seen, yeah, maybe a little bit violent in terms of how quickly, but certainly not as big of a drawdown as you saw back in that 2022 timeframe. Yeah, and looking at the long-term chart can help really filter out a lot of the distractions here. What I see when I look here, notable high point,
another consolidation phase, and then the low point came in around that same general area near like 140 or so. So now, and when we look at the longer term chart too, the volume node is more here. So price is kind of pushing above, right on the money at that long-term
Looking good.
regression line though. So
NVIDIA.
it's, at some the notion of fair value for some is about where we are.
Too. Normally, we don't always see those significant kind of extreme points end up as the volume point of control, but it did in this case because it was such a important area at several different time frames. Rick Ducat, lead market technician, good breakdown.
Okay, nice move there.
Biggest names.
Meta, NVIDIA, taking some profits off NVIDIA.
June 6th expiration, but the call debit spread for the example here. 167.5, 172.5 are the strikes, so still $5 wide. But rather than selling a spread for $1.25, we're looking at buying one for a $2.50 debit, creating a 1-to-1 risk reward. So you can see that risk $2.50, chance to make $2.50. Simply add that $2.50 to the 167 call, you get a 170 break even. If you were to look at Alphabet in real time, it's just below that mark. So
Okay, looking good. The New York Fangs are giving you an opportunity to exit into strength. If you took some positions on the breakout or just before, like with Meta, Meta's dragging its feet. I would take some profits on Meta. NVIDIA looking for more upside. NVIDIA. Okay, Bollinger Bands continue to open up. S&P looking good. Looking for a follow-through on the S&P.
You can see that same elongated Z risk profile, but rather than starting here where we did in Tesla, we start around here near that break even. So a couple different ways to look at a couple of the biggest names in the market. We're going to take a short break and look at another big name in the market making news and big moves today. That, of course, is Apple with all the tariff discussion. That'll be the subject of FOMO right after this.
Can only take that song so much.
There are 27 countries. They all have different needs. The Germans, they are interested in cars, the French in agriculture. So, and then you have Brussels negotiating with them.
The Treasury Secretary.
Nice evening session on the S&P, giving us an out, or as the Canadians say, out.
And online, interesting to hear the Treasury Secretary specifically
Looks good.
the fact that this is a multi-nation bloc.
Apple, I think I have today's calls. Apple.
Maybe making these negotiations
No, I got June calls on Apple. So Apple has time to recover. AMC.
Was formed for the primary purpose of taking advantage of the United States on trade. He has repeatedly made this claim, Joe, even though it's not necessarily factually accurate.
You wonder how all of this plays into the meeting today that our U.S. Trade Representative will have with Trade Minister for the European Union. That'll take place apparently this afternoon. A lot of this is said to be
CCJ looking good.
50%. We'll see where we are tomorrow. The markets seem to be taking this so far in stride.
Yeah, so let's play it to our political panel now. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are both with us. Rick is Stone Court Capital Partner and Republican strategist. Jeannie, our Democratic analyst and Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. Rick, when we look at the market reaction, which as Joe rightly points out, largely a shrug today, are we getting to the point where no one is actually taking these tariff threats from the president as seriously as they were, knowing how frequently they are walked back to have been proven essentially as just negotiating tactics?
I love Bloomberg. Bloomberg trying to get in the head of the president like they know what the hell's going on any more than anybody else.
Today's spotlight will be on Apple as the stock really is one of the primary movers of today's market action. The stock right now trading down about $5, about 2.5%, pretty close to where it's been throughout most of the session. Joining us for more on the story that is causing this movement is Schwab Network contributor JD Durkin. JD, happy Friday. Thanks for taking the time and joining us here. Let's talk Apple. Tariff, scrutiny placed solely on this company. I'm not surprised to see a little bit of stock pressure today.
Happy Friday for everyone, unless your name is Tim Cook, or maybe a lot of other market participants who have long held this name, because today was supposed to be a very calm, low-volume Friday into a long holiday weekend. Certainly the commander-in-chief had other things in mind with those kind of dueling posts on Truth Social in the 7 o'clock hour. I've been really drawn here, notably to the commentary of Dan Ives over at Wedbush. One of his kind of elements that he's been talking about the last few months is this idea of whether or not you can truly and effectively reshore Apple production and manufacturing back to the United States. Dan Ives has repeatedly said, if you like your $1,000 iPhone, it's got to be made in China. If you want to move production of the iPhone to somewhere like New Jersey, you can expect the total cost to be about $3,500. Not the type of commentary or moves from the company we've seen in recent days. We can't forget, we're coming off that announcement of the $1.5 billion Foxconn plant in India. Clearly, the president either seeing that headlines on cable news or having advisors around him let him know of that planned investment for India, because the president name-checked India.
Okay, Palantir is still going. Palantir, Microsoft looking really sharp. Microsoft giving us a nice go of it. Thank you, Microsoft. And Microsoft, let's see. Okay, we got all of Microsoft. Congratulations if you're still riding Microsoft higher. Google. Okay, Google. Google pushing. All right, all the New York Fangs look good. Snowflake. Okay, nice follow through. What is GE doing? GE bouncing at the 90 EMA. GE.
Clearly net negative and puts pressure on the valuation of Apple. But I want to get your thoughts on sort of the
Google.
picture, kind of macro, chessboard that we're watching here.
Well, I'm reminded of what Treasury Secretary Scott Bessent has said in news cycles over the last few months. He says basically the American dream is not
Oklo doing well. Let's take a look at Oklo. These are going to do well in the future, most likely, continuing into second half of the year. I would think that these are going to do fine as resources and money flows into these sectors. Okay, Oklo back up to recent highs, 52. 59 is the IPO high, or the high that we saw back in 2025, rather. Palantir continues to push a bit higher. Palantir. Oh, jeez. Blah, 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 blah. Let's see. Okay, so we had a really nice pop. Meta's not following through as much. NVIDIA looks pretty good. Take some profits off into strength is a good idea, I would imagine. Okay. My plan has been, when we get these kind of pops, take profits off the table, collect more cash. Next week, we'll look at markets again. Hopefully, we can break out of this consolidation on the S&P. Okay, hopefully we can break out of this pattern, this box. Okay, where we tested the 200-day. Is that going to be enough? Down more than 3% from the Monday high to start the week. Can we bounce back up into the range next week? Maybe. That would be nice. That would definitely be nice. No sugar tonight in the coffee. No sugar in my tea. Okay, what's Bitcoin doing? Bitcoin's climbing. So Bitcoin, I've noticed that if you wait until the middle of the day, a lot of times you can get, on average, you can get a good entry. You know, sell into strength and wait for the dip. Tesla, let's see. Tesla.
All right, welcome back to the exchange. I am Brian, and for Kelsey today. Thanks for joining us. All right, policy turmoil, rising yields, and economic uncertainty. I'll have your next guest looking to protect his portfolio, which means your money. He says that as the choppy trade continues, and he's turning to a specific basket of defensive names. Chris Sanyeki is chief investment strategist at Wolf.
Palantir looking for a higher high. Print the higher low here. All right, the New York Fangs, they look like they're starting to lose a little momentum.
Companies that have consistently bought back their stock each and every year for the last 10 years, almost a buyback aristocrats, if you will. These are high quality companies that if there is a downturn temporarily in the market, they're in there buying the stock each and every day. It really spans a whole swath of companies, from Honeywell, Union Pacific, Northrop Grumman, to Visa, MasterCard, and even Cardinal Health.
Yeah, okay, they're all very different names. I mean, I'm trying to figure out something that might put, ADP, the payroll company, with UNP, the train company, and Cardinal Health. Is there anything that these companies have in common? It doesn't seem to be at first glance.
Well, the thing they have in common is they're very good at capital allocation and returning cash to shareholders. So that's the first common thread.
Okay. Good management.
Good management, resiliency of earnings generally, right? ADP is not going away, neither is Honeywell or some of these other names. And then some have the added benefit, although not all of them, of some secular tailwinds.
Yeah, we're looking at Union Pacific right now. So Union Pacific, I mean, this is, when the tariff news hit, all the transports, rail included, Chris, got whacked hard because they carry stuff across the country. And if there's less stuff to carry, they make less money. Doesn't sound like you're that worried about all this tariff stuff we talk about every day.
Now, these are companies, Union Pacific and the rails more broadly, are companies that have monopolies, right? And Warren Buffett obviously owns one of them, and their names are going to be around for the next 50 years. We have to carry goods. What their earnings do in the next 6 months because of tariffs that bounce around doesn't smooth out the long-term effects. So these are high-quality companies that generate a lot of cash flow and have done the right things with respect to capital allocation.
Yeah, and then we also, Visa and MasterCard, obviously, co-opetition, I guess, frenemies, whatever you want to call these two companies. I don't see anybody use hardly cash for anything anymore. Companies literally just printing money.
They are, right? And they are just a long-term secular growth stock on cashless, right? Going more and more cashless. And there's still enough cash in the economy that more people will be charging on cards over time, whether it's debit cards or credit cards. So they're secular growers, and even they might not seem defensive, right? Because if people stop spending money, they might see a little bit of a headwind, but that's a trend that continues and has continued for the last 10 years and will for the next 10 years. So they're very resilient within financials.
And you might have heard me right before the break noting that the 10-year bond yield fell back below 4.5%. That's not just some random thing that I'm saying. It's because there is a level at which some people are, not everybody, but some people are worried that higher yields could ultimately hurt stocks for a variety of reasons. What is your take on bond yields and their relationship with the equity market?
IONQ starting to bounce.
Conceptually, higher bond yields means lower equity prices or fees that we pay for stocks. I think 5% on the 10-year is the key level that investors in recent meetings we've had are worried about. We got close to that earlier in the year, and I think depending upon what happens with the deficit, and the deficit is at the third quickest pace year to date in the last 10 years, and we're not even in a recession. I think we touch 5% at some point
over the next 3 to 6 months. And I don't think that's good for stocks. That's why we lean more defensive and with the secular growth names, some of the ones we mentioned before, because I think yields are moving higher and the bond market vigilantes are knocking on the door.
They really are. And by the way, it's people want to politicize everything. I get it. This is all over the world, Chris. Japan bond yields are 20-year highs. Yields in the German Bund, their bonds, they're soaring. UK bond yields are soaring. What they're called gilts. This is like a global rebellion by the bond market, is it not?
It absolutely is. And if you put long yields in perspective and go back 50 years, they're still relatively low. And I think what the bond markets globally are saying is that we're in a higher inflationary environment. Debt, deficits, tariffs, isolationism, deglobalization, all these themes suggest somewhat structurally higher inflation as we go forward. Or alternatively, the uncertainty over what inflation and interest rate might be, the so-called term premium is rising, and investors are demanding a higher yield for that uncertainty or where policy is going to go, not only in the U.S., but certainly globally.
Well, listen, to be fair, I know I'm a lot older than you are, Chris, but, I'm not that old, but I'm old enough to remember what you were just talking about. But unfortunately, there's a lot of people that say, if you're under the age of 45, you've never managed money in like a rising rate environment. I mean, like 5% on the 10-year seems high for a large portion of people managing money on Wall Street right now.
Yes, and 5%,
is not historically high, but for that group of people, it is.
Yeah, well, the one thing that I'm worried about is with higher rates means higher mortgage rates, and housing is in a slowdown already. It's been in a
Okay, so a little pop there, a little fade.
Activity for over 3 years.
Looking for another wave up, hopefully.
10-year due to housing. To me, it puts downward pressure on prices. So if there's a silver lining in any cloud on the inflation numbers, if we start to see some lower housing prices, that should ultimately eke itself into, albeit with delay, into some better CPI numbers. But that's going to be next year. That's sort of next year's story, not something that we're
It's
probably
actually not next year's story. It's the next segment of the show. Chris Senyak, Wolf Research, thank you very much.
Thanks for having me. Have a great weekend.
All right, you're very welcome. You too. All right, coming up, the president pressuring Apple to manufacture in the U.S., but is Trump's plan to reshape the global tech supply actually putting America behind in the race to dominate AI? Future boasts of that fascinating story as Apple falls nearly 3% and goes back below $3 trillion in market cap. We'll hit that. Oh, and by the way, the housing story, all coming up.
All right, you could sell a premium on Apple, more than likely. Let me see what the premium is going for here. Apple. Apple. Apple's pretty cheap, actually. IB is pretty cheap. Bollinger Bands, okay, I guess. Watching the S&P. All right, so I'm looking for another wave up. Do we get another wave up end of day? I love these end of day rallies because they'll give you an opportunity to trade some cheap options if you're interested. Okay, Meta, NVIDIA. NVIDIA looked a little better. Now it's pulling back. Netflix. Okay. Amazon hanging out at the high of the day. Amazon. Is that going to go? Amazon. Sitting on the 200-day.
Work and an aggressive approach could work. But what is not working is Elon Musk and Donald Trump, tariff policies changing by the minute, and it's literally wreaking havoc on
Oh, geez. Politics. Bloomberg, they love it. They love it. All right, let's see. Let me change channels here. I really don't want to hear politics. Hear enough of that. Let's see. Oh boy, hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from closingprint.com. It is Friday the 23rd, 1:45 p.m. Okay, we've got plenty of time looking for another leg up. I'm going to take a 5-minute break. I'll be right back.
About 24 million Americans signed up for health insurance through the Affordable Care Act. Welcome back to the exchange. Trump's Apple threat is his latest attempt to try to reshape the entire global supply chain for technology. But could the push for American manufacturing actually derail big tech's broader shift into physical AI? Deirdre Bosa has more on this fascinating story as part of today's Tech Check. Deirdre.
So, Brian, with Apple, Trump is demanding full fabrication, not just footprint. So the $500 billion in investment, other sort of outreach, it's not working this time around. And if this applies to Apple and others, it could be the first real test of whether America is ready to manufacture the future of AI. The future is forming in new physical formats. And so that means that the next competitive frontier is not just model quality or compute infrastructure like GPUs, it's manufacturing capacity. So Trump isn't satisfied with iPhones being made in Vietnam or India. Why would he be any more forgiving of next generation devices being built anywhere but America? It's going to have implications for OpenAI and Johnny Ive's ambitions, their AI companions. It's going to have implications for smart glasses from Meta and Google, humanoid robots from Tesla and others, robotaxis from Tesla and Waymo. Now, all competitive next-gen devices that China is racing to develop as well. So if Trump forces onshoring too soon, America could risk falling behind in these very critical races. During the first Trump administration, Apple wrote the playbook. This time around, though, the stakes are arguably higher as the AI race gets physical. And Brian, if Apple can't meet that bar, it begs the question, who can?
Well, answer your own question, Dee. Is there anybody, if Apple can't do it, who can?
Well, so Apple has a long history, right? It has taken them many years to move their supply chain over largely to Asia, and that's really been seen as a huge advantage to investors. But let's say you have an OpenAI starting anew, right? Maybe they could start building from America. I mean, there's been, I know you know this, Brian, because you've visited some of these sites. There's been attempts, and there's a lot of red tape. There's a lot of regulatory stuff. There's a lot of challenges, costs in particular, of building here in the U.S. But perhaps, you know, an AI native, a newer company like an OpenAI might be able to start from scratch and think about doing it here. But I think the stakes are so high. And, you know, what we hear a lot when we talk about the tariffs for Apple, for example, it's easier just to eat the tariff or the tax.
Yeah, you know what I'm waiting for? And I'm going to sound crazy here, Deirdre. There's a country, it's technically a country, it's called Sealand. It's basically an old abandoned oil derrick off the coast of England, and it technically is a nation. Waiting for somebody like a Sam Altman to build a separate country, like a few miles off the coast of San Francisco. I'm not joking. And just do whatever they want.
Can they get labor?
You wouldn't need it if it's just a power plant. Right?
Fair enough.
It's like an offshore oil platform, but for AI. But it's a separate country.
All right.
We'll call it...
If everything's going to be robotic anyways, that's a good point, Brian.
We'll call
it the job.
Bosaville.
Robots there.
Bosaberg. Deirdre.
Bosaberg, okay.
Yeah, Otisburg. All right, Deirdre, thank you. Coming up, bond yields up, home stocks down. It's because mortgage rates are back to 7%. But there is actually some good news on housing, and it's ahead.
High took alert plus 800.
All right, welcome back to the exchange. President Trump's big, beautiful bill, that's actually what it's called, by the way, it's not editorializing, may have spooked some investors this week, but not those buying municipal bonds, as the tax exemption status for the industry remained unchanged. Your next guest says that yields moving higher, there's plenty of opportunity out there, especially in shorter term munis. From all, let's bring in Nick Venditti. He is the head of municipal fixed income at Allspring Global Investments.
All right, S&P continues higher.
Municipal bonds, like semiconductors,
All right, get an end of day run, it looks like. S&P continues higher. All right, there goes Microsoft ripping. Microsoft ripping here. Okay, let me just look at Microsoft real quick and see how far it is from supply. Okay, we made it above 452.50. We got 454 as the next level. Microsoft 454. End of day options are ramping higher. Okay.
Sure, right? I mean, look, one of the beautiful things about municipal bonds is the water and sewer system in Milwaukee.
Okay, Microsoft ripping higher.
All with Russia and Ukraine, right? That doesn't have any impact on our market.
S&P, nice ripper.
Very stable, high quality revenue.
Snowflake turning back up.
A lot of yield, particularly if you're in the upper echelons of the tax bracket. You gotta do me a favor. When the show's over, you're gonna go to Cops, the one in Brookfield, right off 94, and get yourself a burger. Just for those of us who cannot make that aside, yeah, I mean, there's tax advantages to a lot of these munis, but a lot of these municipal areas are also in big trouble, right? You talked about Milwaukee. I love Wisconsin. Right down south, Chicago. These are cities. Chicago's in big trouble. I mean, how much do you need to worry? Do we need to worry at all about the ability to pay some of these debts back? Chicago just took like a $2 billion loan to pay $750 million. You need to worry a little bit, right? I think this is a period of time where in our market, where in every market, the bottom-up fundamental credit analysis.
Looking for higher lows to lead to higher highs. UEC, the uranium stocks, power stocks, all looking good. Amazon's at the high. NVIDIA looking for a break. NVIDIA looking for that to go again. It looks like Meta wants to go more. Okay, don't forget when the music stops, you have to have a chair to sit in. Okay, end of the week rally. Looking good though. Okay, let's see what we can get going here. All right.
Thank you very much. Appreciate it. All right, a big surprise to the upside on
Meta.
sales of newly built homes in April. Diana Olick joining us now. And Diana, I thought these higher bond yields and mortgage rates are going to just crush housing. Hasn't yet?
Well, yeah, it kind of is, but this number is definitely an outlier, especially since mortgage rates, as you said, rose in April when these contracts were signed. Still, as you said, sales of newly built homes rose 11% month to month and were 3%
Microsoft still pushing.
last year.
Tesla, higher lows, higher highs. Tesla, S&P looks like a higher lows, higher highs situation.
But much of it may actually be builders aggressively trying to
Looking good. Amazon.
which has gotten pretty bloated because they see what's coming ahead. Now, you see that in the median price, down 2% from a year ago. We know that 29% of builders cut prices in April, according to a separate report from the NAHB. That rose to 34% cutting in May as builder sentiment plummeted to the lowest level in 3 years. Now, less expensive homes are driving the sales activity. The share of homes sold for under $400,000 continued to rise in April, now at 49% compared to 42% just in January. What you do not see in today's sales report is mortgage rate buydowns, which we know the builders are also doing aggressively. 61% of builders said they are using some type of incentive. That doesn't show up in the price. Now, I spoke with the chief economist at the NAHB this morning, Rob Dietz. He said,
That's weird.
I would suggest waiting on the April number until revisions next month, given what we saw in the March revisions. He said they are watching the year-to-date number instead, which is down 1.2% compared to the same period a year ago. So that's really telling, Brian, as to how nervous the builders are going forward if they're trying to unload as much as they can now because they see what's ahead, and that is rates over 7%.
And I don't know where you are. Listen, I live in a nice area, so it's not reflective of the country, but over half the
Microsoft looking for a follow-through.
like these are people that are like they don't care what mortgage rates are.
Well, you're in an area in the Northeast where there's not a lot of new construction. So when you talk about new construction, which is mostly in the South and the West, that's where the vast majority of new construction is. That's people looking to buy, using a mortgage. They may
Microsoft.
be in a move up from their first home, but definitely they are mortgage dependent, and the builders see that very clearly. We hear that in their earnings report, how sensitive they are to even the smallest moves in rates.
Yeah, it's truly remarkable. Your point is well taken. You go out to Phoenix, going to be a very different story in mortgage rates. Every time we see even a slight move, like activity spikes.
NVIDIA looks like it wants to go some more. NVIDIA.
Sensitive people are to,
NVIDIA next week earnings.
Diana Olick, thank you very much.
Wednesday. Get ready.
Good news on housing. All right, folks, that does it for us here on The Exchange. But I'll see you on the other side of this break. Courtney Reagan will join us at Power Lunch. We're going to talk about this nuclear bill signing and be joined by a big-time CEO. Markets.
Let's see what NVIDIA looks like. Are the options expensive? NVIDIA? Actually, they're not expensive yet. Not yet. NVIDIA options are not expensive. So far, IV is still palatable if you're thinking about calls. 37. NVIDIA looks like it wants to pop here. NVIDIA looks like it wants to go. Okay, NVIDIA, can we get something going here for NVIDIA? Looks like it's trying to go. Needs to get through this pivot. We got supply overhead. Where is it? It's at 132, 133. All right, so you see where a break above this level right here. Frank was just talking about this pivot right here. Okay, we get above this pivot. Palantir still grinding higher. It's above 125.16, 125.15. Okay, so it's come $6 off the low. Watching NVIDIA for a break above this level. Feels like the volume's slacking off. They had a nice little pop there. Nice little pop into the 1 o'clock hour. And looking for higher highs now. Can we get a run? SoFi is higher as well. Note the Bollinger Bands have been contracting, but now they're starting to see Bollinger Bands open up on the daily. And that's just since this morning. Same thing with Netflix. The Bollinger Bands were turning inward. Now they're turning outward. away from price. That's telling you look for a fast move. Not much time left in the day for today. Meta, upper Bollinger Bands flattening out, could turn up.
Your portfolio could go nuclear. President Trump expected to sign an executive order to try to help boost the energy industry. We're still awaiting that signing. It could happen at any moment. And on that note, after it's done, we expect to have, we hope to have, the CEO of Power Giant Constellation, Mr. New Jersey, Joe Dominguez, will join us ahead. Courtney, welcome.
Thanks, Brian. Good to be here. So in the market, stocks are off session lows, but do remain under pressure as President Trump also threatens new tariffs on Apple and the EU, calling for a 25% tariff on all Apple iPhones not built here in America, and also threatening a 50% tariff on the EU by the end of next week.
Okay, there goes NVIDIA.
This week has been the move in yield as the president's budget bill makes its way through Congress, adding even more uncertainty about
There we go, Frank.
policy. So joining us now for more is Michael Kantrowitz. He is Piper Sandler's chief investment strategist and head of portfolio
Meant to say
strategy.
Frank.
Michael, thank you so much for joining us. Obviously, a lot of headlines to go through today. As Brian suggested, we are waiting for another executive order. We don't have it yet. We don't yet know, obviously, the full details, but market's paying attention to what's going on in DC.
Oh, okay. Was that a fat finger there? I had a nice little pop. And okay, so we come back into that.
Recommending investors remain balanced in generally larger companies with
Let's see what we do here, NVIDIA.
that can remain resilient in this backdrop of uncertainty, high price levels, and interest
Okay,
rates.
NVIDIA. Looks like a little fair value gap there. Or excuse me, a liquidity grab.
Around in terms of what it's focused on, up until this morning it was interest rates, and now it's back to tariffs, and that will likely be the case until the next catalyst shifts the narrative once again.
Obviously, we pay an awful lot of attention to the equity market, but the bond market has been sending us signals for quite some time, and some folks look at that as really where.
Looks like somebody fat fingered that one.
What are your expectations for what we're going to see on yields? I think there was a period of time where we thought we're not going to go past 4, and clearly we are well past 4 at this point.
Yeah, well, I think what took us higher from late September or mid-September of last year was largely that the employment data.
NVIDIA looks like a liquidity grab right there. You see that little spike? You see that spike with the rectangle around it? That's a liquidity grab. Institutions will push it above a level. People will get their stops taken. If there's enough volume, we should see this hopefully fill out.
Reflected the drop in China tariffs. So there's a very mixed picture from inflation in terms of growth.
Okay, S&P, can we get another run up? I'd love to see S&P head towards 5,900. That would be awesome.
I expect the next two employment reports to be fine. So I think yields are kind of going to be where they are. I don't think the deficit issues, or at least in the U.S., I would point to Japan's 30-year bond yield, which has been probably carrying the global yield higher as a bigger issue than the U.S. deficit.
It's so interesting. You bring up such good points, which we talk about often, the difference between what we're seeing in the hard data and the soft data. So things like employment, that looks pretty good. But then consumer confidence, that doesn't look so good. The psychology certainly plays a big part in investing. And to be honest, I am somewhat surprised that the markets are only off the major indices by about 0.5% on these new potentially threatened tariffs from President Trump on the EU or Apple phones specifically. Is the market just starting to sort of shake off some of these headlines as, look, this is sort of the initial warning shot across the bow. We're not actually going to see those numbers. Is that a fair assumption or a dangerous assumption to make if you're trying to deploy capital in this market?
Okay, looking for NVIDIA to follow through on this one. Okay, so look like a liquidity grab. Hopefully we just keep going.
So there's a long tail of uncertainty with respect to Trump's.
I would like to sell iron condors on NVIDIA next week. 5% outside of the expected move. It depends on what the expected move is, but here goes NVIDIA. Still good? Okay. High techs keep coming in.
Maybe perhaps calling Trump's bluff, or perhaps a little bit more desensitized to it and thinking of where we will end up. Not
yeah, we're green.
To get there, which is how the market acted
back in early April.
Green tick.
True. I guess the path could be sort of staggered, but maybe the end goal.
Okay, making new highs on the S&P. Looking really good here.
Is it your
I love
assumption
these end of the week.
scenario that we will avoid recession, or is that still a question mark?
Yeah, I believe so. The tariffs are another hit to the economy that was already pretty bifurcated. We don't expect.
Yeah, looking better.
If we had those higher levels of tariffs, yes, that would be very likely.
Nvidia looking really good here. It's about to run. Nvidia looks like it's about to run. Look at the volume.
Story that's going to unfold in the second half. This tax bill is going to get
Volume. Look at that volume bar.
and there's some really
Previous candle.
policies there, like expensing of property, plant, and equipment structures, and we've got really low oil prices. So when you look at the interest rate market, yes, rates are high with respect to the last few years, but they're at the same levels they've
Okay,
been over the
Nvidia
last few years.
looks
When you think
good.
about the impulse on the economy, it's really about the change in rates that causes sharper downturns, not that rates just stay high. And so
No
the change
sugar
in rates
tonight
in the last year is
in my
effectively zero.
coffee.
So that's a much better
No
place to
sugar
be
tonight
with
in my
lower oil and those
tea.
other potential tailwinds that, again, I think the
Can't get that song out of my head.
healthy and looking okay.
All right, let's get going here. We need more FANG participation. Need Apple to wake up. I don't think it's going to, but watching Apple. Snowflake turn back up. Palantir trying to push the highs.
Actionable advice for our viewers. Do you have a list, I understand, of stocks that have some lower betas and negative correlations to interest rates, or names we might be interested in exploring? What do you got for us?
Yeah, I don't have that list right in front of me. So this morning I did publish a note because again, there's a wide variation of view on where tariffs are going, and with the market's recovery and the valuation levels, there's certainly many investors that are concerned or bearish today, and that the view that tariffs will again cause a sell-off and perhaps bring rates down on the fears of demand destruction. So we put out a list. Again, I call it a tactical list for those investors that want to be more defensive. And so those would be your typical lower beta counter-cyclical names that, communication names.
I think we got them up on the screen, in fact, to help our viewers. We got AT&T, Duke Energy, SanDisk, and Texas.
Whoa, here we go. Nvidia. Let's go some more. Nvidia earnings next week. Nvidia.
So again, that list was for investors. Again, we're always trying to cater to a wide range of clients. And for those investors that
Nvidia's about to go. Palantir is still pushing. Palantir pushing the highs of the day.
our again broader recommendation has not been to chase the news, but remain more balanced.
Okay, Nvidia looking really good. Note where supply is at 133.
And so that's our broad recommendation. But yeah, that list I think again is for investors looking for a market that's going to potentially sell off from here.
Got a couple names too. Rollins, it looks like Realty Income, Paychex, Amcor. Michael Kantrowitz from Piper Sandler, Chief Investment Strategist and Head of Portfolio Strategy. Thanks for sharing your thoughts here.
Okay, we got supply up ahead, overhead. Okay, supply just overhead.
Because I get so many people I meet
Okay.
around the country that say, Brian, thanks for saying stuff because I listen on the radio, XM 112.
Yep.
I can't watch. So
My dad listens too. I'm doing it for my dad.
Mr. Reagan?
Yeah.
In Dayton?
In Dayton,
I
Ohio.
should have said Pride of Dayton, Ohio, given that my wife is also from Dayton, Ohio.
It's all right. We can share it.
Oh, she went to high school. She finished high school.
Oh.
So both.
They're having too much fun on CNBC.
President Trump's latest jab at Apple, his new demand from Tim Cook, and if Apple could actually do what Trump wants.
Come on, Nvidia. Let's go. Push it some more. All right, having a good day today. Okay, so Monday was good, Thursday was good, and now we have Friday. So that made a positive for the week. Often I talk about, you do this, you make $500 a day on average, and you can make $10,000 a month. If you average $500 a day, it doesn't account for weeks like this where we're up big on Monday. We were doji inside day on Tuesday, big down on Wednesday, up yesterday, down early in the morning, and then up later in the evening on Friday. So it doesn't account for that. But if you average it out, That's what I'm always talking about. So had some really nice positive gains on Monday. Didn't follow through on Tuesday. Wednesday gave some of that back. Thursday took back some of the losses, made some money, took some profits off the table. Started focusing on next week's calls now, taking off calls from today, taking some day trades from today. Zero day earlier on Meta, that turned out to work. Now we're waiting on NVIDIA to continue to do some damage. NVIDIA, I'd be looking at next week's options now. At this point, time of the day, it's 2:00 on the East Coast. So, all right, I'm going to take a 5-minute break, and I'll be right back.
Really forcing a reappraisal of that. Alternate forms of energy, things like nuclear, have done extraordinarily well on a year-to-date basis. We would expect that's going to continue. I'll just toss in a personal side. My son is in the Navy and is now moving towards nuclear submarines. The amount of money that is being offered for young graduates coming out of the nuclear power programs from the U.S. military is extraordinary. There's real demand for that expertise at this point.
Yeah, that and we always say nuclear was such a bad word; it was taboo, and now it's going to be a main source of energy. I was also thinking about the financials quickly. I know we haven't had the deals and the IPOs, but we've some, and there was a lot of high hopes there. Do you like that group?
Well, so on the investment banking front, right, we're seeing this hit private equity as well, where they're failing to achieve liquidity. That's forcing them to hit capital markets in terms of debt issuance in novel forms. We're hearing about collateralized financial obligations coming off of private equity as a mechanism for obtaining liquidity. The reason they can't get public is because the IPO market is dead. And the reason the IPO market is dead is because all the money is flowing into index funds. Index funds can't buy IPOs. Right. They simply have no mechanism for stepping outside of the already existing index constituents. Right. And so until that changes, like I've argued now for going on nearly a decade, that the IPO market would never really recover in the way that people kept forecasting, and that's going to create some real challenges for portfolios that are heavily allocated to private assets. It's one of the reasons, unfortunately, that you're seeing increasing attempts to put this into retail portfolios.
Great conversation. Michael, thank you so much. Michael Green, great to see you here in person of Simplify Asset Management. Thank you, Michael. Coming up next, Options Corner, and we will stand by and we will highlight the unusual options activity that we are seeing on the day. Apple, Wells Fargo, Coinbase. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz. Actually, I'm seeing something from Schwab.
Okay, NVIDIA, let's do it.
Yeah, Schwab lets you invest and trade on your own. And if you want
Okay, here goes NVIDIA. Supply coming up.
Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
Okay, we got about another 75 cents maybe in NVIDIA. S&P at the highs of the day.
Welcome back to the Watch List. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We welcome in Rick Ducat, lead market technician, taking a look at a few names and options trades that you have found, digging through, seeing some action. Apple is first up, of course. We know that now the Trump.
Oh, geez.
Don't know what ultimately is going to happen, or do we think we know enough, Daniel, that we can make an educated assumption about how this ends?
Well, I think only Donald Trump knows, President Trump knows right now exactly where this will end up, and even he still has to go through these negotiations. But what I do think is we know that when the tensions have grown too much, he's backed down. He has backed down, but he's also getting us progress. And we've made progress with China. We're making progress with India. He's made progress with CEOs. I mean, him and Jensen Huang are still sparring, but we've made progress in the Middle East and in other regions. I think in the end, he doesn't want $3,000 iPhones for consumers in the U.S. We do not win if that's the case. But he also doesn't want a situation where
Palantir fading from the high. Palantir fading.
so important that we have no leverage. We're still not making phones here. We haven't advanced robotics, automation, and manufacturing here in the United States. And I believe that he wants to see Tim Cook. They've spent $600+ billion in buybacks, maybe additional dollars being
Okay,
spent.
Palantir pulling back. Take some off at the highs.
Bring more R&D back here and commit to the fact that we're not going to allow China or India to ultimately control our ability to get the most advanced technologies here in the U.S. and the most important devices to pretty much every consumer on the planet.
Yeah, as you're talking there, Daniel, it just sort of makes me think maybe sourcing is not the biggest concern. We don't necessarily want them to have the intellectual property or the ability to innovate the way that we always have here in the United States while we're distracted and or having to spend money on tariffs and not actually plowing them into R&D. I understand you actually, this is not Apple's biggest risk, but potentially the fact that they either don't get AI right or that it keeps getting stalled or that doesn't end up being a winner. You think that's really important for Apple to hit here, right?
I think that their misses with Apple Intelligence are their biggest risk. I think the price inelasticity exists. I think people will pay another $200 or $300 or $400. I think the problem is with 16, the Apple Intelligence really didn't impress people. Right. So we didn't get a super cycle. And if 17 isn't impressive, it really doesn't matter if they're the same price or $500 more. We'll keep our iPhone 12s and 13s a little longer. That's a bigger risk to me than 25% tariffs.
Yeah, and we also forget, James, that corporate tax rates have come
Okay,
down.
fading off a little bit. S&P, NVIDIA. Okay, we're seeing some profit taking, pulling back.
Some people wanted it higher, some people lower. I don't want to get into political sort of back and
Okay, UEC is at the high of the day. UEC at the high of the day.
I mean, yeah, it mitigates it to a certain extent.
It's not gonna outdo them. I understand that because it's a big difference between a tax rate and a higher price on every device. I get that.
Right. I mean, it will mitigate it, but at the end of the day, there's just so many unknowns in the market. I mean, you have, the dollar falling, treasury yields rising, foreign demand in treasuries falling. You have the unknown picture with tariffs, unknown picture with how the demand will shake out, how pricing will shake out, inflation. There's just so many unknowns right now, and to say with precision where things can land is just increasingly difficult. And whether it be assessing Apple's impact with the tariffs, with today's news, or just the earnings outlook for the balance of the year. So right now, I mean, I think you just got to be cognizant that there's a lot of risks swirling around, and just continue to stay.
Okay, we're coming back.
And we think that
NVIDIA coming back now.
Unfortunately, for over the near term, will likely do relatively worse compared to smaller cap technology.
And it's coming off of years of outperformance, so that might not even be that unusual. Guys, sit tight for a second. I love live television, Courtney, because we got two great guests here. But I want to also now go back and show the president again, who continues to sign these executive orders. So we're going to show that at the White House. President Trump speaking. This executive order that he's signing on nuclear is aimed. There's a few things it's trying to do, Courtney. It's trying to speed up the regulatory process, trying to build a nuclear plant. We'll talk to Joe Dominguez hopefully about this very soon. Can take 10 years just for the people.
Yep.
Just trying. So you cover retail. Imagine if it took Walmart 10 years to start the construction
of a store.
Right. Okay.
Untenable.
And Walmart, by the way, will build a new store in about 3 days.
Yeah, exactly.
Okay. They've got it down to a science. This is meant to speed up the permitting process as well as the fuel situation. Now, fuel obviously is uranium.
Mm-hmm.
Uranium is radioactive. There's dangerous things on uranium. So the process is a little more complicated, but...
All right, NVIDIA. All right, so NVIDIA's out of it for now. Looking for a bounce in this area, NVIDIA. Okay, Amazon from the highs of the day. We're starting to slow down. People taking profits, smartly taking profits.
I'm sure they love me. I see that in jest. It's literally just digging stuff out of the ground. Uranium, it's a mine. It's a thing. It's like gold. You just go there. It's in the dirt. You dig it out. You refine it.
Okay, so he's signing the executive orders now.
The entire nuclear
Look at that.
complex is higher today because
if this goes into play, then you can move a lot faster to actually get business going.
So that's an excellent point. I don't know. That's the goal of this EO. That's the goal of this executive order. But you have to remember that with energy, particularly with things like uranium, you've got a bunch of agencies that are all involved in the process. States are going to get involved. Localities are going to get involved. Environmental groups are going to sue. Let's hope we can speed the process up, because we want to be the winners in AI. But if we don't have the power, we can't do the AI. It's pretty much that simple.
And so, what do you think this executive order could do?
Okay, Amazon's starting to get bought.
If it will really
All right, so we got some
all these layers.
220, 215, 220. We got some profit taking. All right, so we're always watching what they do at this time of day. So did they buy this? Is it just some profit taking? How do we come out of this? All right, NVIDIA, we got a little bounce so far. Okay.
Again, guys, we call this producing from the chair. Daniel, is there any aspect of this AI ecosystem that you are investing in or looking to invest in?
Yeah, I feel very strongly that what you just mentioned, the energy side of the sector, this is the rate limiter, Brian, for all of the AI expansion. If you look at why we are running into problems with China, they're not advancing their technology as quickly as us, but they have 3+ times the capacity. So if we can't meet the energy demands, that is an area for certain. I also really like the enterprise workflow plays. There's about $4 trillion we expect over the next 5 years of cost takeout. I think there's a room to grow. And if we do enter recession, if things do slow down, I actually think...
Okay, we're getting a little bounce out of the S&P.
I can tell you anything you want to know about nuclear energy.
Looks like people taking profits. That's the way I would look at it. After that nice run up since around 1 o'clock, we broke out. A lot of these stocks ripped higher highs, higher lows. They keep saying some profit taking. All right, let's see if NVIDIA bounces here.
humans to work and getting things moving quicker in companies, taking out costs. And you see the companies that are growing the fastest are also taking out costs, just like Microsoft did. This is AI driven. And so that's a good place to look at investing.
Speaking of investing, James, I want to go back to you. I know that you said you sold out of your Apple position, so maybe you're not super thrilled about what's
All
going
right,
on
let's
in
see if
the
NVIDIA
technology
can
space
rock
right
this.
now. And gold and Bitcoin.
Okay, Meta squeezing, looking like it wants to follow through. Meta.
Like a little bit of a worry, a little bit of a hedge in a portfolio for me right now.
Meta squeezing again.
We've been long-term bulls on gold, so that really is independent of what's happening in the broader markets. But Bitcoin specifically is, we still think, one of the most
Meta
appreciated assets.
squeezing again. Plenty of time to go.
The largest contributor to returns in 2025. So we have no problem
your
keeping an
latest
outsized position in it.
Yeah, and you lay this out in your sort of investor note that you came out with today, James, I think, which is that you kind of beat people over the head with it. You said, what was your I'm going off memory here. I can't overstate the amount to which Bitcoin is going to play a role in our returns in 2025. I mean, that's a pretty strong statement if I got it correct.
Yes, and we haven't
Meta.
sold any of it, and we've been buying more on the dips. And we continue to think that all of the
Okay, Monday is a day off. We got a 3-day weekend, so I'll be able to enjoy a little time off. Always enjoyable. Maybe do something this weekend.
People ask me, I bought like a Bitcoin 10 years ago.
Tesla looking for a bounce. Tesla had a nice run up too. Into that 12:30 hour, 12:30 half hour. We came back and we're looking for another higher low.
Those two pies of Bitcoin, it's mind blowing. But for the viewers out that still, I struggle to answer the question to people. What's the value proposition of Bitcoin? I say I'm gonna call James Chakmok. So, what is the value proposition of Bitcoin? Why is Bitcoin at $109,000? What are you getting when you buy a Bitcoin?
Sure. I mean, you go back through all of history. You have seen fiat currencies have seen a reduction in purchasing power over time. And that's because governments continue to spend their own borrowed dollars, borrowed time, and you lose purchasing power. Gold up until Bitcoin was the predominant store of value because gold only increases in supply about 2% per year because it's just too expensive to increase.
NVIDIA, no follow through yet.
That. Bitcoin, however, has a finite supply and a scheduled increase in supply that's increasingly going down. So you have to look for stores of value that can maintain your purchasing power because government and fiscal and monetary policy is only going in one direction. Things will always continue to get worse. And we just don't see any asset class that can protect purchasing power better than Bitcoin.
Daniel and James, hey guys, great stuff. Thank you for.
All right, Bitcoin is at the highs of the week, but faded from the high. I'm not doing anything there. I do have MicroStrategy. Sold some Coinbase into strength yesterday. Coinbase. Sold some IBIT on Wednesday's high. I got Riot. Did I still have Riot or did I take that off? Let's see. Riot. No, I still have Riot. Looking for the energy stocks to move next week. Looking for energy stocks to continue.
Crypto.com is America's premier crypto platform.
Looking for energy stocks to continue over the next few weeks with Trump signing executive orders. TOI, Tim? Okay, thank you. TOI. Nice squeeze. Oncology Institute, like it. TO. Nice squeeze at 52-week highs. Nice flat base, too. Flat base. Let's see what kind of when's earnings. When are earnings? Earnings. TOI. TO. TOI. TOI. All right, let me go look here. TOI. All right, it's been a pretty lucrative week. Tuesday was an inside day. Wednesday was a pretty decent pullback for the Bears. If you traded on the Bears side, I didn't. The only thing I did was to start a long iron condor. I took those puts off this morning for a huge profit. TOI 812. Okay, what kind of news we got here? TOI. Apple. Okay. Nice squeeze on TOI. Yeah, I like it. I like it. I like it, Jim. Okay, that looks good. TOI, August 12th.
We just had the president wrap up some comments. I believe he talked about Apple. Eamon Javers, Eamon, you know what the president was saying. What just happened?
Yeah, Brian, that's right. I was in the Oval Office with the president and other reporters just a short time ago. The president continuing to express frustration here with the European Union, saying that they're not moving fast enough on issues that he cares about on trade, and also expressing some frustration with Apple, saying that he wants Tim Cook to move production here to the United States. I asked the president why he's confident that Apple can produce an iPhone in the United States at a price that customers will be able to afford or will want to afford. And the president reiterated his belief that that is a possible thing economically, and said with technology and computers the way they are, Apple should be able to make an economically competitive iPhone here in the United States. We've got a little bit of sound here from what the president said about Apple a short time ago in the Oval. Let's play.
Mr. President, on Apple, you said this morning that if they don't make their iPhones in the U.S., you're going to hit them with a 25% tariff. Right. Do you have the power to tariff one single company? And why would you want to put an American company in that way?
It would be more. It would be also Samsung and anybody that makes that product. Otherwise, it wouldn't be fair. So anybody that makes that product, and that'll start on, I guess, the end of June. It'll come out. I think we have that appropriately done by the end of June. So if they make that product. Now, again, when they build their plant here, there's no tariff. So they're going to be building plants here. But I had an understanding with him that he wouldn't be doing this. He said he's going to India to build plants. I said, that's okay to go to India, but you're not going to sell into here without tariffs. And that's the way it is. Yeah.
Well, why would you want an American?
What makes you confident, sir, that Apple can build in the United States at a price that American consumers?
Oh, they can. No, they can. And a lot of it's so computerized now. These plants are amazing if you look at them, but they can do that. And actually, as you know, Apple's coming in with $500 billion. So are the chip companies. We have all of the chip companies coming in. The biggest, $500 billion, $200 billion, $250 billion.
Hi, tick alert plus 800.
Okay, high tick alert.
And, the iPhone, if they're going to sell it in America, I want it to be built in the United States. They're able to do that.
When you see the Walmart chips.
And one funny moment there, Brian, as the president was talking about iPhones, the phone on the Resolute desk in front of him rang, and he looked over and picked it up, and he said it was a congressman calling in. But he said, I asked him, was that an iPhone that just rang? He said it was. So as he's talking about iPhones, he's on the iPhone. iPhones are ubiquitous in American society and ubiquitous in the Oval Office as well.
Yeah, you wonder who the congressman was, and I have to say, I
just wonder what the number was that he was calling.
Well, that's what I was going to say. The fact that the president of the United States literally just has a phone there, it's cool. It's maybe a little troubling. We've had some security issues you might have heard about lately with
UEC moving higher. UEC.
He had two iPhones on the desk in front of him.
Two. That's a flex. Eamon Javers. Eamon, thank you very much. All right, so you had Trump's signing the executive order on nuclear energy. He was talking about Apple just there, but the EO on nuclear was a big deal. Coming up, Joe Dominguez, the CEO of huge power producer Constellation Energy, based just up 95 in Baltimore. He will join us as well. A lot going on. It's fluid. Market's down a touch. We're back right
Okay. CCJ trying to go. UEC trying to go. UEC trying to go. CCJ looking good. UEC. All right.
But unfortunately, on days like this, it's overshadowed by the tariff and trade war fears.
Yeah, understood. I mean, at this point,
She understands. Okay. NVIDIA looking for that follow through.
there's room for people to get into a lot of names like in the Mag 7 or no?
Yeah, I think so. Our biggest takeaway from first quarter earnings just a month ago was that the AI rollout investment, the benefits businesses are seeing.
All right. Looking for Uranium Energy Corp, UEC, to break out. It's pushing up against the highs. UEC looking good. Trying to break out. It's above the 200-day moving average.
NVIDIA is finding entirely new customer groups for its semiconductor chips. Sovereign AI is a real thing after last week's visit across the Middle East by Trump.
EOSC looking good, Frank.
I think there's just a huge amount of evidence that AI tools are being used. They're helping people. They're saving costs, and they're generating new revenues.
Right, understood. Tell me about some of the names that you do like here that you really think can go into the portfolio. I know you have TransDigm and United Rentals. I mean, folks have been talking a lot about NVIDIA ahead of their, before I get to TransDigm and United Rentals, I mean, NVIDIA ahead of their earnings. Google had a lot of good news this week. Would you say those two should go into a portfolio?
Yeah, those are two of our top 10 holdings, NVIDIA and Google. We also like Microsoft a lot. That stock was beat up pretty severely earlier this year because people feared that their Azure cloud computing unit was seeing slower growth. But the company dispelled those fears just last month during their earnings season, provided good guidance about Azure going forward. Their software products and Copilot products continue to roll out nicely. So I think Microsoft is another good one in that AI group.
Right. Okay. So I got those written down. And then what is it about TDG, TransDigm, that you do like?
Yeah. TransDigm is probably
S&P is still trying to push to this level. S&P spiders watching. Pushing up against the highs of the day. Pre-market, we were a bit higher. So maybe we can retake that. We got an hour and 20 minutes, hour and 19 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Just enjoying the end of the week rally.
Also, we like the fact that their debt balance has been coming down recently, which is going to enable the company to accelerate their acquisition program and also buy back shares, which is something that they've been doing lately, which signals to us and other investors that the management team thinks the stock is attractively priced. And then finally, absent acquisitions and share repurchases, the company tends to pay special dividends at the end of the year, and sometimes fairly large ones. So we think we're going to win either way. It's one of our favorite ideas today.
Okay, Netflix is trying to go. Netflix is trying to go.
Yeah. United Rentals is a wonderful business. It's been doing well for years and years now. The main reason they're doing well is because the users of construction equipment, so contractors, municipalities, etc., are gradually but steadily shifting their use of equipment from owning it and maintaining it themselves to renting it from the big, rental yards like United Rentals or Sunbelt. So that kind of ongoing, durable, secular shift benefits their demand, and then United builds on top of that by having developed
Squeezing.
a specialty equipment fleet that is growing faster than general rentals and has higher margins. So we think that's a story of reasonably good end markets, really good management, shareholder-friendly capital allocation, and that's kind of the core formula that we're looking for with Argent's large cap strategy.
Yeah, and what about when you had is ServiceNow on your list, on your watch list, or a top holding?
Yeah, we do own ServiceNow. That's also a holding we have, and we like ServiceNow. We think they've got outstanding management.
Squeezing, S&P squeezing.
I think a really well-positioned software company to.
Oh boy, a lot more.
And so they're rolling out new products. They're seeing a good reception in the market right now. I think that they said
A lot more than expected today.
Achieving a $1 billion ARR mark by the end of 2026, which would be a real accomplishment. They'll be one of the largest AI software vendors in the world.
All right. Well, I thank you so much. I mean, it's great to talk to you, Jed. Thank you very much. Jed Ellerbrook. Thank you. He's the portfolio manager at Argent Capital Management. Well, still ahead, folks. It's time to talk crypto. It's been a hot topic all week with Bitcoin hitting new all-time highs. Ethereum has run so hot this month. Now what? We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management.
Looking for a move out of the squeeze. Do we pull back or do we move a bit higher?
Yeah, Schwab lets you invest and trade on your own. And if you want, they can even manage it for you. Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
Okay, UEC is trying to break out. Keeps trying to break out.
Torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
All right. Not getting the kind of follow through I was hoping for, but it's been a pretty good week. So I hope everyone's cashed in on some profits. Okay, FLR, nice move on FLR. Today, mentioned earlier, a number of you mentioning it earlier. Nice job. FLR looking good. FLR, nice move today.
To go higher. What you've seen over the last year and couple months is kind of this confluence of positive catalysts.
Okay, S&P still squeezing. S&P still squeezing.
The SEC and even state governments kind of showing their stamp of approval and building sensible regulation around the industry.
Okay, UEC breaking out. UEC breaking out of a 5-minute range. Okay, UEC breaking out of a 5-minute range, starting to move higher. Look at the volume. Volume.
For Bitcoin, absolutely. If you think about Bitcoin and where it's come, this particular rally that we've seen really has the feelings of institutional instead of the retail FOMO that we saw in, say, December. So my personal thought is when the retail FOMO starts to hit and the retail side of the trade really starts
Okay, UEC trying to break out of this range. Finally making it through here. Okay, right through this area.
Don't get into the price targets. We're generally believers long term up into the right, of course, but I think 150 is right around the corner. As I mentioned, you've got, besides the retail, you've got a lot of companies following the Sailor strategy lead and adding into their corporate treasuries, and I think that will also provide a lift as well. So I think 150 is very
All right, S&P is still trying to come out of this squeeze on the 5-minute. All right, let me just look at. Let's look at this.
Yeah, you mentioned the naysayers, and that's kind of been something that's
Okay, we've moved above that 5,800 level, obviously. S&P 500, cash.
So I think what you see with Bitcoin over
All right, almost made it to 5,830. above the back above the 200-day. Testing that this week. New York Fangs look okay. They're still fading from the highs of the day with profit taking with an hour and 9 minutes to go.
Reason to invest in Bitcoin, they become long-term holders. So that's why it's a very strong holder base for an asset like Bitcoin.
Right. And we saw prior to the administration coming in, we knew stablecoin. Trump was saying, I really want to see the Congress receive stablecoin now so we can price it in U.S. dollars before somebody else does. And that would help. Does that help, James?
Stablecoins help on a lot of different fronts. I mean, it's just improved payment technology. It helps support the U.S. dollar as a reserve asset,
right?
As a currency of the world, etc. So, yes, stablecoins help in a lot of different ways.
S&P squeezing on the 5-minute, looking for this to resolve one way or another. Big fat body candle today. So it looks a lot better than we anticipated at the start of the day.
Sure, yeah. First and foremost, if you look at the SEC stance on crypto with this new administration, it's much more supportive in wanting to work with the crypto industry compared to the prior.
Okay, so this looks a lot better.
So that's definitely helpful. You see some.
All right, so if we get a follow through on Tuesday and we push back up into this range, then we can start to see potentially this pulling, this building a little bit more range bound action, do something like this sideways and just keep range bound until we break out. At any rate, we're just watching to see how this plays out into next week. Okay. All right. All right. RSI is still drifting lower. Strength of trend, pulling back. Watching this squeeze. All right, UEC continues to push higher. So I'm going to shift to UEC. The S&P is just grinding. UEC continues to push.
Yeah, absolutely. Exodus is a self-custodial digital asset wallet. So you can use our wallet to store your funds without Exodus or anyone else being able to touch them. You're the only one who can touch them. And on our platform, you can do things like buy Ethereum with Bitcoin or vice versa.
Okay.
Different uses, but those are some of the main ones.
And when we look at strategy,
all right, the top 10 on the NASDAQ 100 going into the last hour of the trading day. Hour and 6 minutes to go. Intuit, CrowdStrike, DoorDash, Constellation Energy, Palantir number 5, Mondelez, Axon, Coca-Cola Europe, American Electric Power, and Zscaler.
And also, you noted Jamie Dimon, for example, just being a little more friendly to the Bitcoin world after having been more vocal about not believing in it prior. We mentioned BlackRock investing too, but we know that now it's becoming much more prevalent overall. James Gernetsky,
UEC looking good.
Great to see you both. Good conversation there. And thank you, friends, for being with me here on the watch list on Schwab Network. I'm Nicole Petalides. Right now,
UEC, I did buy some December 6 strike calls, December 6 strike calls on UEC.
Free, tune in 24/7, schwabnetwork.com. We have you covered. Plenty to continue to watch. We have market on close.
Okay, Palantir did drift lower since about 2 o'clock. Starting to build higher lows now. Palantir starting to build higher lows. Looks like it's going to pop back up now. Palantir. Okay, end of the week. Price action looking strong in J&J. Just sideways. J&J sideways. Okay. Johnson & Johnson, Palo Alto Networks, Palo Alto Networks. All right, bouncing back above the 200-day. You could trade Cyber too, Cyber, CIBR. I have a position in Cyber in my 401k, IRA. Micron, it's okay. Disney been seeing that with the alerts today. Disney, not much follow through, just sitting there. The cruise lines been watching these. Norwegian Cruise Lines, NCL, and others look good. ABBV, AbbVie. Okay, Supermicro had pulled back. Okay, it's starting to bounce at the 200-day. Petrolio Brasilio, looking good. And Lowe's. Okay, that pulled back. Amazon at the highs. Okay, I don't feel any kind of follow through at the moment, so don't feel any follow through. It did push the high of the day there. UEC pulling back in now. Okay, stocks like Nvidia just kind of fading at the moment. See if we can't get a follow through in the last hour. Hour and 3 minutes to go. S&P is still off 20, more or less. Futures off 25, 24.
We're just getting started. Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investment
Meta fading back inside of the earlier range. Still got time for a end of day scalper or two. If we see any kind of price action, we'll let you know. Right now, we're just seeing profit taking fading into the last hour. Nvidia's fading a bit more. Okay, S&P. Let's keep an eye on S&P. Just still squeezing. S&P still squeezing. Bollinger Bands tight. Could take some puts up here for next week. I'm just thinking I'm not going to do that. The idea was to take profits off into strength, reduce risk. I've been seeing people taking profits during the day into the room, which is good. That's what I'm thinking of. That's what I've been doing. That's been my plan.
Price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Looking for those power companies, anything to do with creating power in the States, now that the president's behind that. The grid, upgrading the grid. I think Stephanie Link was talking about the next decade, which makes sense. It's going to take a while to build out the grid. Update it.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden. With an hour left in the trading day, let's take a look at where the markets stand right now. As we look at the S&P, we're looking at 5818 right now, down about 0.4%. Next, looking at the NASDAQ, we are down more than 132 points right now, down 0.6%. As we move on to the Dow, we're down about 1/3%. It's just a lot of red today, and the Russell also down the least on the day, though. We're down about 0.16%. As we move on now to take a look at some of our futures products, we'll take a look at the dollar, gold, crude, and Bitcoin, how they're performing today. Dollar not down as much as we've seen, down less than 1% right now. Gold coming in at 66.70, up 2% on the day so far.
An hour to go.
Coming in at 61.69.
It's an hour ago.
Up almost 1%. And Bitcoin after
Let's see what they have to say on CNBC.
Friday, scoreboard looks like that. Was not a pretty picture right out of the gates today. We were down big early. We tried to fight our way back throughout much of the session, doing a pretty good job. We'll see if, in fact, we can maybe close positive today. Apple got some work to do. It's lower for the 8th day in a row after the president threatening the company with a 25% tariff on iPhones made outside the U.S. It is the stock's longest losing streak in more than 2 years. Elsewhere, the VIX popping past 21 today. Interest rates at the long end, which have given the market such a headache lately, especially earlier in the week, well, they've come down a bit, and we're watching that closely as well. It takes us to our talk of the tape today. Rising trade risk once again, where stocks could be heading from here. Let's begin with late-breaking news out of the White House at this hour. Our own Eamon Javers just out of the Oval Office, in fact, and asked the president a question about Apple. Got an answer that was very interesting. What can you tell us, Eamon?
Yes, Scott, that's right. The president continuing to express frustration in the Oval Office with both the EU and with Apple. And let's start with Apple. The president was asked by another reporter in that session in the Oval Office a short time ago how he has the authority to issue a tariff, as it suggested in his early morning social media post, against just one company, that is, against just Apple. Here's how he answered.
It would be more. It would be also Samsung and anybody that makes that product. Otherwise, it wouldn't be fair. So anybody that makes that product, and that'll start on, I guess, the end of June. It'll come out.
And Scott, I also had the chance to talk to the president briefly, and I asked him about the EU, and I asked him about Apple Computer as well. The president told me that he's confident that in the end, Apple will be able to make an iPhone that is competitive economically in the United States. I asked him, what gives you that confidence? He said, well, with computers and technology, they can produce that product in the United States at an economically competitive price. Now, a lot of analysts that you've talked to and I've talked to might disagree with that, but the reality is that's what the president of the United States believes, and that's what's driving a lot of this. And on the EU, the president simply said he was frustrated with the progress that they have made, doesn't like the fact that the EU restricts American vehicles, in his view, into Europe, and expressed frustration with the slow pace of negotiations with the EU. So not clear whether there's going to be a breakthrough there. We know there was a call at 11 a.m. this morning between both sides. We haven't gotten
Market's just sitting here chopping.
Whether any progress was made at all, Scott. So the president, continuing to vent some frustration.
Not really interested in doing anything this late in the day unless it looks like we're going to get some momentum.
Both the update on the EU and that company. We can take a look at the stock here, which looks like it's trying to head back to the lows of the session, about 3%. On that note, let's bring in Steve Kovac for more on what this does mean for Apple. Longest losing streak now in a while, 8 straight days. We're looking at a couple of years since we've done this. What do you make of this? I don't know if you want to call it a new development, but new commentary, if nothing else, from the president.
It is a new development, Scott. At least that's how I'm viewing it, because we've got some timing on this. So earlier this morning, he didn't give a timing for when these tariffs would hit the smartphone industry. Now he's saying it's all smartphones. That's the other bit of it, too. But it's going to be at the end of June, which coincides with the end of the June quarter for Apple, going into its fiscal fourth quarter. And we already know what the cost of these tariffs, or what Apple estimates the cost of these tariffs are going to be for the June quarter, because it front-loaded all of those iPhones ahead of time. $900 million. You're looking at it right on your screen. This just complicates that picture. And again, like Eamon said, the president thinking, okay, everything. He used the word computerized, the president did, about building iPhones. That is not how iPhones are built. There is some automation in there, but as we talked about on your show earlier today, it's so much of it is the humans that are out there. We just don't have that labor force. So I don't know where Trump thinks that is going to be coming from, but that labor is coming from. But it is not just possible right now. It's just kind of fantastical to even imply that. And look, we've even seen Apple kind of doubling down on its bet in India. We heard overnight from the Financial Times, $1.5 billion being spent with Foxconn to expand production in India, again for the U.S. iPhones. And then what Apple's telling investors, which is our ultimate goal is to ramp up production of the iPhone in India for phones sold in the United States because of that lower tariff rate. And then for everything else, Vietnam, that's stuff like MacBooks and AirPods and watches and the like. Well, China will supply the rest of the world. Still going to rely on China for iPhones sold in the U.S. for some time. But that is the direction they're going in, and no indication whatsoever that there's going to be a U.S.-made iPhone. So even though Apple may have dodged those tariffs and got that exemption,
All right, we're starting to slide down. Starting to slide down this lower Bollinger Band, so it looks like we're going to pull back a bit.
So we'll see if this is just some kind of negotiating tactic or if this is another taco.
Most stocks are showing a fade, not doing anything at the moment. It's been a good week, with the exception of Wednesday. We've had Monday, Thursday, and Friday some decent gains. So it's a little late in the day. I'll be watching for any kind of potential pops that we might be able to take on stocks like Microsoft or Nvidia, Netflix, but all of them are fading at the moment.
What has Tim Cook done aside from not saying that he's going to build all of the iPhones in the U.S. to get on this side of the president's nerves?
To get on this side of the president, that's it. That seems to be what's sticking with Trump is the idea that on that investor call just a couple weeks ago, telling the world that we're going to be producing in India, not in the United States, and that's what's sticking with Trump. Trump does like to talk about that $500 billion investment that Apple committed to over the course of his presidency, but that's not to build iPhones. The only thing they've actually committed to build in the United States are some servers for artificial intelligence, the cloud product that they have for artificial intelligence. That's going to be done in Houston, Texas. The other billions of dollars that they're talking about, it's unclear exactly where that's going to be invested in, but we know where it's not going to be invested in, and that's building iPhones, Scott. So, I mean, you want to talk about the relationship between these two men. We know what happened in the run-up to Inauguration Day. Tim Cook donating $1 million of his personal money to the inauguration fund, the dinners at Mar-a-Lago, showing up at the inauguration, all of that stuff has been just not enough for the president. And we see him again and again and again over the last 2 weeks, just calling.
Okay, starting to bounce.
There's a problem with Tim Cook, and now this huge tariff threat that is about a month away.
All right, Steve, thank you for that. That's Steve Kovac. We continue to follow it because Apple is such a big stock, falling below $3 trillion in market cap yet again today. Many of you watching this program own it in one form or another and care about where it goes from here. So for more on that, let's bring in Big Technology's Alex Kantrowitz. He is CNBC contributor. It's good to have you with us today, too, as we have this new development late day. So here we go again. What do you make of it?
Well, it's really bad for Apple. I mean, if these tariffs go into action, then what you're going to see is Apple's either going to have to do a price increase on the phones, or it's going to have to maybe roll back some of that buyback it planned, or try to rethink its dividend. Those are the three areas that you end up looking to try to get the relief here. And if it's an increase in price on the phone, we know that the services part of Apple's business is what's driving this stock. And services to grow needs users, which means that Apple needs those customers. And that's why Apple has been reticent to raise the price on these phones, because it knows the thing that's driving its valuation isn't necessarily iPhone sales, although those are important. It is the fact that people are using its services, and that area is growing, and investors are looking at that and adding a multiple.
Bouncing back into the pattern.
So if you see a big increase, I don't think Apple's going to bring the phone back here, but that tariff could end up increasing the price of the phone.
All right, Microsoft's starting to turn back up. Microsoft.
In its attempt to grow that services business.
Okay, let's see how far this goes. Microsoft, 452.50, another area.
A point that was discussed today on the halftime report as to whether the stock was expensive or not. It's much more expensive than it was 10 years ago based on valuation, right? Even with this mountain of cash that they are sitting on, it's about 27 times. What you're telling our viewers is the reason that some are willing to pay up to a higher multiple is because all of these expectations around the services business, which is a Fortune 50 company all by itself.
Exactly. And so this is a threat to it. And by the way, it's not the only threat. We also know that the money that's coming in from Google to be the default search on
See,
iPhones,
Microsoft can get something going.
regulatory action.
Looking for Microsoft to perhaps build another higher high.
Because now there's a chance that Apple might not be able to prevent app developers from telling people that they can go elsewhere and get the subscription cheaper, right? There's been policies within the App Store that has been impossible, and there's other regulatory effects that might take impact. So when you think about this service business, which again has been driving the stock, you now have the threat from tariffs, the threat from regulation, and the potential loss of that Google money. And now Apple will probably be able to get past a number of these issues. But to expect them to become entirely unscathed after such a situation is a lot. So again, still up for debate. We're going to see what's going to happen, but it's a lot of challenges at once for this company, not to mention the challenges that it faces with AI.
Lastly, what about the relationship here between Tim Cook and President Trump? We had made the point over and over again at the beginning of Trump 2.0 and his new administration, how deftly Tim Cook had managed that relationship. He had managed to stay out of the crosshairs at a time where many of his contemporaries within big tech had not. And here we find that Tim Cook is back in the crosshairs and in a very big and recurring way. What do you make of that?
Absolutely. Well, look, Apple, again, nearly a $3 trillion company it probably was when they were talking. Now it's just below. And the amount of jobs that you would expect from a $3 trillion company, if you're kind of thinking old school in a technology way, is massive. But a lot of the jobs that are involved in manufacturing these phones are elsewhere. So it seems like Tim Cook is going to have to bring some jobs to the United States one way or another to be able to appease Trump. Now, I'm just speculating here, but I imagine that when Tim Cook met with Trump, Trump said, "We need you to bring jobs to the U.S." Tim Cook probably said, "Okay, yeah, we're going to do that, Mr. President." And then, he sees that the manufacturing has moved to India instead of China, and that's led to this blow up. So I would imagine that for this to blow over, Tim Cook is going to have to basically make a concession to Trump. Maybe it's just ceremonial 2,000 or 3,000 jobs that come in for manufacturing, or they put the final stamp on the package and they say, "Okay, this has been assembled or completed in the United States." But he's going to have to do something.
Extreme high tech alert.
You're right.
All right, extreme high tech.
This relationship for Trump to
Okay, here we go. Here we go. Extreme high tech. This is the end of the day I'm looking for.
He's again talking about tariffs. It doesn't seem like things are as hunky-dory as they were in the first term. And if you are an Apple shareholder, or if you're worried about the future of Apple,
Extreme high tech.
ability to be this epic diplomat.
Okay, looking for the pop here. Netflix, Microsoft, Google, all of these starting to pop up now. Tesla. There goes the S&P. Good job. Good job.
Ultimately, this is not exactly the position you want to be in if you're him or if you're a shareholder.
Yeah, the chart doesn't lie. Down 22% just about year to date. Alex, appreciate you. Thank you. We'll see you soon. Alex Kanchowitz. Now let's bring in JP Morgan's Gabriela Santos, Robin Hood Stephanie Guild, and CNBC contributor Requisite Capital's Bryn Talkie. It's great to have everybody here. Bryn,
GE. Having a good day today, GE.
what do you think about all this?
GE.
I think one thing that Steve missed, I think is really important, I think Steve hit on so many great points, is also you have the Johnny Ive
Okay, bullish engulfing at highs. GE.
is a huge blow because obviously
Okay, it looks good. GE.
it was so important in making
Okay.
the iPhone, the shuffle, etc. And so we'll see what happens with that. And so I think that where Tim Cook is a master statesman, diplomat, if you go back to 2018, remember Foxconn to acquiesce Trump, said we're going to build this big LG manufacturing plant. Great, you get a pass. Guess what? It never broke ground, and I think Microsoft just bought the property recently. And so I do think that the statesman diplomat that Tim Cook is, they could easily make promises.
Okay, Microsoft trying to get back to the highs.
We're going to have an election and
S&P. See what they can do with this. S&P 500. Hanging out above 5,800. I'd like to see this run higher. Peloton, nice job.
Feel that they are behind in the race, and we'll see what products come out of, OpenAI. I'm not sure, but I do think that Tim Cook is really in a difficult position because you actually look globally, the one country that has incredibly high tariffs is actually India. It's about 12%. And so if he goes to India, while Besson and the crew are negotiating with India, it doesn't help their cause. And I think Trump's pointed that out. We don't want you to go to India because they're trying to negotiate with India, which is a closed economy and has very, very high tariffs.
This stock have a valuation problem, Stephanie?
maybe it does. Throughout this whole process, a couple of things I would point out. One is that I don't actually think Trump is that mad at Tim Cook because I think he could be way meaner and he can say meaner things. I think he's just trying to get more investment. But from a valuation perspective, like the company is down 24% year to date, maybe even more after today. I didn't look at it since this morning. And you have 50% of the revenues are, makeup phones. 36% comes from the U.S. 2/3 of it means that the revenue comes from outside the U.S. So I think he's also a global player and has to respect the fact that not the U.S. isn't the only game in town for him.
Good way to get to you, Gabriella. Here we go again, where we had a bit of a respite of what felt like a couple of weeks. We weren't obsessed.
All right. Stall. Okay, so it looked good there for a sec. Got some extreme high ticks, so probably got some shorts to cover. No follow through.
I think we'll still say the T word, tariffs, for a while. President Trump does like tariffs as a tool for a variety of objectives. I would still say that we're likely past the worst of the tariff storm, but it's still cloudy with a chance of showers. What I mean by that is we're still past that peak rate we got to on April 8th of about 30%. We're still kind of settling in here at 14% on a macro level. It's also still much less widespread. It's now less of a hammer, more of a scalpel impact, but that doesn't mean it doesn't have an impact, especially on specific companies. It's not just in the auto sector. It can also
Okay, next week and the following weeks, I'm sure there's probably going to be a lot more conversation about the energy markets, specifically the nuclear side, the SMRs, the providers and miners for uranium, the builders, construction-related names that were mentioned in the trading room earlier. That'll build out the grid. Lots of things going to be happening probably in the near future, so be doing a lot of research over the weekend. Hopefully some of you will as well, and we can all share our ideas in the trading room next week. It's been a pretty good week. Monday was pretty strong. Had lots of profits. Monday, huge day. Made an interim high. Made an interim high on Monday to start the week. We faded inside day on Tuesday. Tuesday was kind of like, nothing happened. Didn't put a whole lot of new positions on, which was good because the next day, Wednesday, was a down day. So that sort of took away from some of the gains that we had made in the previous weeks on the gap above the 200-day. And of course, yesterday was good. Selling into strength turned out to be, in hindsight, a very good idea because we faded from the high of the day. And then, of course, today we gapped down and then bounced. So a lot of you got these bounces this morning and were able to ride that up. I had a iron condor on the S&P 500 spiders, both the put side and the call side working out. The put side, we took that off this morning right at the open. Had the 575s. Those turned out to work very well. And the 580s. I think it was the 580s. Let me just double check before I make a. Let's see. It was the. I'm sorry. It was the 580, 585. 580s, 585 side, 575s. These were really good. Okay, at the open, those puts did really well. I had the 580s and 575s.
I feel like the market is turning, to your point, the volume of the day and realizing that maybe this is not actually going to take place. It's more bluster and bark than actual bite, and that the market is voting here. Now, Apple aside, because the stock's down 3%. But if you take what's happening, what he said with the EU, what the president did, and the initial market reaction, the price action today would tell you that, no, believe it when we see it.
Okay. So Suffice to say that we're probably going to see more consolidation. The fact we stopped at the 200 day and we got a little bounce is a really good thing. Doesn't mean we can't follow through next week. Hopefully we don't. Hopefully we just consolidate up here. 23.5% gain off the April 7th low. So we weren't surprised to see. We were anticipating a consolidation. I was very surprised to see the strength we had on Monday to start the week. But then we had the fade, the inside day on Tuesday. I thought for sure maybe we would just move sideways in a range. Nope. Wednesday had other plans. So pretty decent week all around. Hope everyone did fairly well. Palantir's fading it a little more. So we'll look for next week to give us an edge again. Hopefully we bounce. I'd like to see Tuesday up. RSI still dropping. So is MACD and stochastics. So these are reset. These are resetting now. So that could be good for Tuesday next week. Okay, we have a 3-day weekend. Okay, back to the S&P.
But I think on a single stock basis, like it creates a lot of opportunity. Exactly. Like there's a name like ResMed. It actually is not subject to the tariffs, and people are still needing, have sleep apnea problems. You have a name like Gap, right? It's up 40% in the last month.
Reports next week, doesn't
right?
it?
And they've been, and I think the company itself is trying to control what they can control and improve their with or without tariffs, right? You have Home Depot, which actually is not that subject to tariffs. So I think actually creates a lot. This volatility creates a lot of opportunity. Absolutely, and I think we're actually saying the exact same thing. For us as macro allocators, as multi-asset, to us the focus is the starting point, the expectations, over concentration in U.S. equities, and the next marginal dollar. Looking elsewhere and having more of a neutral allocation event. And within the market, there's still plenty of opportunity.
Bryn, last word to you. Wrap it up for us with what's your best idea then? Your best area to look right now. If not everything is going to be caught in the tariff whirlpool, what can stay above water?
Innovation. There's so many. I mean, the Qs are above the 200-day. Robinhood, Nvidia is back. I mean, the only stocks below the 200-day on the tech side are Google and Apple. I think Stephanie was spot on. There's so many great companies, but I will say U.S. will remain exceptional because we have this thing no other country, especially in the U.S. is we have Silicon Valley, we have the tech sector, and you continue to see so many companies. I'll say like a Robinhood, a Palantir. Look what's happened with IonQ. So much excitement going on that's really bucking the trend of the overall S&P. So I do think this is a good stock pickers market. And obviously I'm talking about my book. It's a great year to sell calls against names as well because the vol is so high and you get a ton of call premium.
Yeah, we saw that move in IonQ since you talked about it a couple of days ago. I see you. That was great. We discussed, we debated, and that's everything that we like to do. Ladies, thanks. We'll see you soon. Gabriella, Stephanie, and Britt. We're just getting started here. Coming up next, investors anxiously awaiting results from NVIDIA midweek next week. We'll discuss what is at stake for big tech and for this market at large. So Capital's Low Tony, he's in the house. He'll join us here at Post 9 after the break.
All right, S&P fading. It was a quick little fade. I don't know. Maybe a few puts for next week. I'm going to take a few puts. What the hell? Just as a hedge, it's not a trade. So if this does drop a bit more, I'll take Tuesday. Tuesday next week. Okay, puts for Tuesday next week. Let's see, the 5.75s are $1.35. That's pretty inexpensive. That is a 26 delta. Let me buy the 40 delta. That'll be a 580. Let me take the 580s. Right at 580. 580, buy that. Vertical. This is just the hedge. 580, 575 for no puts for next week. Purely a hedge. Still have a few longs that I'd like to Profit. Takes them off into profit. So I took some 580, 575s vertical. All right. So I took some 580s on the SPY, 580 SPY. I sold the 575s. So if we run back to 575, I could always take those off and then roll some or whatever. Let's see how far this goes. Some profit taking into the weekend, long weekend. All right. Hope everyone had a good week. I'm your host, Cousin Vinny, coming to you from theclosingprint.com with 33 minutes left to go.
Okay, welcome back. Apple, not the only mega cap we are focused on today. NVIDIA is another big story because those earnings are looming large next week. Joining us now at Post 9 is Plexo Capital's Low Tony. Glad you made the trip east and you're here with us.
Thank you.
So what's riding, do you think, now on NVIDIA, just given the conversation around big tech? And we're obviously fixated on Apple today because it's a big story, and I'll ask you about it in a minute.
Okay.
But this one first.
Yeah, sure. What we saw this week was a lot of announcements by the AI companies. You could almost call this AI week, right? So you had Google I/O, which is probably now just Google AI. You had Microsoft, you had Anthropic, you had OpenAI. And so I think what we're seeing is we're seeing a little bit of a split in the stack now, more like a barbell, I might want to call it, where you have the companies like NVIDIA that are sitting at the infrastructure layer. And then above that are the large language models like Anthropic and OpenAI. And then on top of that are all the vertical AI, the services, the agents, all of the things that either the enterprise or consumers are using as end users. And I believe what's happening, speaking to NVIDIA, is that we're seeing a lot of value created on that infrastructure layer, right? The people that control the chips to be able to provide the compute power for the LLMs. And then on top,
all right, we'll continue to fade a bit more.
Are people building really nice models that are very interesting to be able to take advantage of that power that's provided by the LLM. So we're kind of seeing a little bit of a barbell effect, and I think a little bit of a commoditization of the LLMs, right? I think what's ended up happening is they are almost becoming a utility of sorts. If you think back to the early days of the internet, you know, the internet providers initially were able to have a lot of value that accrued to them from the enterprise value that was generated by the internet, but ultimately providing internet service itself became somewhat of a utility, and then the value accrued to the folks that were creating the interesting apps, either on your computer or on your phone.
Okay, there are a number of things I want to ask you. Let's go right through the major issues, really, of the week and of the times in tech. Besides NVIDIA, obviously looming large. Trump relationship risk for these CEOs. Front and center, obviously, today.
To be clear, I'd love to see the markets move higher on Tuesday. I just took a hedge. That's all it is. If it blows up, that's fine because most of my positions are long. Just taking a little bit of a hedge.
What kind of relationship risk do you think really does exist with these names?
I don't know how much I would push down the risk spectrum in terms of having those relationships. I think what we're seeing is that the realization we've entered a new world where I think policy, government relations have been important for some time, but it was more around making sure that the regulation was going to be open enough for companies to be able to innovate. I think now what we're seeing is, policy leading to deals, right? And so I think that's a very interesting area, and I think that's why you see so many people spending time down in West Palm Beach or in Washington, D.C. Now, there are some good things around this, right? Like if you look at what's happening with AI and the legislation that was pulled back from the past administration, I think overall for tech, that is a good thing for innovation. And I think we'll have to wait and see how these other things play out.
Okay, Google. Stock has rallied back pretty nicely since the Eddie Q sell-off. You know what I'm alluding to because we talked about it a lot. Eddie Q's in a courtroom. He says, well, search on the browser has fallen for the first time ever. Google shares go down. Everybody says, oh my gosh, this is an existential threat. What we've been worried about with the LLMs eating into the search of Google. Stock, as I said, has rallied back nicely. Was that overplayed?
Not in the short term. Not in the short. In the short term, I think I should say not in the long term. In the short term, I think yes. But I think when you start to plot out the trends of search terms on Google, it's reflected in some of the announcements they made this week around incorporating more of the Gemini 2.5 with their search to create a more chat-like experience to replicate not only what someone can do on OpenAI, but I would actually maybe focus a little bit more on even a Perplexity, right? Because Perplexity, again, when we think about the barbell effect, Perplexity is sitting on top of all of the LLMs and creating a really compelling experience. So
It's a wrapper.
Correct. Yeah, sitting on top as an application at that layer so that they don't have to worry about investing all the money into creating the models. They're just sitting on top of the models and routing the queries based on what's needed to the best LLM for that query.
Okay, lastly, OpenAI and Johnny Ive. A lot of eyebrows raised this week, so well, that's interesting. The design god from Apple is going to he's going to have his company bought by OpenAI, and they're going to make products, and then Ive mentions legacy products. What'd you make of that?
Okay, we continue to fade.
That is a view towards what is that next hardware platform.
All things considered, the New York Fangs are holding up fairly well.
What's happening with all the advancements with AI itself. And now I think people are starting to think, what's next beyond the phone itself? And how do we think about the ways that we can incorporate AI into our daily lives, make it more seamless, and not have to constantly be down in the screen? I think that's what I would make my bet on.
Are you looking as a venture capitalist to invest in more software, service-related companies at this point, or where do gadgets?
All right, let's take a look. CCJ, Kamiko, at the high of the day.
Is hard because of all of the different nuances and the integration of the hardware and the software. I mean, I think now, speaking back to your earlier point, we have to think about policy impacting supply chain and where are the best components that exist for the miniaturization of these gadgets and components. It's really in China. So I think that's what people have to think about when they look at hardware, the integration of the hardware.
These knuckleheads in the background. They're like teenagers.
They love a 3-day weekend even more.
You gotta love that.
Take offense to it, but that's a tradition on the floor. So that's all right. Is at the bottom of the hour at 3 o'clock. Low, thanks.
Thanks for having
See
me.
you soon. That's right, Tony. Flex up. All right, up next, 314's Warren Pies. He's tracking the technicals for us. He's up with me next.
All right. Hope everyone had a good week. I've got 25 minutes to go. I'm just scanning through a few things, not really doing anything at the moment, just watching. Not doing much. I did take a hedge with the 580s, 575s, vertical, just in case we do move a little bit lower. Those expire on Tuesday, so that's just a hedge. Let's see what's going on here. All right. Walmart didn't manage any bounce at all. Walmart. Okay. Snowflake. All right. Snowflake. That's working out pretty well. Snowflake, I had the 155, 160 puts on Iron Condor. I had the 200 205 on the call side, that Iron Condor. And I rolled out the call side because Snowflake did manage to get up towards 200. It is fading off the highs. So that trade's working out. Okay, we're right at 255 cents. I have next week's 200s, 205s. So if we open up next week and this is higher, I'll just roll those up and out or just take the trade off. The put side worked out very well. Supermicro, that had an off day or two. Supermicro, I'm going to hold on to this one. Into NVIDIA earnings, looking for a pop. You could sell an Iron Condor in this one, actually. The Bollinger Bands are really wide. Let me take a look at that, actually. With 24 minutes to go, Supermicro. Let me see what that looks like. Supermicro. Let me see what the implied ball is like. Supermicro. Supermicro. SMCI. The idea here is the Bollinger Bands are fairly wide, so although it is pulled back a little bit, selling an Iron Condor, looking for this to pull back in. Supermicro. The possibility that it's going to pull back. Cheap volatility. All right, so much for that. I'll pass on Supermicro. Oh, what else is going on? Let's see. Supermicro, Riot. That didn't do anything. Riot. Let me take a look at Riot. 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 Okay, that pulled back a bit. Riot. I'm going to go ahead and take that off. It didn't work. Closing. Sell. Riot. Okay, I'm selling Riot. I'm just going to take it off. It's not working, so I'll free up that cash. Okay. Not going to wait for a stop. It's not working. So, okay. All right.
Some more breaking news out of Washington this hour. Eamon Javers has that for us. Eamon.
Scott, the president posting on Truth Social just a short time ago that the Nippon Steel deal with U.S. Steel will go through. Here's how the president put it. You see it's moving the stock there rather significantly. An initial spike down and now a big leg up as the market realizes this is what the companies wanted. The president saying after much consideration and negotiation, U.S. Steel will remain in America and keep its headquarters in the great city of Pittsburgh. This will be a planned partnership between United States
Big move on U.S. Steel.
which will create at least 70,000 jobs and add $14 billion.
Let's see what that looks like. U.S. Steel.
That investment will occur in the next 14 months. The president also saying here, I will see you at U.S. Steel in Pittsburgh on Friday, May 30th for a big rally. Congratulations to all. So the president positioning this as an important win because U.S. Steel stays in the country. I've asked the president about this in the past, and what he is concerned about here is both the jobs and the symbolism of that U.S. Steel name. Now, we don't see here any sort of definitive thing in writing which says that the U.S. Steel brand will remain, but that was important to the president as an iconic American brand. He wanted to see that stay in the United States and stay a visible piece of the American economy. Looks like he's getting largely what he wants here and has agreed to let this deal go through.
Yeah, 17% for letter X. Eamon, thanks. Eamon Javers outside the White House once again for us. Stocks are pacing for their worst week since April as the backup in yields and more trade tensions weigh on the major averages this week. Our next guest says the technicals at least are bullish. Let's bring in 314 Research co-founder Warren Pies. Good to see you here. Welcome.
Yeah, thanks for having me.
So we're fundamentally, I think we have some questions, but technically we look all right.
Yeah, I mean, that's how we see it right now. When this whole tariff drama started, what we told our clients is basically you're not going to navigate this situation by psychoanalyzing Donald Trump. So, our view has been you're going to navigate this with technicals, what the price is telling you, and the message of the markets. And the message of the markets is overwhelmingly bullish right now.
Why so?
Well, number one, the sentiment backdrop is institutions don't believe in this rally right now. So if you look
Okay, I'm thinking about an Iron Condor on
systematic investors, they
U.S. Steel as the implied vol comes back in. 35.
Technically, we've seen a lot of participation on this upside. Basically a combination of breadth thrust, which is a technical term for a lot of stocks are going up at the same time, that we've really never seen and not had outstanding returns in the next
35, 30.
Because it's funny, what you're telling me anecdotally matches completely with what Adam Parker has told us in the last couple
High
of days.
tick alert plus 800.
Holding these dinners with
High tick alert. Okay, we're moving in the opposite direction now.
what you're suggesting is at some point that money's going to flood into the market and take us higher.
Yeah, I mean, and you can model
Microsoft turning back up.
You know, like at our firm, our clients are institutional, and there's a lot of skepticism around the rally for sure. That's what I hear anecdotally. So I hear what Adam's hearing. But when we look at things like vol targets, those are vol targeted funds is a very common way to manage risk, where they look at trailing vol and it caused them to de-risk during the sell-off in April. And now, when you just calculate that out, they're going to have to add a lot of equity back. So yeah, I think they're going to get forced back into this market.
What about rates? Do rates keep people out? Yeah. I mean, things can change, obviously.
Rates are that's the bear case, really, right? But I don't think that the fears in the bond market are overblown. And my honest opinion is that if you're going to fading fears in the bond market that are kind of existential, like we're going to lose the dollar's reserve currency and things like that, those are the kinds of fears that crop up at good buying opportunities. And so my view is that rates are basically stuck between two big forces: disinflationary cyclical forces. You have oil that's weak. Housing is kind of weak right here, no inflation from there, and the labor market is softening. So that's disinflationary. I think the fiscal side is concerning, but I see rates being between 4.3, 4.6.
Oil had started to go back up, right? I mean, after it looked like it was going to steadily continue to go down, it actually had rebounded when we sort of figured out that, you know what, maybe the economy and the consumer is a little bit better and sturdier than we thought again.
Yeah, I mean, oil's trying to rally, but the problem we've seen, and this is my background, is crude oil.
Because we're above 61. I mean, it looked like we were heading, could be below 50.
Yeah, I mean, hopefully you can hold at 60, 61, but the problem, in my view, is that OPEC is adding so much supply back. So you're getting a double whammy. You got demand, and China has refused to fiscally stimulate their economy, even despite this tariff war. And so demand's kind of weak globally, even though the U.S. is okay. And then supply.
All right. Little bounce.
So, you know, to me, I think oil still has.
Watch those energy stocks. Looking for those to be higher next week. Oklo. Oklo, very nice. Oklo. I chose to buy some Oklo with the profits from the options that I had. That looks like it's going to turn out to be a good play. Oklo.
And so when, you know, there's really this negative correlation is kind of broken down.
All right, we'll see you soon. Thanks for coming by. Thanks for that's Warren Pies joining us right here at Post 9. Up next, we check the biggest movers into this Friday close. Christina Partsinevelos is standing by with that. Hi, Christina.
Hi, Scott. Well, we have a big late session mover lower, and those are shares of Salesforce. We'll tell you what's driving the lower, plus a tax software maker riding high as the S&P 500's best performer. Well, we also have a major government contractor plunging on budget cuts and mass layoffs. All of those movers and details right after this short break.
Oklo. Nice rally today in Oklo. Pushing back up to the highs with 16 minutes to go. 16 minutes to go. Looks good. All right, Oklo. Oklo doing well. Oklo doing really well. Right at 40. Okay. All right. So coming into the close, we got all these energy stocks are very strong into the close. All these energy stocks are looking good. Wow. What a day. see, CCJ, Aqua. Chris, just check the post. I just posted response to your question. Yes. Yes. All right, Aklo, all of these energy stocks are looking super.
All right, we're about 15 from the bell. Let's get back to Christina now for the stock she's watching. Tell us what you see.
Well, we actually have some breaking headlines on Salesforce right now. Bloomberg reporting the cloud-based software firm is in talks to acquire a software company, Informatica, after talks fell through just last year. You can see Informatica's shares are up almost 20%, 18%, while Salesforce down 3.5%. Look for possible details in next Wednesday's earnings report from Salesforce. Switching to Intuit now, the best performing stock in the S&P 500, when the maker of TurboTax and QuickBooks software actually beat profit, beat sales, guidance estimates during its key income tax filing period. Bank of America says Intuit is separating itself from other software stocks after beating earnings and raising guidance for 2 straight quarters. Last but not least, Booz Allen Hamilton shares plunging today, down over 16% after the consulting firm issued weak fiscal 2026 guidance and announced layoffs due to federal cost cutting. The CEO said on the earnings call that the Trump administration's budget cuts are really hitting civilian agency contracts, forcing the company to, quote, restructure and reset its civil business with layoffs to match reduced demand. Scott.
All right, Christina. Thanks, Christina Portanello. Still ahead, nuclear stocks soaring today. Thanks to some big news out of Washington. There's been a lot of news out of D.C. today. I'll tell you more what's driving that bounce coming up.
All right. Markets, these energy stocks looking really good. Here goes Aklo dropping off here. Aklo. All right, some profit taking. There's some limit orders going off. Aklo, UEC, CCJ at the highs of the day. CCJ. Looking for a follow through next week. It's been a good week, with the exception of Wednesday. All right. UEC having a good day. All right. With just a few minutes left to go, we got 10 minutes left to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, the 23rd, long weekend. off on Monday. So if you log in on Monday and I'm not here, you know why. UEC, Microsoft. Okay, trailing off Microsoft. All right, so that never did follow through, Microsoft. We had earlier pops in Microsoft and Nvidia and Meta. Those all traded. Those did very well. I like those end of week trades where you get you know, an hour's worth of price action where you can ride a scalp. I love those Fridays where you can get that. Anyway, I got low tick alert, so we're trailing off some more. Okay. I have the 580, 575 put vertical for next week. It's a hedge. All right. Coming into the closing bell. Got 8 minutes to go. 8 minutes to go. As usual, the weekend video, which is usually out on Sunday will be out on Monday. So I'm going to take a day off and just do nothing, just chill out.
In this market, it might kind of be buried under the surface, but once you get some type of a tweet or something that can move things, it can move very quickly. I'm really impressed with the way that the dip buyers kind of stepped in and pushed it back up. We're vacillating around down 30 points or something like that in the S&P, but could have been a heck of a lot worse.
It certainly could have. I mean, just in the opening minutes this morning, we did see that dip push the S&P down to its 200-day moving average. We've recovered some since then. But what are your takeaways from the headlines that we saw today? Because that's what all this action was tied to.
Yeah, I would say one of the things that I've really been paying attention to was just the reaction from the bond market. I know you guys been talking about that all day, but think about how bonds initially reacted in the beginning of April when the tariff announcements were laid out. So it wasn't only the equities that were selling off, bonds were selling off as well too. Inflation targets shot up, and people were just trying to kind of reorganize their thoughts and maybe start planning ahead as to what could this mean for the economy and in terms of what does that mean for price appreciation. But what we're looking at now, and I think there's been a shift. I think the shift is now tariffs aren't necessarily looked at as inflationary. I mean, of course they are, but they're actually more looked at as potential for slowing down the global economy. And I think that's why you saw bonds pull back a little bit, or bond yields, pull back a little bit today, and bonds rally. It wasn't a big move, but boy, we could have been set up for a pretty decent move in yields this morning, and the bonds held up. So I took that as a sign that the market is now digesting that information, not necessarily as inflationary, but more in terms of what could that mean for slower economic global growth, and how do you kind of price that in. So I think that we've seen that turn a little bit. I think that's an important thing to take away.
And as we talk about the yields, we saw U.S. Secretary of Treasury Scott Bessent step in earlier today.
Okay, we've got 5 minutes left to go. 5 minutes.
Supplementary leverage ratio for banks over the summer. What do you think that will do to yields?
Well, I mean, his hope, or at least what he predicted, is that it could be potential for 10 basis points, even more, right? I mean, and if that's the case, and markets can kind of grab onto that, I think that can steady some of the bond volatility. Remember, right now it seems like bond volatility is kind of leading the way. We've seen it slow down a little bit, but at the same time, equity markets are keying in on what the bond market is doing. And if you can see that the move index, or whatever you're looking at for the bond volatility, if you see that kind of steady, you can see market.
Okay, we continue to fall off here.
You can basically tie the the turnaround that we saw to those comments kind of was a steadying force, and it helped to get the dip buyers back into the market.
Okay, we got 4 minutes to go. Make sure you check in your expiring options if you have anything expiring in the money.
Do you think that this will calm once we get through the holiday weekend, or do you think that we'll continue to see
Okay.
more of this sell-off? Is there any conviction?
UEC is hanging out at the highs.
You tell me what tweets come out over the weekend, and I'll tell you.
Fair enough. If we can get an advance look.
I think that's fair.
Yuck. Yuck. All right, we've got 4 minutes to go. Just going to check what options I have. Anything closing in the money?
We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli is here to break down these crucial moments of the trading day. Plus Courtney Reagan.
High tickle plus 800.
Okay, high tech. Okay, they're going to turn this back in the opposite direction. Great.
Retail, we got retail today, and we look ahead to next week too.
No rest for the weary, right? I mean, it's been a week for retail, and we've got more to come next week. Stocks are always focused on guidance more than the quarter that we just
The put side of the snowflake will expire here shortly. Put side of the iron condor I took. What was it, Thursday? Or was it Wednesday? Wednesday. That'll be 100%. Nice profit.
shedding more than 20% after it posted weak Hoka and DTC sales, even though those were expected. No annual guidance given, and the current quarter guidance that was given was below estimates. American Eagle shares, those are selling off this week, and that's ahead of its report that hasn't come until next week. Look at that steady flow low.
All right.
More than 13% in a week.
Hopefully I don't have anything expiring in the money. Got 2 minutes to go. GE, Palantir, Vertex.
Yeah, that's the point. Big week ahead. You'll be busy. Court, thank you. That's Courtney Reagan. Pippa Stevens, talk to me about nuclear today.
VRTX. What's going on with Vertex? VRTX. Bounce.
URA and URNM, which track the space, both adding more than 11%. Mining stocks, including Cameco, Denison, and NextGen, all jumping double digits. There's also reactor developers like Oklo and NuScale, as well as fuel suppliers like Centrus. Finally, independent power producers Vistra and Constellation, which own nuclear generation, also in the green. Now, there's no question the federal support is beneficial for the industry, but Segre Capital's Arthur Hyde did also note that short interest was at all-time highs for some of those mining stocks.
All right, it's been a pretty decent week. Been a decent week.
2 minutes ago, you just saw the animation, which means Mike Santoli's coming
Okay,
in.
less than a minute to go. DoorDash.
Context of a market that needed to back off probably and cool, let some of the heat dissipate. It makes
CCJ, DK, DG. All right, folks, that's going to do it for me. I got a hard stop again. I got to go do a few things. Have a great evening. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. Rolling the hedges into next week. S&P spiders. I have the 580, 575. Put vertical as a hedge. Debit spread. And that's a wrap. Have a good one, everyone. Thanks for all the shares. Appreciate it. Okay, I'm out here. Take care. Ciao.